Welcome back. It's a bright morning, and it's going to be a bright morning when markets open as well. GIFT Nifty is indicating a big open, 800 points higher, and the strength in the rupee, and it'll show up everywhere, absolutely everywhere. The lack of this deal was perhaps it's hit sentiment, and Rhythm Desai, for example, yesterday was saying that there's this big gap between where macros are and where asset performance has been. It's the widest he's seen in his career. One of the reasons for that big divergence between strong macros and performance was the lack of a deal. A year later, and people pointed that occasionally. That has changed last night. Shireen is now joining us. Shireen Bhan, managing editor, CNBC TV 18. Shireen, good morning. We were on last night. It's still AM and morning, and we got the deal, and markets will rejoice.
I don't know whether we should say good night or good morning anymore, but what a night it's been. But at the end of the day, I think what is important is that the stalemate has been broken. This has been a stalemate that's been on now for about 9 months, and we've now finally seen a breakthrough on that front. Of course, the nitty-gritties, the finer print will still have to be examined. We still need to know what concessions have been agreed to and so on and so forth. But I think that the headline is that, this partnership, this relationship, where there were concerns on whether this was going to be an irreparable loss for the India trip, that has been at least mended for now. So I think that in itself is good news. But besides that, Prashant, I think, from a market as well as an investor standpoint, this was the big overhang. So I think, they will take this with both hands. The fact that there is now a deal on the table, how that deal works out, what the contours will be is another story altogether, which individual sectors will have to look at carefully. And I also want to highlight what the Commerce Secretary told us yesterday. He said, whatever happens is going to be an early harvest deal. And that's what, if you remember, Anup Madhavan, the former Commerce Secretary, was also explaining to Parikshit, you and me last night at 1 a.m., that this is not the big omnibus deal that was being spoken of. This will be an early harvest deal, which will have select goods in the mix. So that's, again, something to watch out for. Now, the next steps, how quickly is this operationalized? Will we see those executive orders being passed today or over the next few days? That's the question. In fact, it would be good to use the U.S. Ambassador Sergio Gore's soundbite, because he kind of explained what happens here on Network 18. So it would be important to play that out. But it's also crucial to understand that, President Trump is claiming unequivocally that India has given an assurance that it will not buy Russian crude. Now, while our Russian crude imports had declined, they were not zero. So we will have to see what the government says. And, Parliament is in session, so I would imagine that this is now going to be a matter that will be brought up in Parliament, and we will have to see what the government says on that front. He's, of course, also made big claims of purchasing of U.S. energy, Venezuelan crude, and so on and so forth. So all of those details, Prashant, will also have to be looked at. Yeah.
Shireen, there is that the oil bid, right? And Prime Minister Modi's the tweet is, of course, silent on that. And the other one, which President Trump has unilaterally claimed, is that India will likewise move forward to reduce their tariff and non-tariff barriers against the U.S. to zero, right? Now, again, details of that will come through, I guess, later. And those are important details. It's the headline tariff will matter, but I think this also will be very important to track.
Those will be important details. But again, and I go back to the conversation that we had with Nisha Biswal last night, where she was also alluding, and as Parikshit has also been reporting, that as part of the negotiations, there were tariff items where India has apparently agreed to zero tariffs, but we will have to wait to see what those are. In all of the messaging last night from the Indian side, whether it was the Prime Minister or the Commerce Minister, etc., we haven't seen any further details emerge on what has been committed to, what has been agreed upon. So we will just have to wait for that, for the fine print to emerge. But yes, those will be crucial aspects to consider. But Nisha Biswal did say that in her understanding, as part of the negotiations, there was assurances on some product lines.
Yeah. Shireen, thank you very much, and see you in office soon. Thank you for running us through all of that.
Nigel and Rima.
Sorry, missed that, Shireen. What was that?
I said good luck with the markets.
Thank you very much, Shireen, for that. So that's some perspective and nuance with regards to what's come through, apart from, of course, the headline number as well. Let's play out sound bites of Madhu Kela, and Madhu was, of course, gracious enough to join us late at night. 11:30, 11:45 is when he came on, and sort of stayed with us and walked us through market implications and what he really expects to see. So just want to play out a portion of this. Listen in.
There will be not only short squeeze, but I would argue that a lot of foreign investors who have been kind of sell India mode for some time, there could be a lot of foreign buying also will come in the Indian market. So on one end, you have domestics which will continue to buy. On the other end, short squeeze plus some real long buying from foreign investors. So it's a perfect setting for the markets to go much higher. You have the European Union deal, you have the US deal, and now the tariff being reduced to 18%. I think this is a perfect setting for the market. It will show up on companies which have been kind of impacted, as you rightly said, some of the names. But my personal view, Prashant, is that it will show up in a lot of small cap and mid cap names. The one notable change in the budget was the buyback, right? And we have seen a lot of small cap names have been completely sold off in the last 12, 18 months. So this sentiment, coupled with the potential of companies to buy back, wherein they don't have to pay any tax. The tax is on individuals now. So I would reckon that lots of companies will end up doing buyback whenever the valuations have become really attractive. The whole basket of financial, because that is where you can deploy large amount of money. And Prashant, the valuation otherwise in consumer companies because of growth, and technology companies because of this impending issue of AI. I think, the financials become kind of obvious choice. And commodity stocks anyway have done really well over the last 1 or 2 years. So I don't see them participating as much as the financial stocks.
Okay, let's slip into a break on that note. On the other side, we'll continue our discussion on the India-US trade deal. We'll also connect with Pallab Banerjee of Pearl Global Industries and R.K. Vij of the Textile Association.
Welcome back to this special coverage. The big news coming overnight is that India and the United States have finally come up with a deal and the tariffs reduced from around 50% to around 18%. The sector that's going to be potentially the biggest beneficiary is the one that got hit, textiles. Vinny joins us to run us through which are the stocks that will gain the most. Morning, Vinny. An early morning, but a bright one for you.
Absolutely bright one for me as well as for the sector. But obviously, what we'll see is that, textile sector saw a sharp impact coming in terms of the margins, especially because they were at 50% rate of tariff for these last 6-7 months. And because of that, even Q3 numbers that highlighted the impact of tariff. Now, obviously, 18% tariff that comes in as a relief because now it's competitive with other countries, whether you look at Pakistan, Bangladesh, Vietnam, China. We're slightly better than that in terms of this 18% tariff rate. Then what are the exposure that one has? Gokuldas exports 70% exposure, so sharp impact that they saw in terms of margins. Even when we spoke to them during the Q3 numbers, they highlighted that their main impact was because of the US tariff on the margins. Welspun Living 65% is the exposure to US markets. Indocount Industries again 70%. Pearl Global 50% approximately is the exposure to the US market. KPR Mill, Alwyn Limited, all of them do have 20+% exposure as well. So it becomes a positive for all these companies. And obviously, though the companies are highlighted that US order book was strong, but now this furthermore, improves even the relation with the clients. As of now, the client as well as the companies were taking the impact on the margins. Now with this 18% tariff, that's a relief that comes in for them. And improvement in terms of order book obviously is a possibility from the US market for all these companies as well.
Thank you very much for that. Let's invite Pala Banerjee, Managing Director, Group President at Pearl Global Industries, and R.K. Vij, President Emeritus of the Textile Association, on the show. Gentlemen, thank you very much for joining us early this Tuesday morning. It's a big day, historic day. Tariffs have been cut from 50 to 18%, lifting a major overhang, not just for the market, but particularly for your sector. Pala, let me begin with you. You have previously stated that the 50% tariff made the Indian operational model unsustainable for the US clients, forcing you to either offer 15% discounts to the US clients or move your production to other facilities, say in Bangladesh. What changes for you now with tariffs coming in at 18%?
Good morning. Yes, definitely it's a very good news for the sector and for all of us. Definitely we don't need to move these programs or these orders to the other countries at this point of time. And the bottom line, definitely that's advantageous. For a company like Pearl Global, where we had other opportunities at the other countries, we have been, downplaying the India portion of the business because US business was not sustainable in India. With this news that has come in the last night, definitely we look forward to the growth of the top line and bottom line in India as well.
So particularly on the bottom line, will you pass on the savings to your customers or will it flow into your EBITDA margins in Q4 FY27? What could margins look like for Pearl Global?
Okay, we are supposed to come out with the results, I think, this week itself.
But just broadly.
Yeah, see, definitely the bottom line, this is a kind of advantage that we are giving to the customer just to maintain the business in India. So our customers give us the choice. Either you make this production from the other countries and, which is more of the same balance. Everybody within the 19-20 of tariff. Now, to compensate that out of India, we were giving this 50% discount. So that, I think, goes away. So I don't think it's like passing off. It was not a sustainable thing to pass off to any customer. So I think this will definitely come to the bottom line.
Hi, good morning, gentlemen. Good to see you all in. Palab, I believe you booked you booked a party for all your colleagues this evening, or is it too early to party? Palab, just a quick, refresher. Out of your total production, how much is in India? If I remember correctly, I think it was 25 to 30%. You could refresh that number. And the exposure to the United States was more than 50%, which was gradually coming down. So what's the update on both those two numbers?
So yes, India, last year we saw about 25% of our total top line was coming out of India. This year, because of this last 6-7 months, there was a little bit of switch. I think that 25 number would come down to a little less, I think 4-5%, 3-4%. We can see that, how it moves. And the second part of your question is, sorry, I missed that.
US exposure. US exposure.
US exposure was about just below 50%. I think that's something we have taken a lot of action so that, the overall our exposure to all the markets. You see, the biggest markets are European Union, US, followed by UK, Japan, and Australia. These are the five big markets, which almost, if you see, about $250 billion of export or import that these countries do. Now, as a good company, like we would like to balance it out accordingly. So I think that what we had a huge exposure in India, I think for 3-4 years back, to US 3-4 years back, that is now getting more balanced. So I think that's a strategic decision that we will continue to implement.
Good news for now. Let's get in Mr. R.K. Vij as well, President Emeritus, the Textile Association, who joins in. Hi, Mr. Vij. Good morning, and thanks a lot for speaking to us here on CNBC TV 18. Well, when we've been speaking to textile companies over the last few months, after the tariffs went to around 50%, some were even okay at around 25-30%. They said, let's get it down at least from this 50%. And at 18% looks like a brilliant deal. What are you making of it? And how pleased are you?
Ram Ramji, I think we are very thankful to our Honorable Prime Minister Modi ji and Trump ji. And my interview in CNBC about 4 months before, when the tariff was put on 50%, I told that, of course, the tariff has been put, but I think it will come down after 2-3 months. The time has come, of course, 1 month delayed, because USA for India, USA is a big market because traditionally we were supplying to USA. As on today, the total USA market is around $288 billion. And out of that, $130 billion they are importing. Only apparel, if you think that $80 billion market is there, now the tariff has come down 18% over units at Tirupur, Panipat, Faridabad, Ludhiana, Surat. They will be very happy. At least in the winter season, both of the leader has given us the warm welcome, and we are very, very much happy. And of course, we are one way with this 4-month tariff over FTA with the EU also has been done, as said by the MD of Pearl, that EU is also a big market, but because we were long back supplying to USA, as on today, USA, the total market of government of USA is 84 billion, clothing and fabric is 65 billion, household home textile is 23 billion, technical textile is 58 billion, other is 58 billion, 288 billion is a very big market for us. So for us, for USA, India was needed. For India, USA was needed. So it is a very good day is today, and all textile, Indian textile will be very happy, so that the over 20-30% capacity which were not working and we were looking after for other countries, we will started working there. And I once again thank Trump ji and Modi ji that they have taken a decision. आखिर में दोस्ती ही होती है. Friendship is a friendship. So our textile industry is very much happy.
Yeah, no, absolutely. Mr. Vij, just those numbers, right, across categories, product categories, what I'll do is I'll ask our team to get in touch with you, and just those numbers will be important in terms of the individual segments that you spoke about. We thank you for joining us, and as markets open and they start to react to all of this, we'll get you back on. Pallab, it's always a pleasure. Thank you for your insights and appreciate your time here on the channel. Let's put up Gift Nifty. Gift Nifty was indicating an 800-point higher start. It's 1,300 points now. So it's building up, and 1,100 points now. So 26,255. When I think that's markets, right? I mean, when they're despondent, there is no bottom in sight, and when they're excited on the upside, I mean, anything can happen, and big things can happen. And this is one of the last time. Maybe we should look at the 1,000-point jumps and 1,000-point higher starts. And the last time, I think you had to go back a while to get a 1,000-point kind of a jump. So we'll try and do that and pick out the data as well. Our research team is joining us, and we'll sort of, get you lots of perspective on sectors most affected, etc. Vinny was telling us about textiles, but autos is another area. Rima?
Yeah, so just want to run through the exposure of some of these auto and auto ancillary companies to the US market. So Tata Motors could be a big beneficiary because JLR is highly exposed to the US market. 33% of JLR volumes come from the US, and JLR accounts for 86% of Tata Motors' passenger vehicles consolidated revenues as of last year. For Samvardhan Motherson, the overall exposure stands between 18 to 20% to North America. For Sona BLW, US forms more than 40% of the total revenue. Bharat Forge also a similar exposure of 38% to the North American market. Bharat Forge supplies forging and parts to North America. So the tariff reduction lowers the export cost burden and improves the export viability. In other auto ancillaries, Balkrishna deserves mention. 17% revenue comes from the US. For Eicher Motors, it's a very small exposure. 2% of the volumes, Royal Enfield volumes, come from the US. But I think the big ones are going to be Tata Motors, where JLR accounts for 86% of the overall consolidated revenues. And then you also have a Bharat Forge and Sona BLW with nearly 40%, 38-40% revenues from North American markets.
Got that, Rima. Thanks a lot for that. Well, let's get in Sonal, who joins in this morning to tell us about the impact on the oil and gas space. And the other big beneficiary could be the chemical space. Morning, Sonal, bright and early.
Good morning, Nigel. In the chemical space, there are a lot of companies which have exposure to the US market. Naming some of them, the likes of SRF, there's Naveen Fluorine, Accutas Chemicals, Neogen Chemicals, Aarti Industries, Vinity Organics as well. And they had highlighted how US tariffs were impacting their business. In fact, in the conversation we had with SRF, which is one of the biggest players in the chemical space, they indicated that tariffs created a lot of uncertainty in the system. They hit them really badly. And for the last 3 months, exports of the US have been impacted. So this looks like a relief that could come by for the chemicals industry overall. Neogen Chemicals had indicated some battery chemicals have been left out of the scope of tariffs from US. So again, the fine print of this particular deal is very important to understand what is kept out of the deal and what is still there in that 18% mark. Oil and gas, of course, that's the biggest reason why we saw these tariffs come by, the penalty tariffs as well. Trump in his post indicated that India will not buy Russian crude oil and will buy from the US and possibly Venezuela as well. And remember, Russian imports have been largely nil since November, especially from the sanctioned entities. But the conversations with these oil marketing companies indicated that yes, they're not buying from the sanctioned entities. Any other purchase from Russia is totally an economic decision from the non-sanctioned entities. HPCL had earlier told us they evaluate up to 100 plus crude varieties over every year. There is enough crude available. They also started buying from the US. So they had been changing their product mix. In terms of Venezuela, remember Reliance has in the past purchased 20% of their daily crude requirement from Venezuela. And now they tie up, it could benefit them by $5 to $8 per barrel in terms of discount, which will aid their GRMs. ONGC is also awaiting the dividend. So maybe things could move faster. And if Venezuelan imports come in, it could be positive for the oil and gas industry.
Yeah, absolutely. Sonal, thank you very much. That's very helpful. And, what we'll do is we'll also look at individual stocks, right, in each of these segments. And our team is working towards that. And we'll put out all of that. There is, of course, that headline euphoria and large caps, etc. But there's going to be material changes for individual businesses depending on what they were selling into the US exposure, etc., etc. So very useful. We'll take a quick commercial break here. We'll come back and we have Conrad Saldana joining in with some fun perspective and how this changes sentiment from here on. Stay tuned. Okay, welcome back. I think GIFT Nifty is indicating a 1100, 1200 point higher start. Look at that, 4% now. It's building up momentum. And 26,200 is where we're at. Conrad Saldana is with us. Conrad, good morning. Great to have you with us here. I guess we can, as an investor, I can congratulate you and you can congratulate us because it's a happy occasion. And it's been a long time in the coming, right? Finally, it's come. Rate is good, 18%, very competitive compared to some of the other ASEAN countries, exporting countries. So what do you make of it? And let's just dive down into the market straight up, because I guess people want to know, right? Where will this show up in the biggest way? So the big beaten down, the Gokuldas and the Pearl Global and the textile apparel companies, they say, yes, I mean, it'll show up big time. It'll show up. They perhaps all open up circuit today. But where else beyond that first order?
I know, Prashant, thanks for having me on. I know there's been tons of tariff vacillation, right? And this comes as a relief. Still, there's a lot more bilateral trade agreement negotiations that need to happen. There are a few items that's on Section 232. Yes, you see, the pop with a lot of the export-driven sectors, but broader to make a meaningful impact broadly for investors. Foreign portfolio flows to come in, that to also drive FDI and also CapEx, right? Domestic CapEx on the private sector side versus just government spending. I think you need to see that for a more sustained recovery, but also for earnings to meaningfully inflect apart from a pop in the 2 or 3 big sectors that are exposed. So I think you need to see it more broadened out. Yes, you are going to get a relief rally from this, given how dire it was for certain sectors. The export sectors, gems, jewelry, some of these got impacted down 30, 40% in terms of actual top line impact. So it's massive. There will be a relief, but I'd love to see this more broadly impact India, Inc., and start to bring back foreign investors in a more meaningful way from a portfolio standpoint.
That 232, Conrad, right? Section 232, what you're saying, right? So it's autos, aluminum, timber, copper, trucks and shipping. I mean, that looks like, and that's the national security section, right? So that doesn't go away.
Yeah, the Act of 1962. That's steel is also on that list, but that's about 10-odd% of that trade. But still is, it does matter. So and there'll be still the bilateral trade agreements that have to happen individually on this, because there were the tariff as well as the non-tariff barriers that the US had highlighted. So there's a little bit of work to be done, but a huge step in the right direction.
And what about on oil? Because when we were purchasing Russian oil, we were getting it at a discount. Now we'll have to purchase the US and Venezuelan oil, $500 billion worth of that. Overall, in terms of agriculture, energy, etc., is the committed amount. What does that mean for India? Are we, in a way, sacrificing our energy autonomy? There is the logistics of moving to different types of crude oil. What is your view on that?
I think it's early to say, but no pun intended, but that's a crude deal. We'll see how this pans out. But listen, the refiners in India are used to processing heavier crude. And so, Jamnagar comes to mind, right? That will process the crude. Yes, there was that arbitrage, if you will, and the discount with Russian crude. Potentially that comes through from Venezuela. There'll be a bit of that being processed in the Gulf states in the US, but there's an opportunity also for India. So it's a commodity. I think India is reasonably well placed to deal with that. And I think the earlier days of the arbitrage from Russian crude that showed up in your gross refining margins, those days are gone. So I think getting access to that crude is fine, and I'm sure the refiners will figure it out.
All right. Hi, Conrad. Always good to see you, and thanks a lot for joining in. Tell us, a couple of big beneficiaries will be from the chemicals pack as well as the textiles. Do you have exposure out there, and will you be giving it a relook right now?
Nigel, not a big exposure for us. We just look longer term. They are good businesses, and I know with the Gokuldas, that's done well. A few names you mentioned, well spun. They're well positioned. We tend to be much more on the domestic side of India. I know there's a lot of excitement about China +1 from a manufacturing standpoint, but ideally, India is a growth engine, right? When I think of the US growing now, if you ignore even the fourth quarter growth, at 5%, even it's 4.5%. That's super strong growth. You're seeing Japan starting to inflect. And I think India is another big growth engine of the world that I think we need to see pick up again.
Okay.
And that's why we look much more for the domestic side of the Indian market.
Right.
We will evaluate a couple of the exporters occasionally, but at the other side of this, you have the tech side, which is an exporter, right? You've got 70 to 90% of their business comes from the US or US dollar denominated, but obviously the rupee is heading the other direction, which isn't entirely helpful for them either.
All right, Conrad, since you said you're quite excited about a couple of other themes, could you name a couple of them? The domestic story, maybe data centers as well. I think we've spoken briefly about it in the past. If you could name a couple of stocks.
Yeah, we like defense, so we've been exposed to Bharat Electronics, much more on software, on the engineering side of it, rather than heavy asset with HAL. Data Patterns is a name we've been exposed to for a while again. So these are good businesses that we're exposed to. On the data centers, it's still early days. NetWeb is a name we've owned for a long period of time. I think there's some real estate proxies to it, but it tends to be asset heavy and not as much of tech. It's much more infrastructure plays in that regard. Still early days to that, but there's not a whole bunch of opportunities that you can get to play on data centers in India. You don't have as much of the IDC or independent data centers like you have in China, leave alone the whole hyperscalers that you have out of the US.
Yeah. Conrad, lovely. Thank you very much for joining us. And, as you were saying, right, there is this 232, etc., and perhaps autos and steel and a bunch of other things are out of this 18% number. So there's no relief. Apparently, it's a question market. We're trying to confirm it. So you may want to stay on. And I just want to bring in my colleague Parishit, and a lot of the clarity will emerge from there. Parishit, tell us, what are you picking up from your sources?
Well, now is the stage when the Indian side will be seeking documentation from the US, and India will also share documentation on reduction of tariffs. So that will make it clear as to what are the tariff lines it applies to. This will literally apply to all the goods that are traded between India and the US. Some items may be down to 0, some may be at 18% or 13%. So we're looking at 18% as an average tariff between both sides. Having said that, what about Section 232 tariffs on grounds of national security on automobiles, steel, aluminum, timber? Now, this was to protect the U.S. industry. Now, this was a horizontal tariff which applied to all jurisdictions, all nations. This was not specific to India. So possibly it could stay, but we are waiting to see if there is going to be an exception for India. There will be clarity on it very soon. The Indian side will be seeking clarity from Washington, D.C. And when both sides share official documentation with each other to notify these changes, there will be clarity on what happens on the Section 232 tariffs as well. And we're expecting this to happen very soon. Usually this can take a couple of months, but our sources in the government say that because this is such a momentous occasion and very important for our industry, they will try to get it done at the earliest. Marco Rubio is set to meet Subramanian Jaishankar, our external affairs minister, in the next 24 to 48 hours. There will be a meeting with Scott Bessent as well. So we're expecting more clarity, more legalities on this to be done soon.
Yeah, absolutely. Parishit, thank you very much for that. And we'll keep coming back to you for that clarity as you get it. And markets are waiting for all of it very, very keenly. We'll also connect with Sunil Sagani of Abacus Asset Managers, Harish Krishnan of Aditya Birla Sun Life Asset Management on the other side. It's ticking past 8 o'clock now, 8:05. We're back with all of that in just a bit.
But
Welcome back. We've termed it as a terrific Tuesday. It's going to be a blockbuster start to trade. The GIFT 50 suggesting a 4% gap up, and hopefully we end somewhere in that vicinity. Sunil Singhania, founder at Abacus Asset Management, join us on the show. Hi, Sunil. Good morning. Good to see you win. What a moment, right? Out of nowhere, this deal has been announced. Do you think this is the moment that the bulls were waiting for? Time for India to give up the underperformance and maybe outperform the globe?
Good morning after a long, long time, at least for the markets. I agree, Nigel. I think the markets was lacking a catalyst, and this certainly comes as a catalyst. In fact, I jokingly say that people had just stopped even talking about stocks. It was all about gold, silver, and I have never seen, phones not ringing after a budget the way this time it was quiet because, no one was just interested in knowing what to buy. So I think this comes as a very, very pleasant surprise. It helps I would say, the mood, which was the most important. It definitely helps the economy, the corporate profit growth, and hopefully the currency should also respond. So I think all in all, the positioning is light. FIs have been short, has been seen by the futures, open interest. Position on the domestic side, at least on the speculative side, is low. And expectations after the budget fall were also very, very low. So this definitely comes as a big, big catalyst.
If you are deploying money, Sunil, good morning, and as they say, right, Derai Durustai. So where will you focus your energies on? There may be relief. A 4% gap up will show everywhere. There'll be relief across sectors. But where will kind of you focus on if you had fresh money? I mean, I think most people are already invested, but fresh allocations, where will you focus on?
So I don't think sector-wise anything dramatically changes. Obviously, there are some smaller sectors like textiles and, which are direct beneficiaries, but those are small sectors in an overall market cap perspective. I think the first thing which will happen is obviously, there will be a Nifty trade because if you have to put in big money, it's only going to be in the larger companies. The smaller companies might end up 5-10% higher without volume. So it is futile to start looking at some smaller companies, at least today. So I think the first trade is obviously going to be large liquid Nifty names. But one good thing, Prashant, about this is, and I hope this sustains in the form it has been announced, because that is also always a gray point with the President Trump, is that the uncertainty which was holding back purchases of Indian goods by the US will go. So you'll have a double catalyst. The inventory levels at the US buyers' end are very, very low. Everyone was just buying what was absolutely necessary. And this might also trigger some advance, or I would say some inventory buildup also. So maybe the next 1-2 quarters, you might in fact have a big, big boost in terms of exports to the US. So I think some engineering companies should benefit. Textiles, obvious names, but I would say that this whole sentiment really, really helps us. And one thing which we also not have to forget is that now, if this 18% is the way it is, we are at significant discount in terms of tariff to our competing countries. In fact, even lower than Bangladesh, Vietnam, China, of course. And that would also be a catalyst for some of the sectors which traditionally had competition from some of these countries.
You said large liquid names is where Nifty, right? Where it'll show up first. Today, perhaps not the day for smaller, this or that smaller single stocks in that sense. Where IT services, Sunil, there's no direct correlation for IT services. It's a large champion export sector for India. Financials is the other one where there is perhaps headroom and it's always been a favorite for foreigners, etc. So just view on those two.
No, IT services, in fact, they had some benefit out of currency depreciation. I think that should negate to a certain extent. But IT services anyway did not have tariff. So I don't think it's a tariff trade. In fact, there would be a trade where people would want to move out from some of these names which had not fallen to some of them which had fallen a lot. Financial services have been very, very stable. I think it will be neutral for them. There might be some little bit of inch up in terms of credit growth because of sectors which are exposed to exports.
No, Sunil, my question is not the real impact, but the sentiment trade. Where does it show up?
Sentiment trade, if Nifty goes up, obviously, 35-40% is financials. So financials have to participate very clearly.
Okay. Sunil, one final question. You know, when Prashant was chatting with Madhu last night, he was talking about how the change in the buyback rules, which were announced in the budget, could actually be a big catalyst for many of the mid and small caps, which have underperformed greatly. Your view on that? And do you think mid and small caps, today, of course, when money flows in, it goes into the large caps, they will do well. But mid and small caps, if you want to allocate money via SIPs or lump sums into mutual funds, would you look at mid and small cap?
No, we are incrementally very positive on small cap. In fact, we would be coming out with our back a small cap fund also on the mutual fund side very, very soon. On the buyback, I think it's a very big positive. Though, you know, promoters buyback will be taxed at a higher level, but from a non-promoter perspective, I think now it's equivalent to the capital gains tax. So there will be a lot of companies where promoters don't want to participate, where they feel the value of the stock is not reflecting the true fundamentals. Instead of giving dividend, they might resort to buybacks. And I would say that you will start to see announcements very, very soon, because buybacks completed after 1st April are eligible. So the announcements will start, I would say, as soon as this month itself. We definitely expect a significant amount, you know, being sucked out of the market by way of buybacks, and a lot of companies using this as a tool.
Okay, all right, Sunil, always a pleasure hearing you out. Thanks a lot for joining in. The last time around as well we spoke, you were saying that you're optimistic and this market is presenting an opportunity. Good times for the market, and I believe personally as well, there's a wedding in the family. So best wishes to you and the entire family. February is going to be a rock star of a month. Thanks for joining in.
Thanks a lot.
Well, let's welcome Harish Krishnan, CIO Equity at Aditya Birla Sun Life AMC, who joins us. Hi, Harish. We spoke a few days ago, and you were telling us this market is providing an opportunity. You sounded extremely bullish. What do you make of this big landmark deal?
Good morning, Nigel. So, yes, I think it is important to take the enormity of what has happened in the last 18 months or so, because it's been like, you know, if you look at equity markets, it's been on a smooth mode for now almost 18 months, even at the headline Nifty level. Of course, there is a carnage below that. But in these 18 months, what have we really accomplished? We've kind of done a trade deal with almost 70% of the world economic activity. With the remainder, which is primarily China, we've become even more cooperative and collaborative in terms of trade. The second key aspect was a rating upgrade that India got, which would ideally have got a lower cost of capital. Thirdly, when there was pressure on the export channel, the domestic consumption market opened up with respect to the GST and the direct tax cuts. Now, all of these have meant that, you know, Indian corporates, possibly any which case, had very good balance sheets, where we're throwing in a plenty of cash flow. Today, if you were to look at it, if you were a corporate CEO, this would possibly be the moment for you to really, start investing massively as far as, your own company fundamentals and financials go. And therefore, from an enormity of this, I think it is massive. Yes, for sure, from a trading point of view, there is definitely a positioning aspect, and the fact that we've underperformed. I think all of that can potentially reverse very, very quickly, as we'll see possibly by even the end of the day. But let me also frame it in a slightly different way. India's share of world economic activity, which is world GDP, is today close to about 4%. We do think that over the course of the next decade, this is likely to move anywhere between 7 to 8%. And this is just mathematics speaking out, right? India's share of world market cap is today at 3.4%. I do think that, from 3.4, we would be looking at anywhere between 7-8% over the course of the next decade. So that is like a massive, massive amount of potential of wealth to be created in a country like India. The good thing, of course, is that, domestic investors, including us, have been very, very counter-cyclical. Even as foreigners have kept selling out a lot of their equities, we've kind of kept buying in. And as you rightly recalled, we did see a lot of opportunity in terms of lower valuations. And today we will see foreigners turning very, very pro-cyclical and kind of coming back in. So therefore, all in all, I think it's a great morning. But I think it is also a start of something, terrific to come through.
Harish, on FPIs, right? Do you think they will, good morning, do you think they will make up for all that stock sale because they've sold. It's been discretionary decision. They've actually actively diversified away from India. They've sold because of whatever high valuation. This was a sentiment negative and other kind of factors, etc. as well. Do you think they come back in a durable way?
I do think so, that they will come back in a very big way. The only thing that was hurting was the currency trade. I don't think that their appreciation of Indian macro has changed quite dramatically. Their appreciation of Indian companies has changed dramatically. The only issue was valuations, and valuations have also kind of cooled off, especially in the larger 100-odd names. Of course, at the mid and small cap, one can still quibble. Even there has been a reasonable amount of correction and froth letting out. But the bigger issue for them had been the consistent or persistent slide in the currency, and which that I would imagine, it's kind of reversed. And therefore, I do think that is going to come through in a reasonably stable way. The only caveat to this, Prashant, is that, unfortunately for markets, the supply has been relentless. And so I think under 5-7% up, we'll again start seeing a whole spate of issuances, be it IPOs, be it private equity sale, etc. And a lot of these supplies invariably are going to get absorbed by foreigners as well as certain domestic participants. But so therefore, the full impact of that change and stance probably will take some time for the markets to come through.
Okay. All right, Harish. Good speaking to you, Harish. The last 6 months or so, we have spoken numerous times, and you have been telling me, Nigel, it's time for the Nifty to outperform gold. And we spoke on Friday, and later that evening, we knew what happened. So it seems that's going to play out. Harish, thanks a lot for joining in, giving us your view. We look forward to chat up and have a rocking day ahead.
Same to you. Thank you.
Okay, all right. Well, I think what we could do is maybe we could take a short break. We come back. We'll continue our discussion on the India-US trade deal. You stay tuned. Welcome back. So after the mother of all deals, the father of tariffs, he's on board as well. As India and the United States, they have announced the big trade deal overnight. So it's not going to be focused on STT. Today it's going to be only TT. That's Terrific Tuesday. We're bracing ourselves for a solid trading session. And keep in mind with the weekly expiry as well. So that's what will add some spice to the session. Now, if you're looking at the mutual fund industry, well, we've been making this point. They're sitting on ample cash. So ample firepower out there, close to 5% of cash, which is around 1.9 lakh crore odd. Now, the FI seemed to have got a little bit jittery yesterday itself. They covered close to 7,000 short contracts, and they also wrote puts. That's something we haven't seen. So maybe, in fact, a bit of a hint that there's something coming about and things are moving in the direction of a trade deal. On an absolute basis, though, the FIs remain aggressively net short. The clients are net long. And that normally is an ideal situation with both of them at the opposite ends of the spectrum. Let's talk about the Nifty levels to track for today. The Nifty will start above the 200, the 20, and even the 100 EMA, as per what the GIFT Nifty is suggesting. And you'll be bracing for a solid close today. The Nifty Bank, well, that one has defended the 58,000 zone numerous times just in the last 10 trading sessions. And today, potentially, we close close to around the 60,000 odd mark. That's what's going to be on the wish list. So it appears a replay of the 2020 budget day reaction could play out, when the Nifty ended down by close to 2% on budget day and followed it up with a massive surge in the coming week. This time around, actually, 1 week down the line, I won't be surprised if that gain is more than 3.5%, because we've already gained close to 1% or thereabouts from the budget day low. The rupee as well, it showed some kind of stability yesterday. It's likely to further strengthen today, and hopefully we see an FI buy number by the end of today, and maybe, in fact, a relatively larger one. So the short point is, this is a massive sentiment booster short. The shorts in the system will be a bit of a blessing. The GIFT Nifty is suggesting a gap up. Hopefully we end around these lines. But brace yourself. It's a terrific Tuesday that's coming up.
Well, Nigel, absolutely. And, one of the most heavily shorted markets suddenly face-to-face with a India-US trade deal, right? So, amazing. And that's markets for you, unpredictable, but that's what also makes it so interesting to track, to report on. And of course, we've enjoyed it since last evening when we actually reported it as the news actually started to come through. Now, I just want to, I know Nilesh Shah is with us and I'll just bring him in. I just want to play out sound bites of Finance Minister Nirmala Sitharaman. And this was the first interview after presenting the budget on Sunday. It was a wide-ranging interview with Network 18's Rahul Joshi. And she addressed the fall in the rupee, the hike in taxation on futures and options. A lot of this, of course, is now some of these topics and concerns, perhaps because of this India-US trade deal, relegated to the background, rightfully so, but take a listen, important nevertheless.
Finance Minister, your party has always stood for a strong rupee. But, if you look at the Indian rupee in the last 1 year, it's been on a losing streak. It's almost lost 10% against the dollar, around 16% against the euro. Are you comfortable with this level of the rupee, and are you happy with the steps that the RBI is taking to maintain it?
Let's understand one thing. Our party, yes, was in favor of and is in favor of always a strong rupee, no doubt. But it's also got to be predicated in the context of how the economy is. Economy suffering from high inflation, economy being fragile, and your rupee value also not in a good position, makes it really hard and difficult for everybody. But one thing I can clearly say is economy is fine and fit. Yes. Your macroeconomic fundamentals are strong. And that's not to say, look, therefore are you being indifferent to rupee-dollar exchange rate? I'm not indifferent. But I'll also look at it from the realistic challenges that we have to understand where rupee is finding itself now. Reserve Bank is closely monitoring.
So you are saying that you are comfortable with this situation at the moment?
I'm leaving it there. I don't think I will say I'm comfortable, not comfortable. I'll leave it there.
Okay. India's holding of US Treasury bonds have declined about 25% compared to the peak of 2023. At the same time, Reserve Bank of India has increased its holdings on gold. Do you see this trend continuing?
I think many central banks, not just Reserve Bank of India, are pitching to buy more gold, and India seems to be following the trend.
We will slip into a break on that note. We'll keep getting you excerpts of the conversation with the finance minister. But on the other side of the short break, we'll continue our discussion on the India-US trade deal. We'll connect with Nilesh Shah of Kotak Mahindra AMC and Tahir Badshah. Stay tuned.
Welcome back. Nilesh Shah is now joining us. He's Managing Director of Kotak Mahindra Asset Management Company. We also have Tahir Badshah, Chief Investment Officer at Invesco Mutual Fund. Nilesh bhai, good morning. Great to have you with us here. Tahir, good morning. Nilesh bhai, if we can start with you. As I was saying earlier, der aaye durust aaye. So it's good that it's come, and of course it's also come at a time when the market positioning is extremely one-sided. So on the long side, it's very, very light. And I guess that is the reason why this very large 4% gap up, which GIFT Nifty is indicative of. But your first thoughts, Nilesh bhai, as this has gotten done now?
So undoubtedly, Prashant bhai, this is positive from a sentiment point of view. There was a hanging sword on Indian equity rates and currency market because of uncertainty over US tariff deal. Obviously, we stimulated our economy. So from a growth point of view, there was no negative impact. But there were sectors like textiles, aquaculture, handicraft, gem and jewelry, which were getting impacted. Now, this first boosts sentiment. Second, it provides support to sectors which I mentioned. And finally, Prashant Bhai, we have to go through the details. Devil is always in the details. We have to wait for the official documents to be released to figure out which sectors are benefiting. In this, there will be give as well as take. So obviously, we have to wait for the details.
Yeah.
Nilesh bhai, morning. This is Reema here. The question is that after so much selling by the FPIs, FIIs in the last 1 year, will the FIIs now come back because of the turn in sentiment? Because earnings-wise, it's not going to change the needle too much, considering the sectors which benefit are very small in the overall scheme of things. But do you see FIIs coming back in a meaningful way?
So in some sense, as Prashant mentioned, the timing could not have been better than this. We have seen December 25 quarterly earnings impacted by labor code and rupee depreciation. March 26 will also carry some impact, but thereafter earnings growth should recover to double digit. Now market obviously tries to discount future. So we are seeing earnings growth recovering from single digit to double digit in FY27. And sentiments have improved. Plus, we also have trade deal with EU FTA, which will get activated hopefully in FY27. Put together, there are reasons for investors to be optimistic about earnings growth.
Yeah, 100%. Let me get in Tahir Bacha as well. Tahir, good morning. So what's the investment team and what's been the, I'm sure Nilesh bhai, you and Tahir, both, everybody's been, lesser amount of sleep, lots of calls, getting ready as markets open. Nilesh bhai, you're smiling. Am I right? I'm getting that feedback from many.
Undoubtedly, we have to, put our data in place. And you want to speak to as many people as possible in absence of official data release.
Yeah, absolutely. Tahir, come in there. Your first sort of headline thoughts in terms of, and start with where this will show up. I mean, the GIFT Nifty is up 4, so the Nifty, the large caps, of course, will do well. Financials are a big part of it, so they do well. There are these beaten down, but small list of stocks, right? Directly hit by high tariffs from the US, which will benefit in an outsized way. But what else? Do you think this will change sentiment? And what about mid and small caps, which was where bulk of the pain was really? Will that also get a bit of a lift sentiment-wise, and then maybe stock by stock because of specific, impact because of high tariffs? It may show up. But do you think this broadly provides a bit of a bid across mids, small and mid caps?
Yeah, Prashant, I think so. At one level, we have to, if you were to just put things in perspective, 2025 actually has been a year of extremes, in many ways, whether you look at it from a global standpoint or a domestic standpoint. There have been things which have happened which were never anticipated. For example, the whole gold and silver kind of price movements, the kind of AI trade. You look at the depreciation of the dollar, you look at the depreciation of the rupee, the slide down in inflation. In so many different ways, slide down in earnings as far as domestic India is concerned. Underperformance of our markets, and plus even the fact that, FI sold out probably $20 billion, which is a historic peak. So I think in many ways, the market has operated at extremes, and therefore a snapback or a mean reversion, and at least some of these things, if not all of it, can definitely happen. And I think this provides that catalyst. I think what was probably missing in the budget, the punch has now been provided by this deal, and I think it therefore opens up a lot of things. See, actually, when the trade hit, the tariff hit happened on us, the dislocation in earnings was not as significant in any case to begin with. It was in a few sectors which were, let's say, directly impacted. Gems and jewelry, textiles, and a few others, which were the direct, the ones which were clearly impacted. But I think, and therefore to that extent, the reversion also as far as earnings is concerned will not probably be immediate. In any case, a cyclical recovery in earnings was expected in 2020, FY27. I think what this deal does is operates at different levels in terms of probably, stabilizing the rupee in the first place. If that were to happen, then as you wanted to know, I think the interest of foreign investors in India will start to kind of, come back a little more, simply because the currency, at least one factor, is relatively more stable. it is a macro reset at one level. It is a policy reset at one level. I think the tone of the communication between the two leaders does seem to suggest that there could be more. There are certain things which are yet not clear. For example, H-1B and a few other things, pharma, and there are issues. I think even oil, for that matter. So to that extent, I think it's a macro reset, and therefore it should perhaps first reflect in multiples. It does probably also open up the door for thinking of earnings strengthening beyond FY27.
Got that. Tahir, you would have had a team meeting already by now in the morning. It's been an early start for us, but at Invesco. And what are the big buy ideas now?
You guys didn't still give me a chance to get to office, but nonetheless. No, the bios are basically this, that, look, as I said, I mean, it can operate in different ways. So, for example, if the currency stabilizes, it makes a lot of difference as far as overall the RBI's hands were a little tied down in terms of liquidity and so on. I think that gets a little better. As that gets better, I think it improves the outlook for banks. I think after the budget, there was a little bit of disappointment that the anticipated cut or reduction in deposit rates and improvement in liquidity will come about or no, especially on account of the higher gross borrowing number. I think those recede in the background to some extent. It gives you more policy maneuverability. And I think in other ways, for example, I think tech is also going to be a beneficiary, notwithstanding the pending clarity as far as H-1B is concerned, because that clearly opens up doors. I think in a scenario where the U.S. trade deficit is only going to compress, our ability now to probably compete more effectively for U.S. export market share with countries like, let's say, Vietnam or Pakistan or a few others, that becomes relatively higher. And generally, India has worked well when you have that external stimulus or external markets do well or external economies do well. So I think it will have its indirect implications to many parts of the overall economic spectrum. So today, I think everybody will be a beneficiary. By and large, there will be almost all sectors. Maybe there'll be a little bit of question mark as far as oil and gas is concerned, especially if you were to probably buy more expensive crude.
Yeah.
But otherwise, I think by and large, I can think of everything probably being positively impacted today.
Yeah. Tahir, you said we didn't give you a chance to get to office. We never left office. No, I'm joking. But we were live till 1 o'clock last night. 1 a.m. So, we signed off saying good morning and good night, and this morning we said good morning. Doesn't happen very often. It's one of those days we'll remember.
You guys have signed up for something. I have signed up for something else. So
No. At some level, we all signed up for the same thing. Just a quick word, right? Nilesh bhai, when markets and you get these big gap up, suddenly 4%, right? And it's a reset in that sense. And you know what happens? It's happened before as well. You get a flourish, and then suddenly people get to a point where they say, oh, valuations are now again too expensive. But then, if this is, as Tahir also pointed out, you also said, sentimentally positive, and sentiment is powerful, pieces falling into place, then the earnings component of the valuation argument also starts to move higher, hopefully. Anyway, earnings are supposed to be better than last year. It's one big virtuous cycle, isn't it? Nilesh bhai, any thoughts?
So Prashant bhai, days like this makes us humble and make us believe that time in the market is what makes money for you, not timing the market. Second, a market is driven by fundamentals, flows, and sentiments. Even if fundamentals are good and flows and sentiments are bad, then instead of 100, you'll probably achieve 70 or 80%. And when flows, fundamentals, and sentiments are all together, instead of 100, you may end up achieving 120. So fundamentals matter undoubtedly in the long run as stocks are slave of earning. But flows and sentiment also continues to impact short-term movements. And now sentiments will be positive. Flows should start on the positive side. And eventually earnings recovery is coming. But at the end of the day, we still believe the returns of equity markets will majority come from earnings growth and much less from the valuation re-rating. So one will have to moderate return expectation. One will have to stay invested for longer period of time so that you don't miss a day like today.
Yeah, absolutely. And It happens quickly, suddenly, and then markets respond so furiously that it's all done in 2 or 3 days, and you kind of sort of missed out, as you said, if you try and time the market and be too cute in that sense, right? Tahir, would you agree that on the earnings question, this provides sentimentally very positive on so many layers, right? Because we're only discussing the first layer, but there are so many other ties, B2B, company to company, technology side, and adversarial position was perhaps hurting all of that. And all that kind of goes away. So sentiment positive on layer 1, layer 2, layer 3, and things we can't imagine right now. So that valuation argument sort of perhaps also, you can argue against that, the fact that valuations are very expensive, because you can say this also gives a sentiment boost and perhaps down the line earnings boost as well.
Yeah, so I think, if we were to, the next coming few days, see a maybe 10% rally all put together, I think you would have priced out a little bit of the forward earnings for sure. And to that extent, therefore, it will be, it will continue to kind of, then stabilize at those levels. But it is quite likely that, hello, can you hear me?
Yeah, please go on.
Yeah. So, but what it will definitely do is that it will improve the visibility of earnings beyond FY27. Today, all of us as market participants, while we are all, at least I would say that for myself, that we do expect a cyclical recovery in FY27 simply because of the positive impulses which have been set up in the last year in terms of whether it be rate cuts and even taxation and so on. Those were in any case supposed to revive earnings in FY27, but we were working relatively less visibility as far as FY28 is concerned or beyond. I think this opens up the door for that visibility to come through. And if markets see that visibility, then maybe valuations beyond a particular point don't ratchet up further, but they stabilize at higher levels. So that's the essential part, and you essentially contain downside.
Yeah. So, Tahir, 2,500, 10% is 2,500 points.
Yeah, I'm saying we're done for 5%, let's say today, based on whatever is visible in front of us, and over a period of the next some time. I think we have to remember that this quarter earnings, at least from what it is visible, is trending quite well. We have still not seen the aggregates. There are a good number of companies yet to report.
And yes, absolutely. The third quarter so far, what we've seen is good. So it's possible, right? You're right. 4-5% is now, and the next few days it's possible.
Exactly, because the thing is that if you probably get to that stage where we see earnings at least downgrades halting and probably a sign of upgrades coming through, and that essentially will broaden the market as well. To your earlier question of mid caps and small caps, particularly small caps, I think in any case we are of the view that these are typically times when small caps should be bought, because whenever you see this disparity, that small caps significantly underperform, those are good years to gradually accumulate, but not with the expectation that you get your returns in 27, it's 26 itself, probably in 27 and 28. But when they come through and gushes.
Got it. Tahir, thank you very much for your time. Great speaking with you. Good insights, and we'll continue chatting. Nilesh Bhai, thank you very much for joining us bright and early. We'll leave you to it. Full day ahead. Thank you for joining us. So that's the market perspective. Shireen caught up with a bunch of secretaries, and we've been, of course, at CNBC TV 18 for the last few days, been speaking to ministers, officials directly involved with the India-US trade deal. And this is Commerce Minister Piyush Goyal on what we can expect, and the fact what he said that we can expect a deal very soon. Listen in.
I think we are making good progress and working in the spirit of friendship. My good friend Jameson and I, we've known each other since Trump won. And I have absolutely no doubt that between him and me, or between both our teams, the synergy is very good, the understanding is very positive, and we'll be able to finalize very quickly.
Okay, last evening, Shireen caught up with Commerce Secretary Rajesh Agrawal about the progress of the India-US deal. This happened just a few hours prior to the official announcement coming through on the trade deal. Listen in.
We remain engaged, very positively engaged, and it's progressing very well. The two frameworks are still in place. The larger framework is going to take time because US is a big economy, and a larger, deep, wider FTA will always going to take time. But the one which can be done in the short run is the one which is an early harvest, can address the reciprocal tariff bit, is also getting shape. When it will happen, How fast it will happen? These are the questions, I think. I'll not put a date to it, but we are hopeful that we should get it sooner than later. Let's see what happens next.
Sir, I'm just going to push you a little bit on this. When you say we're waiting for it to take shape, or it is shape in progress and work in progress, can you explain to us what are the cornerstones, what are the pillars that both sides are working on, at least as far as this reciprocal tariff framework is concerned?
Largely, see, reciprocal tariffs are in the goods space. If you look at these tariffs are in the goods space, so one of the key discussions in this is how we are able to align our tariffs on both sides to see that we work towards a more balanced trade between the two nations. So that is going to be the core of whatever we achieve in the first. Aligned with that, when you, as you mentioned, tariff itself is not the driver of trade. The entire ecosystem, the policy certainty or the non-tariff issues also needs to be addressed. I think we are trying to discuss on both sides to see that when the deal gets finalized, both sides are better off than where they are standing.
How much convergence is there today, Mr. Agarwal, on the framework to deal with the reciprocal tariffs? Would you say we're 90% done, we're 80% done, we're 50% done? How much convergence is there on both sides?
I think you heard my minister a few days back where he said most of the sticky issues are now out of the... So that's where I will leave it, that most of the sticky issues are more or less resolved. So we are progressing fast. Let's see what happens.
All right, time to slip into a short break. You come back, we'll continue our focus and discussion on the India-US trade deal. We'll also get our research team to tell us what it means for select sectors. Stay tuned.
Well, we are nearing the market open, the pre-open at least for now, 1,000 plus points on the index. So it's a big open. Rupee markets also will be showing up with strength. Rupee appreciated yesterday, and I think if you take cues from the offshore market, it's a 1% appreciation here. Lata is joining in with what she's picking up from the fixed income bond side. Lata, take it away. What's your understanding?
Huge for the fixed income and the rupee market. NDF market yesterday night when you all were having your conversations on air, it was already at 90.60, and you should remember where it closed. The official Monday close was 91.52. So it was already 90.60, 90.50, and this morning the NDF rates, which at which we may open, is about 90.15, 19.20. So we are going to open over 1% higher, probably 1.5% higher. The indication was that even on Monday, the rupee had recovered by 50 pies. That is 0.5%. And the sense was that RBI was not doing so much. So either people were privy. There were a lot of dealers telling us we will not bet against the rupee at 92. Just all the bad news is in the price. It's dangerous to go beyond that. So there was a sense that, we have now become, long rupee, short commodity currencies. That kind of trade was also working. But now the market will watch out for two things. Rather than running away with, will we end at 90, 89, 88? The two things to watch, what will Reserve Bank do? Just as they control volatility on the way down for the rupee, they may control volatility on the way up. For the economy, a stable rupee works. When an FPI is investing, he doesn't want that overnight my gains are suddenly eroded. So stability works, not necessarily an 88 level or a 90 level. So it's possible the Reserve Bank will come in. The second point, and we are forgetting, the FPIs will look for valuation. So if the Nifty opens at the implied GIFT Nifty level, it's possible that valuation concerns will also remain. They may wait and watch. So the immediate flows of FPIs is what the market will watch out for. Does that come? And what does RBI do? These are the two big people with dollars, and they will be watched.
Thank you very much for that. Guys, did you see that ticker? If markets open up with a 1,000-point gain, it will be history in the making. It will be the biggest single-day gain that we've seen on the Nifty, if indeed we have that gap up opening of single day in absolute terms. In percentage, of course, it was at 20% circuit, UPA. You remember that?
But the percentage, it's just the base.
Of course, yeah. So the last big one was May, post the India-Pakistan ceasefire.
I'll just add, no, you're absolutely right. Because the base is big, 1,000 point is historic. Just the other point is that there now will be more liquidity. Banks were losing deposit also because dollars were actually moving out. There was cash outflow. Now, if that stops, FPI selling stops, then you may have easier rates also. It could have a bond market effect very soon.
Yeah, absolutely.
For now, yeah.
It's a big one, right? We'll just have the management of Aarti Industries with us in just, and I'll just read out the GIFT Nifty, the rupee, and the other rates while we wait for the company. Okay, I think what we'll do is we'll try and, because chemicals is one segment, as Sonal was telling us earlier, where this is going to show up in a big way, right? So we'll get you perspective from one of the top companies, exporting companies, that is Aarti, in just a bit from now. But in the meanwhile, let's address some other sectors as well. Shrimp exports were massively hit. There was in between, news and understanding that many have started to divert away from the US, which is the largest market, to European countries, etc., etc. There are lots of listed companies, by the way, Avanti Feeds and the rest. Ria is here with some understanding and context on this sector. Ria, take it away.
Well, yes, shrimp stocks will stand to gain from this reduced tariff rate in the US now that the tariff rate has come down to 18% from the earlier 50% rate. Shrimp exporters will regain a significant portion of their competitiveness within the other countries. Earlier, these companies had faced a lot of volume and margin pressures because of the higher tariff rate, and now all of this is expected to ease out, and we will also see some improved earnings visibility once the new tariff rate comes into effect. There were also a lot of concerns around inventory build-up and working capital stress, and that is also now expected to ease out going ahead, and the companies will also regain some lost market share in the US. Now, in terms of the market size, the US is India's most critical market for frozen shrimp, which represents roughly 41% of the export volumes and 48% of the export value as of FY25. In terms of overall, for annually, India exports roughly 250,000 metric tons of seafood to the US annually. In value terms, that is $2.5 billion. So the US is a big market for these shrimp exporters. And now, if you just compare the tariff rate of India to the other competitors, Ecuador is the largest competitor. The tariff rate for them is 15%. For other competitors, for Vietnam, it is 20%. And for Thailand and Indonesia, the tariff rate is 19% in the US. The key stocks that will be impacted by this will be Avanti Feeds, Apex Frozen Foods, Coastal Corporation, Waterbase, as well as IFB Agro.
Right, Ria, thank you very much for that. Let's just put the GIFT Nifty up, the Nifty up, the pre-open. It's ticking 1 minute past the pre-open rate. The rupee, by the way, is opening 50 paise stronger. 10 paise stronger compared to yesterday's close. But that is also, I guess, and let it play out. I think that is also because of is that the, I don't think it's updated yet. Let's just refresh it, please.
See the ticker, 90.4.
Yeah, 90.4.
I refer to that, but the graph, the plate has not updated. So that's 10 paise appreciation, and so we'll just refresh it in just a bit. Okay, 91.51 to 90.40.
Yes.
Beg your pardon. I think a little sleep starved, so I saw that as it's a 1% appreciation. Like the offshore market, the NDF market was reflecting, like Lata was talking about as well. So that is the dollar rupee. Let's look at the Nifty as well. It starts out, and that is up 1,300 or 1,400 points. And we'll look at that in just a bit. There you go.
Fresh all-time highs.
It's fresh all-time highs.
Fresh all-time highs, straight away, right? I mean, India-US deal, and it's we should play out the sting and the bells and whistles, and we should bring that out. It's a happy day. It's a good day. And,
I told you yesterday towards the closer trade, you'll ask me why I'm dancing. Today it's going to be the ballet, the rap, they say what it is. It's that sort of a day. It's going to be a big day for the Indian stock markets. 1,000-point gain. I'm looking at a lot of stocks just in the first few minutes. They're already locked at upper circuit. So
maybe if you just look at something like textile names, right? The one sector which actually was impacted, and they were forced to take discounts on pricing, etc., to be able to adjust for the tariffs, etc. Look at that. Gokul is up 20%. Pearl Global is a company we spoke to earlier. That should come up on your screen, and many others.
So let me tell you, Wellspun Living 20%, Aarti Industries 20%, Himmat Singha Seed 20%, Avanti Feeds 20%, Kitex Garments 20%, Vardhaman Textile Trident also up 20%. So that just gives you an indication, of course, and there's a gush of money coming in too. Many of the large caps. Titan is the one in pre-open, up nearly 10%. IT2 giving it company. But I think we've got Naresh Jalan, Managing Director at Ramkrishna Forging, joining us on the phone line. Mr. Jalan, thank you very much for joining us on this momentous day. It looks like a very strong opening, a record opening for the market. But just for the auto sector and auto ancillary, you all are under Section 232. So does the India-US trade deal benefit you, or you will still continue to attract a tariff of 50%?
No, still I think we are waiting for the fine prints. But whatever we have heard, that auto components also for India, basically all the engineering components fall under the new tariff regime. And also the industrial components going into oil and gas sector and the industrial equipment sector fall under the new tariff regime. So I think that will move from 50% or 25% to straight away to 18%.
Okay, so auto components to oil and gas industrial will now attract 18%. That's what you've heard?
Yes, that's what we have heard yesterday night.
And you've heard from whom, sir?
From our customers in US, we have heard from them. So we are waiting for the fine print still.
Right. So the autos as a space otherwise is not because of that. It comes under Section 232, right, Mr. Jalan?
Yeah. Yes, it comes under Section 232, but I think like in other trade agreements with Korea and Japan, they were given an exception in terms of auto components and auto from 232. I think India also has been given such exemptions probably, and that's the reason our customers have come back immediately yesterday night itself that we may, by this, I think in a couple of days we may hear exactly, but it is going to be at 18%.
So all auto components, all auto component exports?
Yes, all auto component exports.
Okay.
But I think the best part is that the industrial component, which forms today one of the biggest exports in engineering, in oil and gas and the industrial equipment, which was charged under 50%, that will straight away come to 18%.
Okay. And what was the tariff under 232 for auto and auto components?
That was 25%.
Okay, 25 for everything else to 18, and for specific oil and gas, industrial supplies, etc., it goes from 50 to 18, where there is the delta is much, much bigger. Mr. Jalan, thank you very much for joining us. Very helpful that you are giving us that feedback, what you heard from your customers at this point in time. I think our technical experts are also with us, Mitesh and Sudarshan. Gentlemen, good morning. Good to have you with us here. Sorry, we are coming to you a little later than usual, but it's a big day. And I think it will all come down to trade management and what do you do after a gap up like this? Because that's what makes money, right? I mean, the view is one thing, but how you execute. Sudarshan, you go first.
All right. See, the 2 days were no trade days. That means we are lucky we don't have any short positions. If you do have long positions yesterday afternoon when the market started building up, the gap up, after the gap up, have a pause and take your profits. There is nothing to buy. And please do not make the silly mistake of trying to go short. That would be silly. Just enjoy this market. All your portfolios have gone up today. Gold, silver, and today the shares.
Yeah.
Mitesh, chase the gap up?
See, not immediately. I think, if there's a massive gap up like the Nifty is showing, then I think I'll wait for it to, the GIFT Nifty is showing, then I'll wait for it to settle down. But if it's a small gap up, let's say about 200, 300 points, then maybe yes.
Yeah. Let's refresh this Nifty, the rate. It's up it's up 1,200 points on that. On the graphic, it was showing a 1% change. It is not. It is. It's a 1,200 odd point. The pre-open, I think, is ended now. Sudarshan, in terms of specific trades, what do you have?
I'll give you the names because there's no sense in the levels. There are three mid-caps you can consider: Amber, AMBER, Hind Petro, and Concur for buying. You must understand that gap-ups are not good places to buy, but focus on them.
Yeah.
Amber, and the other one is?
Concur, CONCUR, Concur. Amber, Hind Petro, Concur.
Got that. Mitesh, what would you look at buying today?
I also have some buy calls, but I'm not sure how it will open up. So the risk reward has to be taken care of before executing them. But a buy on IOC for targets of around 169, a buy on ABB for targets of 55.50, Adani Ports for targets of 14.55, and CG Power for targets of 6.30.
Okay, all right. Thanks a lot for that, gentlemen. Well, let's focus on the metal space then. We have Vikas Singh, Vice President at ICICI Securities, who joins us on the show. Hi, Vikas. Good morning. Good to see you. When everyone's celebrating that the tariffs comes down from around 50% to around 80%. But for our metal sector, it continues under Section 232. Just correct me if that understanding is correct. So there's no big change. Is that correct?
Yeah, you're correct that the 50% tariff on aluminum still will continue even after that. But sentimentally or indirect exports in terms of the other goods probably will go. So slightly positive, I would say, for metals as well.
Okay, so sentiment positive is what we're seeing for the metal index itself on that front. All right. The other big talking point is going to be on silver, right? Silver did $120. It came down to around $80. But I think most analysts like you are still factoring in, I think, $50, $60 an ounce. Could you tell us what is that number and what is the play now? How do you approach a stock like Hindustan Zinc and Vedanta? I recall when both those stocks were, they were shunned away at that point of time and everyone was negative. I recall that you were quite bullish on it. So what's the view right now? Because the stocks have seen already a big run.
Yeah, Nigel. So basically, we are building, we were previously building what's $56, $57 per ounce on silver. Currently, in our estimate, we are baking in $90 per ounce of silver at this point of time, and still slightly bullish on Vedanta since the stock has run up a lot. So we are currently still have an ad rating on the stock. So slightly bullish stance, still maintain on the Vedanta.
So and between ferrous and non-ferrous, what is the preference? Give us your top two picks.
So we have actually started advising clients to start moving to ferrous at the start of the year, basically. Then the safeguard duty came, and currently, given the next 5 to 6 months is the peak demand season for ferrous, we are still basically more bullish on ferrous at this point of time versus non-ferrous. Our top pick is Tata Steel at this point of time. and on ferrous side and non-ferrous, Vedanta.
Yeah. Thank you very much, Vikash, for that. That's a quick update. There's a news break confirmation once again. We put out two big exclusives yesterday, and there's confirmation right now coming through. So AB Housing Finance, which is a fully owned subsidiary of AB Capital, and we should tag the stock as well, is raising 2,750 odd crores in growth capital, which basically means that it will go into the balance sheet of the company to strengthen the balance sheet, to expand in a faster way. And that is the stock that should be in focus. The pre-open has ended, so you won't see a price change because the news is broken after the end of the pre-open session. So you will see a reaction as it opens up. And the transaction is valuing the company at 19,250 crores on a post-money basis. And, Advent will end up owning, which is a private equity giant, will end up owning 14.3% stake in the housing finance subsidiary. So that is AB Capital. Newsbreak confirmed. On your screen, at the bottom of the screen, 20% movers, Trident, Wellspun, Indocount, all the textile names. And I think there will be others as well, which will come up and give you a sense of the open itself. And we'll put that out. I think Vivek is standing by on solar as a segment and how that is. Okay. So I'll just wait by. There's 3 minutes to go for the market open as we kick off. Right now, 26,308 is 1,220 odd points higher, and let's get Vivek and let's ask him. By the way, if Mitesh, do we have Mitesh? Okay, Vivek is with us, so let me go across to him. Vivek, solar.
Well, that's right. Solar manufacturing supply chain. Waaree Energy, remember, has out of the total order book of 60,000 crore, almost 32.5% comes from the US market. Big beneficiary, sharp gap up gain. ME Photovoltaic, Premier Energy, all of them have spoken about exports. Vikram Solar is another name from the renewable energy manufacturing space. Now, coming to the capital goods space, manufacturing space, very sharp beneficiaries. Have a look at APAR Industries, that particular stock. The third quarter revenues, 42% mix came in from the US markets. That particular stock gains big. Cummins India, ABB, Hitachi, all of these MNCs do have intergroup exposures. 15 to 20% of the total top line comes from the export market. Adani Enterprises as well as Waaree, both of these names, module exports to the US market, they also stand to benefit quite significantly. Other names include names like TD Power, Entar Technologies, Triveni Turbines. All of them do have material exposure to the US market. All of them stand to gain significantly.
Yeah, all stand to gain materially. Sudarshan and Mitesh are with us. Mitesh, the AB Capital as a stock, any thoughts?
Well, Prashant, I think, the stock has corrected to its weekly support levels of 320 yesterday.
Yeah.
Middle of 317. Could bounce back to 345, 346. And if it captures that, even 360, 365 zones.
Yeah. Okay. Your 9-10 calls, Mitesh?
I'll go with long on Adani Ports.
Sorry, which one? Adani Ports.
Adani Ports.
Can we just put up the Adani stocks all on the screen as well? Because I think that was the other group of stocks which many people have been telling us perhaps this big positive reaction will show up. Okay, we'll do that as soon as markets open. And Nigel has walked across the big wall. I'll toss it across to him in just a bit. But just referred the market opening itself, and then we'll take it from there. What do we have? So Nifty, historic open, 1,200 points higher. 1,000 points, 26,030. Nifty Bank, 23,050, which is 60,950. You got the mid-cap index, which is up 4.5%. So the mid and small cap indices is where this is showing up in a very, very dramatic fashion. And look at advanced decline. When is the last time you've seen markets open with a 10:1? 10 stocks up for 1 stock down, kind of an advanced decline ratio. Something's got to be said about that. Nifty is kind of cooling off a little bit, but this is just the start. 740 odd points is what you have. 25,822. Sensex 84,071. Okay, let me toss it across to Nigel, who's standing by on the big wall to take the market open forward. Nigel, take it away.
किधर चला गया
Okay, I think, Nigel, what we'll do is we'll just come back to you. I think we're having a little bit of audio issue. We'll just fix that. But, I mean, it's a sight to behold. Actually, if you can just show pictures and look at the market opening on that big wall, right? That's the impact is quite formidable in that sense. 720 odd points, 2.9% higher is where we are at this point. I think we fixed that issue. Nigel, take it away.
Well, that's right. That's right, Prashant. We're looking at that, the big move is what we're seeing on the Nifty itself. We're up close to around 900 points approximately. The number of stocks that are advancing way more than the number of stocks declining. And that's something that's really, holding you well. A few stocks that are in focus in today's trading session. The advanced decline ratio is good. And just take a look at the big gainers. Now, let's pull some of these stocks up for you on the screen. Gokuldas should come up for you. That's locked in upper circuit. Wellspun Living, that as well is higher. Himmat Singha, well, that stock as well is up and about in today's trading session. So these textile players, they are having a blast in today's trading session. It's only green on the screen. Pull up a few more. KPR Mill, that's up and about. And Vardhaman Textile, that's the other stock as well in there. Big gains is what you're seeing on all of these names. Let's get a few of them actually up for our viewers on the screen. From the chemicals pack, we have Aarti Industries as well as Camlin Fine. All those stocks, in fact, are up and about in today's trading session. We're talking about Vardhaman Textile. Yes, the holding company as well is doing well. But I think we should get some of those other names up for you on the screen. Apex Frozen, we just had Ria telling us that it's a beneficiary. So that stock is up and about. And LT Foods as well. That's the other name. Moving up on rather large volumes in today's trading session. So good going out there. A few more gainers. Goldium, they as well have a fair bit of exposure to the United States. Remember, when the tariffs were imposed, these stocks got actually hit. So they are seeing a big bounce back in trade today. And finally, Sterling Technologies, that's another stock that's doing well. Sambandhara Motherson, big move is what we're seeing on that stock. Just take a look at these names. 10, 15, 20% is what we're seeing. And Carousel as well as Garware Technical Fibers. So it's a super duper trading session. Big move is what we're seeing. This number, that's the one that you like. The number of stocks advancing, 2,400 stocks advancing with just around 133 stocks that are declining. Guys, back to you all. Joining us soon in the studio.
Oh, well, that's looking majestic, Nigel. Thanks very much for that. It's a super start at this point in time. I can go through so many more names here, right, which are opening up, and we'll have them up at the bottom of the screen with regards. It's all 10%, 20%, 10%, 20%. That kind of a day. Kind of reminds me of that. I think the last time we had something like this was tax cuts. If you remember back in the, I think this is when. The 10% corporate tax cut which had happened, and everything obviously opened up 10%.
Even in May, on 12th of May 2025, post the India-Pakistan ceasefire, Operation Sindoor, we had about a 3.5%, 4% kind of an up move on the markets. It was a broad-based gain. The only sector, which is sideways today is ONGC. That's the only Nifty stock in the red right now. And large cap FMCG names like HUL, ITC, Nestle are not participating on the upside. They're in the green, but modest gains.
Remember, your attire is matching with all the greens, so that's nice. Prashant Jain is with us. He's founder and CIO at 3P Investment Managers. Prashant, good morning. Great to have you with us here. Thanks very much for joining us. And, I remember in our interaction at the sidelines of that Kotak event, I think which was the last that we've had on air, you said, it's one of the, it's structurally, this is the best we've seen for a long time in your career, macro-wise, etc. But there was this big disconnect between asset prices and the macros in that sense. So in that, a lot of things go to make that divergence, earnings, etc., which were a little slower. But this also was a big sentiment overhang, Prashant. So what is your first reading on the durable impact of this deal?
I think, Prashant, I would agree with you that this was a sentiment breaker, and I think it did. Our exposure to the US in goods exports is extremely low, and if you exclude the exempt categories, then that exposure is close to 1%. And these are also categories which have relatively very low share in the markets. So, I mean, I can completely understand the way markets are behaving. People must have been short, or there is a lot of excitement. But I would expect, just like it did not have too much impact on the downside, I don't think there is any durable, meaningful impact on the upside either. But it's a very good thing to happen.
Does it? I mean, but Prashant, there's sentiment is a powerful thing, right? I mean, feel good, and I mean, that motivates people to take action. Do you think that perhaps, and it becomes a slightly, I mean, it's not our job to do it, but from a foreign investor perspective, those who were saying, when will they come back? This going away adds to the argument that you can kind of present, right? And it's all connected. It's a big one virtuous cycle. What's your sense?
Foreigners have been underweight India for three simple reasons, in my opinion. One was India was pretty expensive 18 months back. Second, earnings estimates were very aggressive. We were simply extrapolating the faster growth in earnings coming off the COVID lows. And finally, I think India was missing the popular narratives of these times, which is AI or semicon, etc. And these were the reasons why we saw so much selling. I think with the currency where it is, with the valuations having come off, with so much selling behind us, I think I would be a little more optimistic on foreign flows, and this certainly is going to help. Though the good thing in India is that the impact of foreign flows, one way or the other, is now quite small. Foreigners have sold 40 billion in 18 months, but markets, large caps have been flat. So I think when you are raising 5 lakh crores of capital a year, another 50,000 crores more or less supply, which is what foreigners do, I don't think it moves the needle meaningfully for the Indian markets. But I would agree with you completely that this could be good for a sentimental rally.
So you're saying that even if the FIs come back, it's not going to be a meaningful driver in terms of big percentage gains for our market, pushing us up towards, say, a 10% rally over the next few months? It doesn't.
Yeah. Nifty could rally if foreigners come back, because in Nifty there is hardly any supply of stock.
Okay.
And local funds in any case are buyers. But the moment you have good market sentiment, the supply of stock also catches up. So you were raising 5 lakh crores. If there is more money in the market, you may end up raising 6 lakh crores. So ultimately, markets will over time move depending on valuations and fundamentals. And I think the impact of flows is not that significant. Think of it this way. Why did the markets not go down when you had 40 billion worth of sales? So I'm not trying to underplay the role of foreigners for near-term movements, but longer term, these markets are clearly driven by local capital, which is far bigger, and also the supply of stock, yes.
So what is your view now, Prashant, on the markets 12, 18 months down the line, considering that we've gone through a period of time-wise, a little price correction, we've underperformed versus peers, earnings are expected to pick up, say 13, 14% by FY27. What is the view on the markets, and how are you constructing your portfolio, the advice?
I think we are constructive on the portfolio. Markets have time corrected for, Nifty has time corrected for almost 16, 18 months. India's premium over EMs has been reverted. Foreigners are underweight. There is hardly any supply in Nifty. And as you rightly said, earnings growth mainly led by banks pricing in lower deposits. Earnings growth outlook for fiscal 27 is mid-teens compared to single digit in this year. So I think we have said this on record also, that the next meaningful move in the market should be on the way up and not on the way down.
Got it. Prashant, just a quick word on sectors as we look ahead, right? Now, this is a big marquee thing. It's happened, and thankfully it's come through early in the year. So where are your energies focused on? Is it which part of the market, in terms of finding those single stock opportunities, which could be wealth creators? Prashant, how do you think about it?
Prashant, I feel that large caps continue to offer better opportunities than small mid caps as a category. However, small mid caps have fallen quite sharply. So I think it is time for very, very selective buying into these names. On a 1 in 10, 1 in 20 names would start making sense. In large caps, I think sectorally, banks, insurance, automobiles, I would say even software, these sectors are looking good. I mean, I would be not constructive on consumer staples and retail, because these two sectors, I think, are expensive relative to their long-term growth prospects. And another point is, in these markets, the dispersion in valuations is pretty low, and there are hardly any deeply undervalued sectors. So this is not a market where you can make quick or big money, in my mind.
Prashant, you said the lack of AI trades in India worked against India. Do you think the budget announcements related to data centers, tax holidays addresses that? India can become an AI services hub? That anti-AI label, can that go away?
I don't think data centers are a proxy for AI. They are a very highly capital intensive, very low ROCE business. It's a good opportunity for India, and it is great what has been done. But I don't think it is a proxy for AI at all.
Yeah. Sorry, IT.
No, on data centers, I asked that can it reverse the anti-AI label? That he says it's a good opportunity, but it's not AI, or as a proxy for AI.
Yeah,
But you said you like IT services, right, Prashant? Can you take us through the rationale behind it? Because when you look at earnings growth, while FY27 will be better than FY26, we're still looking at mid-single-digit kind of a top-line growth.
This sector has seen the maximum outflows if you look at the foreign selling last year. Why? Because many expect this sector to be adversely impacted or even disrupted by the adoption of AI. We have a slightly different view, and time will tell whether that view is right or wrong. We feel while adoption of AI will certainly improve productivity, but client spends are unlikely to come down. And therefore, these businesses may not get adversely impacted. On the other hand, as enterprises adopt AI, there is a fair chance that IT spends may actually accelerate. And these companies have proven to be very agile over the last three and a half decades, and they have successfully navigated multiple shifts in technology. And we think this time should be no different as well.
Dark horse sector, right? In that sense. And it's underperformed for a few years. Sorry, you wanted to say something, Prashant?
I think, yes, it's sold off very sharply. If you look at the dividend yields, probably it is the highest. Currency depreciation is in its favor. And despite the anticipated impact of AI, fiscal 27 looks to be a better year than fiscal 26. So let's see how it goes.
Well, Prashant, great conversation and a very reasoned view coming through from you. And thank you very much for joining us here on CNBC TV 18.
Thank you, Prashant.
Someone who's got one of the best track records with regards to investment management over a very long time period. We have Suyog Kotecha joining us, CEO and Executive Director of Aarti Industries on the phone line. Suyog, great to have you with us here. Good morning. Thanks for joining us.
Good morning.
So for the chemicals industry and your business, give us a sense of US exposure and what does 18% now mean?
No, I think it's a great positive for the sector in general and also for Aarti Industries. For a country, roughly US accounts for 20% of our chemical exports globally. And in that context, $6 billion worth of chemicals get exported to US from India every year. So in that context, this reduction from 50+% to 18% will help tremendously. Even for Aarti, as part of our total revenue, 17 to 18% comes from US. So it's also a sort of huge positive for us at Aarti Industries. But I think more importantly, the certainty will help sort of decongest a lot of decision making that has got hampered in the last 9 months from investments point of view, from future growth opportunities point of view. So overall, a very welcome move and a huge positive for the sector and for the company.
What were you paying on the 17 to 18% as it was charged 50% till now?
Yeah, I mean, the tariff varied based on the product lines. As we explained before, some products were paying full tariff, some products we sort of exempted as part of an extra 2, and some products, the clients were able to reimburse the tariffs wherever.
So what was on an average volume weighted, what was the average tariff, Suyog?
I think roughly on 40% of the volume we were paying full tariffs. and I think that's going to get mitigated quite significantly.
40% of the about 18% you were paying full tariff. Yeah.
And your competitors, I presume mostly it would come from China, and other countries. Can you tell us what kind of tariffs they are paying, and how would you be placed competitively now?
I think there are two major geographies against whom we compete, China and then Europe to some extent. I think with Europe we are at par, but given our cost competitive advantage, we should be able to compete quite favorably with them despite tariffs being, slightly favorable for them. China, now we will have a significant advantage, right? Because Chinese tariffs, if they continue to remain at existing level, then we will definitely have advantage over them as far as exports to US are concerned.
And China tariffs are 50% plus? What is the number?
In total, if you add up all different types of duties, they will reach closer to 50% odd level.
Okay. All right. Hi, Sayog. Good to see you in. So it's a positive coming in because you have managed to crack the father of tariffs. But what about the mother of all deals? You have some exposure to EU as well. And with the India-EU deal that was signed, are you a beneficiary?
We do have exposure to EU, though from a current business standpoint, it's low at around 5% odd level of our total revenue. But I think from a mid to long-term point of view, it's also a huge support because a lot of long-term partnership opportunities, specifically for European chemical players who are rationalizing their own capacity in Europe, will now get attracted towards setting up that capacity in India. So from a near-term impact point of view, it may not be material, but from a mid to long-term point of view, I think EU FTA is also very positive. I mean, as we discussed, if you step back, right, as a sector, this sector has been, impacted on margin side for quite a while, almost now 2.5, 3 years.
Okay.
But in the last 3 to 4 weeks, with the three macro events, I think EU FTA and I think US trade deal recently, but in addition to that, some of the Chinese anti-involution strategy that has also got announced. I think all three are actually a big macro positives for the sector, and we hope this will finally start to lead to margin recovery in the sector, which was sort of long due.
Got it. So let's get the near-term trajectory then. Year to date, you've done roughly around 14-15% growth in terms of revenues with margins in the vicinity of around 13.5 to around 14%. What do you end this year with? And on that sort of a base, what growth can you guide for? What about the margin performance from year on? And I think last quarter you did a capex of around 300 crores. Earlier you were talking about 1,000 crores of capex for the year, but you've upped that to around 1,100 crores. So run us through that detail.
Yeah, I think our midterm guidance is there out in the public, and we continue to stand by it. And in general, I think it's been a positive trajectory. All the actions that we outlined to achieve that guidance in terms of cost, operating leverages, and capex-led growth are in the play. Many of the actions around cost and operating leverages are actually already getting implemented. So I think we don't sort of deviate from that. I think from a capex standpoint, we are ballpark there. I think, we said 1,000, now we're at around 1,100 crores because we saw some incremental opportunities in the market, especially in the energy and polymer segment, and hence we decided to do a debottlenecking, so very efficient capex to get incremental capacity out of existing assets. But the annual number is expected to remain around 1,100 crore range.
Okay. Just one final question. Do any of your products come under Section 232, which still attracts higher tariffs?
We will have to go through that. As far as we currently know, right? But we wait to read the detail, sort of fine print, and then have a detailed evaluation. But currently, based on the information available to us, no.
So, Yog, great chatting with you. That's Aarti Industries, was one of the hardest hit stocks post the India tariff, the lack of the India tariff trade deal. And today, you are seeing a surge in the stock price. Stock is up 12% now. Yeah.
Before you go to Bajaj, we have the Bajaj management. PB Fintech, I just want to highlight very quickly. Let's just put the stock up. We reported yesterday, and that was an exclusive, that they are going to announce a fundraise. The PB stock, yeah, there you go. They're going to announce a fundraise. And the announcement came later for an acquisition, for perhaps an international acquisition. The stock sold off 5% yesterday, post the story, and is down another 3% this morning. That's a very large correction, especially, with the positive backdrop we've had. We'll try and get Yash with us as we go along for more clarity, for more details, etc., on this important story. But Rima, take it away.
So Bajaj Auto came out with their Q3 numbers. It turned out to be a good quarter. The company's revenues went up by nearly 19%. EBITDA margins at 20.8% versus 20.2%. And profits were up nearly 19%. We have with us Rakesh Sharma, Executive Director at Bajaj Auto, joining in. Rakesh, normally we would have started by asking you about, exports and, margins, etc. But this time, give us your overarching view on the India-US trade deal. I know predominantly you cater more to Latin America, Africa, so your exports to North America are fairly limited. But how does it change the industry? And it's under Section 232. Broadly, what have you picked up?
Well, it's certainly welcome news. Quantitatively, for Bajaj Auto, exports to the US, which we do under the Triumph and KTM brands, accounts for about a percentage of our total exports. So even when the tariffs went up, we were at an overall basis not really impacted by it. So now when the tariffs are down, the same sort of holds true. However, having said that, as we sort of build up our business with KTM Austria and through them accessing markets like US, we do foresee more and more production to shift into India, and therefore we will be making more US relevant products in the future. And I think having these tariffs will be certainly very helpful from that point of view. And beyond that, I think the signal which goes out from a sentiment point of view, with US and India aligning, there are so many other things, we trade in US dollars there. And so it's good to have this positive sentiment all around. It's good for trade.
And exports on the whole, monthly you're crossing the 2 lakh mark. So this quarter it's been in excess of 6 lakh. And you've also said that the company expects exports to deliver highest ever top line performance in dollar terms in FY26. How do you see the export momentum, particularly for Q4? Does the 2 lakh momentum get stronger per month? And for FY27, do you have a number in mind?
Well, I think Q4 will sustain at the levels which we have been doing. We've been growing at about 15 to 18%. Q4 tends to be a bit shorter because we tend to complete our exports by 20th of March or so. So you have, in that respect, less number of days. But the tempo should be maintained, and we are hoping to, on the average, still clock over 200,000 units per month as an average in Q4. Going beyond that, we are going to be responding to the market quarter by quarter by quarter. At this point of time, as things are now, it looks as if we will be sort of trying to inch up above this number in FY27. But international businesses got these, several moving parts, macroeconomics, geopolitics, etc. So it's very difficult to crystal ball gaze. But at this point of time, we would be looking forward to maintaining this kind of a tempo even in FY27.
Okay, so at least for Q4 near term, that 200,000 plus monthly sales should continue for export. What about margins? If you could talk about the commodity inflation that you have seen in Q3, expectations for Q4, and even in terms of offsetting measures via price hikes.
So the margin story is not a very difficult one at this point of time. Yes, there have been increases on the noble metals package, quite substantial increases, but they have been offset by flattish performance of steel and rubber and some natural products. So on the balance from the commodity side, there has been a little bit of an inflation, which we have taken actions on early Jan to plow those back. Now, as we move forward, that the softness in the Indian rupee has been very, very helpful. And with the rupee trading at 90 plus to the dollar, that is a very significant tailwind. So we're not under any kind of great pressure to manage the margin story given these things. So we will be, but always looking at competition and the impact on demand, etc., and responding to those factors rather than the cost side factors.
So baseline margins of 20% plus should sustain.
Hopefully.
And the EV markets are, you've pulled back good amount of market share, close to 500 basis points. Do you believe you can go even higher from here? And your earlier competitor, Ola, is struggling out there. Have you had a look at their business?
All the time. Yeah. So
with keen interest, I meant.
Because you know that we had major supply chain dislocation, both in two-wheelers and three-wheelers, and therefore, Q3 clawing back 5 percentage points of market share and getting back to a firm number 2 after having slipped down the league table is very, very welcome. And almost in the closing period of Q3, we also launched our new edition, which sort of opens up a new segment for the Chetak scooter, nimble, agile Chetak C25, targeted specifically to the youth and women, and that should open up. So the Chetak portfolio has got bolstered, and we will therefore obviously be looking forward to improving our market share in Q4. Electric three-wheelers, also we had slipped down, but there the return has been quite rapid, and we are for the last 2 months now at the number 1 position. I think January we've exited at about 38% market share in the e-auto segment.
Okay, all right. Thank you very much, and always appreciate your time here on CNBC TV 18, sir. And good luck as you continue to execute. I just want to quickly make a mention of what markets are doing before we go any further. 640 odd points higher right now. Look at that. I mean, it's a green-looking screen across the board. Sensex up 2,000 points. You got the Nifty Bank, which is up 1,350 points. That's 2.33%. Mid-cap index is up about 3%. 1,640 points. Beautiful and healthy and all of that stuff, right? And after a long time, because we've been kind of sort of struggling and the mood's been a little off and down, hopefully this is durable over the next many trading sessions. Rupee, of course, is now the dollar rupee, that is, will also come up on your screen. It's seeing it opened up 1%. Dollar rupee opened 1% lower. Rupee was up 1%, and there you go on your screen, 1.25%. So under 90 now, and perhaps even beyond that. We'll see. That's the rate this morning. 90.34 for now is where we stand. Should we take a break and come back? Yeah, let's take a quick commercial break. PG Electroplast Management will be with us on the other side.
More earnings reactions. The next one is PG Electroplast. Well, the first half of the year was quite a washout for PG Electroplast. The company's revenues in the first 6 months of this fiscal year went up by 8%. But in Q3, the company has come back very strongly. Q3 revenues have gone up by 45-46%, with the room air conditioning business making a comeback with an 80% top-line growth. It appears to be a lot of channel filling ahead of the January 2026 energy rating change. Vikas Gupta, Managing Director of PG Electroplast, is now joining us on the show. Thank you very much for joining in. So the star this time was the room air conditioning business, but I understand that was an account of the energy changes which come in and there was a channel filling. So going forward in Q4 or first half of FY27, which is also sort of the peak market for you, what kind of growth should we expect for the RAC business?
Good morning, Rima. Definitely, I would look at like Q3, particularly was marked by the channel filling that has to be done, and the brands were picking up a lot of inventory because of the price increase in the models of different air conditioners based on the rating energy table change. So now that led to the good growth of AC sales in our Q3 numbers. And December was one of the best sales months for us for air conditioners. So we feel going forward in the Q4 of FY26, we are seeing that the inventory is still there in the channel and that inventory still needs to be picked up. And we are just hoping that the summer onset should start in southern India in next 2 or 3 weeks. We are doing our own channel checks and still the market has not opened up. So we remain confident that the market should open up and we should be able to meet the sales guidance that we have given for our company. And we remain optimistic based on the guidance and based on the order book that we have with us from our clients.
Hi, Mr. Gupta. Good to see you. Is there a possibility that you can outbeat this guidance, though? 17 to 19% revenue growth and the PAT number of around 300 crores for FY26?
Good morning, Nigel. So I would like to stick to the revenue guidance that we are given of 5,800 crores. That I will not like to touch upon right now. Because we need to see how the next 3 to 4 weeks will look out.
Got it.
January month was a little tough because there was a lot of inventory which was already picked up in the month of December. So we are hopeful that the going period of next 6 to 8 weeks should be better for us.
And PAT will be around 300 crores by the end of this year. Is that correct?
Yes, sir. Yes, sir.
All right. What's the update on the compressor JV, sir? We have been talking about that in the past. But what is the latest?
So, Nigel, I would say the compressor thing is still moving and we are hopeful that we should be able to close in next, I would say 3 to 4 weeks. We are hopeful and it is still work in progress. There is a positive movement on that. And let us hope that we should be able to close it in next 3 to 4 weeks.
Okay, just give us a sense about inventory because you mentioned that a couple of times that inventory is still high in the system. So could you tell us what is the norm and in number of days, what is it currently?
So inventory we need to look at 2 different levels. One is the inventory at our company level and the inventory in the channel with the trade partners. So when we look at the inventory at our level, the normalized level of inventory in the peak season should not be more than 30 to 40 days.
Okay.
And still we are sitting at almost around 45 to 50 days inventory, which we are expecting that should get normalized in month of February and March. Regarding the channel inventory, yes, there has been a lot of push of the inventory by all the brands to their channel partners before the change of the energy table. So there is a inventory sitting in the channel, and we are just hoping that it gets cleared with the secondary sales picking up in the coming 2-3 weeks.
Vikas, good morning and good to see you again. So stocks up 7%. Just a quick word on commodity price inflation, right? How is that? How are because room ACs, etc. Copper is a big one. Is this going to? We've seen this in previous cycles. It doesn't hurt, and then it suddenly starts to gross margins, etc. start to come under pressure. Your thoughts?
So Prashant, definitely the commodity prices are playing a lot of pressure on the bill of material cost. And we are in active discussion with all our clients for the price increases. In some cases, we have been able to achieve the price increase. In some cases, still under discussion. Definitely, there is always a lag. Whenever there is a price increase coming in, there is a lag, and we are in discussion. So It might put some pressure on the EBITDA margin, for which we have already guided. If you look at the EBITDA guidance that we've given for FY26 is slightly lower than the EBITDA that we were able to achieve in FY25. So we are hopeful that we should be able to get the price increase done with most of the clients.
And these usually happen annually, or it's their...
So the prices that we settle with our clients are mostly on the monthly and the quarterly basis.
Okay.
We are able to revise the basis on some...
But it's a tough market to get price increases, right? Cost of ACs is already higher because of those energy ratings. So there is that affordability issue, and now this. So it's a tough kind of a space.
So definitely the competitive intensity is also improved and increased, and getting a price increase in such kind of environment is always tough.
What was the impact of commodity inflation on your margins? Q3 margins were 8.3%. 9 months, we're at, I think, close to 7.5%.
So, Rima, as I told, if you look at the previous 9 months, the hit on the margin was because of the other issues like the inventory carrying cost. It is not largely because of the commodity. The commodity prices have started moving up in the last 3-4 months only. So that impact is still about to come in there. But we are hopeful that we should be able to get the price increase from the clients.
So how many of your clients, what percentage of your clients have accepted a price increase already? What is the extent of price increase?
So the price increase almost is whatever is the commodity increase is always kind of a pass through to all our clients. And I would say in the case of 60 to 70% of the clients, we have already been able to get the price increase.
Yeah. Vikas, we'll leave it there. Thank you very much for joining us. It's a pleasure having you here and good insights on what's happening with your company and, of course, the industry as well. We wish you all the best. Well, Nigel has walked across to the wall and we're going to talk about stocks, right? Textiles is... what we're going to start with. Nigel, take it away.
Well, that's right, Prashant. Just take a look at this. You know, you have the Nifty, you have the Sensex, you have the Nifty Bank. All of them are dancing away in today's trading session. Also pull up the mid-cap index. That's doing very, very well. And by the way, this is the key number that you'll be tracking today. It's been a while since we saw 2,500 stocks that are advancing and the number of stocks declining only around 275. So within that ratio of around 10:1, it's been a long, long while since we saw something like this. But the sector clearly, as you said, is this textile space. So Wellspun Living, that's a stock that's up and about. You have Gokul Das, that's locked in the upper circuit. In fact, you can't, get some of these names because they are up 18 to around 20% or thereabouts. And pull up a few. Himmat Singar as well as another stock that is gaining in today's trading session. So all the textile pack actually is doing well. And Pearl Global, as we heard the management earlier, they said that this is a significant positive for them. So that's why that stock as well is doing well in today's trading session. Into count, last time I checked, that stock was locked in upper circuit. And a lot of them, they're still locked in upper circuit, while some of them have come off the top. Besides that, other stocks that have some exposure to the United States. ADF Foods, that stock, in fact, is moving in today's trading session. So I think we should get ADF Foods up for you on the screen. Doing pretty well in trade today. Carousel is another stock, smaller name, but they have exposure to the United States. So that's why that name is doing well. And we have the management of Aarti Industries. Well, they said as well, there'll be some relief that will be coming out there. And it helps them in terms of competitive intensity globally. So Aarti Industries up more than 10% in today's trading session. So a lot of stocks doing pretty well. On the flip side, I think one of the big losers today is PB Fintech. Yash is exclusive yesterday. Well, that stock ended lower in trade yesterday. And today, in fact, it's a little bit lower as well. Indian Hotels is another stock actually that was doing well. If I remember correctly, there was Goldman Sachs notes that had come in earlier today, and they're rather bullish, and that's why they initiated coverage on Indian Hotels. It's up close to around 2.5%, but from the recent low, that stock has gained close to around 10%. Net, beautiful trading session. Take a look at the screen. It's been a while since we saw the screen like this, and this number, 2,500 stocks advancing. That's what's making your portfolio feel very, very good. Back to you guys.
All right, Nigel, thanks very much for that. So, yeah, it is looking, it's a good-looking, big, grand screen, and it's a big, grand open for now. Mihir Vora is with us, Chief Investment Officer at Trust Mutual Fund. And we also have Rahul Bajoria, Head of India and Asian Economic Research at Bank of America Global Research. Gentlemen, great to have both of you here. Thank you very much for joining us. Rahul, you're the first, I think, economist that we have on. And so let me start with you. I'll give you the first word. So it's a happy occasion. The deal's done. What does this do in terms of growth impulses, terms of sentiment? The stock market is a powerful indicator of it, and we are seeing what's happening there. But beyond that, on a durable basis, what does it do? And any nuance, any detail you'd still wait out for in that sense? Go on.
Sure. So I think first of all, this particular announcement obviously takes away the months of uncertainty that, both the RBI and the government have been kind of experiencing as far as the growth outlook is concerned. Now, obviously, the one question mark, I have is whether that kind of derails or at least slows down the pace of reforms that we have seen in the last few months. But my sense is that, it could, basically leave India into a situation where, now we have access to large markets globally, from a trade perspective. We obviously have had a fair amount of policy easing, both on monetary and fiscal side. And with the kind of commodity price backdrop we have, we should see a meaningful improvement in the growth outlook. One of the reasons why we did not upgrade our GDP numbers in yesterday's note was we are waiting for some specific details about what kind of import commitments have we made, what kind of sectors have we opened up. Obviously, the fine print matters, but I think it's safe to say that the sentiment improvement and that we see in asset prices this morning is going to be a pretty big fillip as far as the economy is concerned. And so from here on, we think that the momentum momentum on the economic side, which already was looking pretty okay, to be fair, in the last few months, we have seen the growth numbers holding up. That probably gets a further boost from a sentiment standpoint, and that, my sense is, could easily push growth rates above 7% in the upcoming fiscal year as well.
Yeah, there's a growth impulse as well in that sense. That other point, any specific detail still awaited? Have you heard anything? I mean, and people, of course, we'll hear, I'm sure, from the minister here in charge and others as well. But any specifics you're still waiting out for?
So one of the key questions is when President Trump in his Truth Social post had mentioned that India is going to lower its duties to 0%. I think we would want to see whether this is a all-encompassing reduction or are there carve-outs. But I think overall, when we look at the effective tariff rates on India, our back of the envelope calculations were from around 35%. It drops to around 12-13%, and potentially even a bit lower given the changing mix of the exports, towards electronics, which is exempted. So I think net, you will see a meaningful improvement in the competitive landscape of Indian exports. So even if, there are, fine prints and specifics that we are missing, my sense is that the overarching message is that from relative to where we were, say, last week to where we are right now, there is a meaningful boost to competitiveness when you put both the EU deal and the US deal.
That's the export bit, but on the import bit, which you referred to fleetingly, you would expect there will be carve-outs, right? Obviously. I mean, things like agriculture and many other things, despite that post from President Trump.
So I would assume there would be certain carve-outs, but the absolute numbers, I think, have to hold. Right now, the question is, India already imports about $50 billion of goods from the US. So does that mean that we bump it up to $100 billion on a run rate basis, or is this $100 billion on average every year for the next 5 years? Over and above that, I think those are the specific details which are missing. But my sense is that it will be more of a substitution rather than an incremental increase. Remember, India's imports are also going to grow in the next 5 years, which in turn are going to basically place a fair amount of space for India's imports to rise. So I'm less worried about the specificity. I think we have to look at the positive headline impact here in the way policy is going to be framed. And so from that perspective, I think the first reaction is that this is going to be positive for growth. I think what we are basically debating is to what extent is it going to be positive.
So case for GDP upgrades out here in India. Thank you very much, Rahul, for joining in. Mihir Vora, Chief Investment Officer at Trust Mutual Fund, is also with us. Mihir, already 2.5% in the bag so far in the morning. Do you see with this announcement, markets can move up by, say, 10% in the next, by the end of this year, or maybe in the next 6 to 9 months? And what are the big ideas now? Have you been buying this morning?
Good morning. Thanks for calling me on a good day. Yes, it is a big event, and this is one of the key triggers that was holding the market back, and now we have got it. I remember in our weekend show we had discussed 10 days ago about this is the big trigger, so that's happened, and I think yes, 10% is absolutely possible for the markets in due course. May not happen overnight, but the fact is that we are we are catching up versus the rest of the rest of the world in a big way, and we have to, because as we know, as we have seen last year, India was amongst the worst performing markets globally, both in terms of absolute numbers and including the currency. So we have a lot of catching up to do in the currency. We have a lot of catching up to do in the equity markets. And with the underperformance, as we have discussed, the absolute and relative valuations of the market, whether it's in large caps, mid caps, or small caps, have become reasonable. So we're starting off with a low base, very pessimistic sentiment, currency weak. And now with this deal, I think a lot of the FDI, FPI flows, etc., which we are waiting on the sidelines because of this geopolitical uncertainty, will come in. I think the key trigger that we were waiting for is this deal, because it is the key to FDI flows and FII flows, which I think will start coming in a big way now.
Right. Hi, Mir. Good morning. Good to see you. And as they say, right, form is temporary, class is permanent. And hopefully it's our time to shine now after the underperformance you've seen the last 12 to around 15 months. That said, Mir, what are the cash levels you're sitting on? And are you all deploying today? Have you all deployed some money in the last few days? Budget day as well. You know, it seemed there was an over-exaggeration on the downside. And from there, we've seen a good 1,000-point move, actually. What's your allocation strategy as we speak?
So we're keeping normal levels of cash. We had a little higher level of cash, so we are deploying it over the last 2-3 days. And I think it's more about it's going to be more about stock picking, because while the markets are up 2.5%, you do see stocks which had been beaten down, and sectors which had been beaten down on the back of tariffs. They are starting to rebound, and those will create a lot more alpha than the broader market. So it's time to go back to sector and stock picking, and that's what we are trying to do now. The key is that the currency, I think in my view, has been a big factor. And if you see today, the rupee is appreciated by almost 1.2 rupees versus the dollar, and that's going to be the trigger where people now see the geopolitical risk and the currency risk out of the picture. And then if you adjust for that, then the absolute returns in India look very good. So I think we will keep deploying the money over the next few days.
Yeah, 100%. Mihir, a shorter conversation, but punchy and useful to get that quick input from you about where we are at now after this big deal. Congratulations, I can say, as you manage your portfolio, and it'll all be looking good, looking better, much better as compared to where we were yesterday and day before yesterday. Those are visuals coming through right now. And Prime Minister Modi, you can see his top ministers alongside him. You've got Mr. Amit Shah, you got, and others. Rajnath Singh is there, yes, and there are others as well. I think this is an NDA meeting, right, where Prime Minister is. Yeah, this is an NDA parliamentary party meeting, and we'll have to see if there is a comment or two which comes in from the Prime Minister with regards to the trade deal. And I know we most definitely will hear something at some point. I'm not sure this will be now, but those are visuals and general sense of enthusiasm, of course, with what's happened last night. And I think it's kind of sort of, anyone is untouched by it. Those in the market, those outside of the market. I think this is good news for the country in terms of settling this very thorny kind of relationship we've had, this path we've been on for the last year plus or so. Yeah, so that's that. We are getting you reaction after reaction. Markets, we got that economist reaction. We'll get you more corporate reactions as well as we go along. But markets leveling off a little bit now. 630 odd points is where we're at this stage. Well, I just want to play out a quick soundbite. Our colleague Chandra from Money Control got a reaction out of President Donald Trump. This was, of course, in Davos. I just want to play that out. President Trump, of course, saying that calling Prime Minister Modi a close friend and expressing confidence of a good deal soon, which has now materialized.
Mr. President, this is Chandra Shrikant from India. Can you give us an update on the India-US trade deal?
First of all, I have great respect for your Prime Minister. He's a fantastic man and friend of mine. And we're going to have a good deal.
It was a global exclusive, our colleague Chandra from Money Control on that soundbite. Well, we've got Baba Kalyani, Chairman and Managing Director of Bharat Forge, now with us. Mr. Kalyani, good morning. Great to have you with us here. Thanks very much for joining us. It's a good day. And I think the sentiment, of course, is upbeat. It's reflected through stock markets, rupee, etc., etc. But as an industry leader running a large, a variety of businesses, what's your perspective on this? before we get down to implications for Bharat Forge and specific businesses?
Well, as far as industry is concerned, you can't get up any day morning for this kind of news that we've been waiting for such a long time. It's been a very, very positive development, and I'm very happy that we have got everything done as far as India-US trade deal is concerned. It's not just about trade; it's also about relationship. It's also about the future, and I think this fosters very good doings for India. I think congratulations to our Prime Minister, our Commerce Minister for making this happen.
Mr. Kalyani, morning, and thank you for joining us on this historic day. But just to get to the nitty-gritties, for Bharat Forge, what percentage of your sales come from North America or US in particular? And what percentage of your product portfolio will now attract 18%? And how much will come under Section 232, the national security tariffs, where the tariffs would be higher? Do you have any clarity?
Well, we don't have any clarity. Largely, the products that were going for passenger cars were with Section 232. But I believe from whatever I've heard from this morning from the U.S. and late last night, that Section 232 also is under discussion between India and the U.S. to bring it all to a levelized tariff of 18%.
Have you had any... Okay. So what percentage will come under 18%? Sorry, I didn't get that number.
For us, we believe almost everything will come under 18%.
Okay.
And if we look at our exports traditionally used to be in the region of about 500 to 550 million on a revenue of roughly about 1 billion. So 50% of our exports were to North America. 50% of our revenue came from North America. Now our revenues are much higher than 1 billion. So we are expecting our exports to almost go to a level of close to 1 billion. Not all will be from North America, but roughly about $700-800 million will be from North America in the coming year.
Have you had any conversations, sir, with your customers regarding the cut in the tariffs?
Yeah, we have had some conversations. Actually, it's too early to have conversations with customers, but I want to say one thing. We've been discussing with our customers for almost the last 1 year, and I must say that all our customers in North America have been immensely supportive. We are very grateful to them for working with Bharat Forge and believing in us and believing in India to continue their path for long-term global strategic engagement. So I think, this whole idea about resilience in the supply chain has worked out and it's been great, and I think the future will be even greater.
All right. Hi, Mr. Kalyani. Good morning and good to see you in. You're saying that, that ambitious target with regard to the exports and exposure to North America, you want to put a timeline to it?
Well, this is the timeline for 26-27, this coming year from April.
Got it. All right. What about, sir, how's demand on ground? We're getting mixed trends that we're hearing about. So given that now we have this out of the way, is demand good enough?
Demand was a little slow for the last 6-8 months because the commercial vehicle, the heavy-duty trucks, demand itself had gone down by 50%. But all indications are that the coming quarter, we will see almost about a 20-25% rise in our exports compared to the last quarter, and then another 20-25% rise in the quarter after that. So in 2 quarters, I would say the demand will come back to what was originally anticipated as 100%.
Mr. Kalyani, just very briefly, you said U.S. exports will rise to $1 billion and...
No, to $800 million.
To $800 million this year. That is FY 26 or 27?
No. Our total exports will rise to 800 million.
Okay.
From a level of 400 million for this fiscal year.
Okay.
So it'll almost double.
Okay, that is FY 27. And of course, I mean, all of that.
FY 27, correct. Yeah.
Okay. So on the defense side, right, we had a big allocation increase in the budget on Sunday. So any brief thoughts? I mean, what does it do for that business?
I think the defense business will also grow. I think largely it depends on how fast the decision-making process takes place. We have a lot of work in progress on many programs, many platforms. We are exporting roughly about $30 million a quarter in defense, roughly. And I think that will continue. So overall, the defense looks very good. We're also setting up our new facility in Andhra for making new products. So let's see. I mean, right now we're in a silent period, so I can't give you too much forward-looking statements on this.
Yeah. It's a pleasure, Mr. Kalyani. Thank you very much for joining us and being with us on this. As you said, well, you don't get up every day to this kind of news flow. So this is certainly very, very good news. Thank you once again, and appreciate your time as always on CNBC TV 18. Take a quick commercial break here. We've got about 600 points on the Nifty. Manisha Gupta will be with us to focus on commodities on the other side. Stay tuned.
Fly Emirates, fly better.
Welcome back. Let's talk commodities. Manisha is now joining in. Manisha, for so many days, the movement, the action in commodities overshadowed equities. But I guess we can say not today. But what's happening in your world?
Oh, well, absolutely. Today, absolutely not today. But you know what is happening in commodities as well is after that very, very sharp declines that we've seen in the last couple of sessions, we are looking at commodities coming back as well. So whether it is about precious metals, base metals, energy, all of that is trading in the positive. Not so for the crude oil prices. Well, yesterday was a more than 4% of a decline, which is the biggest decline in 6 months that we've seen come in for the crude oil prices. And after that decline as well, 66 is just about holding on the screen. So 4% of a decline in the overnight markets, but it is still trading 8% in positive for 2026 so far right now. Well, a couple of things to watch out for. One is that the US and Iran Iran conversations have resumed. There are positive statements coming in from both sides, and there is an expectation that US and Iran could continue dialogue starting this Friday itself. The second is about the dollar index, where we have seen that one gain up to a one-week highs. Not so good for many of these dollar-denominated commodities, and is the reason the prices are in check. The third thing is about the OPEC meeting. Well, that has come and gone and nothing has been said. OPEC says that for the month of March, for this quarter, they're not going to be increasing production. Remember, in the last year, from April until December, OPEC did bring in nearly 2.9 million barrels per day back into the market, which is 3% of the global demand. Most importantly, though, is the US lowering tariffs on India from 50 to 18%. And of course, that has been done. One of the reasons there is, or one of the clauses there is, that India will stop buying the Russian oil. Well, India will have to buy more oil from US and even Venezuela for that matter. And the numbers do show that India has bought more from US and Venezuela for the month of January there. Take a look at the Russian share really. In FY20, it was 3% of India's imports. By FY25, we saw that number increase to almost 35%. Now, that really has been a concern. But when you look at the overall numbers as well, it has been going down in last few months. There is a report put forth by Reuters which says the highest that India imported from Russia stood at around 2 million barrels per day. That declined to an 11-month lows of around 1.3 million barrels per day in the month of December there. January is expected at 1.2 million barrels per day, and what has already been contracted will perhaps continue to come till the month of March. It could be 1 million barrels per day in the month of Feb, and by March is expected to decline to 0.8. But the thing also is that India oil purchase, Russia, of course, India buys nearly from 41 countries at this point in time, and the OPEC share of India is at 11-month highs right now. Now, markets do believe that as India shifts to other countries, the discounted oil benefit that India has had perhaps will go out, because the Russian oil was cheaper by $5, even $10 at some point in time. Now, India will have to buy at world prices with higher shipping costs, insurance, freight rates, etc., and that will take the prices on the higher side. There's a report from SBI which estimates that Russian oil imports going out and India coming into the markets now will mean that our bill for fuel imports is going to go up for the next fiscal.
All right. Thanks very much, Manisha, for that. Commodities there in focus. Nigel has walked across to the wall once again, and we are, of course, doing these market checks because, well, there is a lot of stuff worth checking out. Nigel, take it away.
Well, Prashant, we started off with a 1,200-point gain. The last time I checked, we were up only around 600 points. So I'm hoping that the Nifty actually can at least keep up to this pace. Hopefully, we go home with gains of close to around 5 to around 600 points or thereabouts. The advancing number of stocks, though, that's still encouraging at around 2,500 stocks. Well, the big boy has come to the party. Reliance Industries, that's been doing a bit of the heavy lifting, and that one's holding up in trade. So when the big boy is up 4%, and I'll tell you what, it's taken off a couple of technical levels, which were at around 1,420. And when Reliance Industries moves, the other one that derives a lot of its value from there is Jio Financial. So that one as well is up close to around 7%. Remember, on the way down, that got harder hit. Now it's rebounding in trade. But there are textile names, and I'm trying to get a few more textile names up for you on the screen. You have Kitex that should come up for you. That's locked up close to around 20%. The other one is SP Apparel, so smaller name. So we have the larger names that are doing well, and now the smaller ones as well up and about. Some more stocks that have some exposure to the United States. Apar Industries, I recall Mr. Desai had spoken to us here on CNBC TV 18. In the last few quarters, though, there has been some slowdown. But however, in today's trading session, Apar Industries is one of the top gainers, up close to around 15% as we speak. Add to the list a Cosmo First that's come to the party. These are stocks that have seen a sharp correction from the top. Even a PCBL, I recall the promoter entity had infused money at around these levels. That stock is well moving higher on rather good volumes. The few more big movers that we're seeing in today's trading session, whether you're looking at Technocraft, Avanti Foods, you have CG Palm, as well as Sterlite Tech. So a lot of stocks are participating in trade. And BSE, what happened to the STT? Well, the stock now is higher than what it was on the day of the budget. It rallied yesterday, and today as well it put on some more weight. Add to the list, Grow, that's the other stock that's up and about in today's trading session. But we need to highlight a few losers as well, because this market has come off the top. So Misho is under some pressure. That stock, in fact, is losing in trade. You have Paradeep Phosphates, that's another stock that's lower in trade. Walchand Nagar continues to see some selling, and PB Fintech as well. But net, the number that you're celebrating is the Nifty. The Nifty is up close to around 2.5%. The Sensex holds with gains as well. And the advance ratio is something that you like. We haven't seen this in the while. Don't let it slip. hopefully we go home with some solid gains by the time we wind up today. Back to you guys in the studio.
Thank you very much for that. Get into a break. On the other side, we'll connect with Shantanu Sengupta of Goldman Sachs and Chandresh Jain of BNP Paribas and continue our discussion on the India-US trade deal.
You want to talk business? Meet me in the On-Board Lounge.
Welcome to It's the Economy. The grammar for the Indian currency and bond markets has changed overnight very sharply after the announcement of the imminent signing of the US-India trade deal. Now, how do the macros change? How much more can the rupee rally? And how does this change the playing field for the RBI at its Friday policy? Joining me to discuss these are Shantanu Sengupta, Chief Economist at Goldman Sachs India, and Chandresh Jain, the FX strategist at BNP Paribas. Gentlemen, good morning. Thank you very much for your time. Shantanu, how does it change the macros? Are you going to up the growth forecast? Are you going to change your view of even bonds, as the amount of money moving out of India will probably decline?
Yeah, I think the clear positive is Indian growth, although the details are unclear at this stage. So what we know is a couple of Truth Social and X tweets, and the release from the PMO has come in only about half an hour back, but it doesn't really have details of how the deal is going to look like. But what is clear is that we are going towards 18% from overall aggregate 50% tariffs. So I think there's some clear upside to growth. We had not baked in the incremental or the additional tariff of 25% because of Russian oil purchases in 2026, because our view was that we'll get a deal done by Q1. But still, on the first 25%, the reciprocal tariff coming down to 18%, there is some upside to growth. On rates, I think this clearly means, in our view, that the RBI is done. I mean, in any case, our view was that the RBI doesn't cut from here on, but we had a risk case where the deal doesn't get done, and in that kind of a case, if growth, if there's a further downside to growth, the RBI could be moving maybe 25 basis points further. We would say now that that's out of contention, because the RBI, we think, now stays on hold. They'll stay on neutral. They will try to do whatever is required in terms of providing liquidity, but no further rate action is what we would be in.
Would the need for liquidity also decline somewhat, Shantanu? After all, there was dollar deposits moving out. That it detracts from the deposit growth. So, is there some kind of more liquidity available?
Yeah, I think on balance, what you would find is that the requirement for incremental OMOs can come down if you have FX inflows or lesser outflows. So whichever way you cut it, if the net FX is positive for the economy, you will just have lesser requirement for either doing OMOs or doing buy-sell dollar swaps.
Okay.
But remember, we still have a close to $65 billion worth of short forwards, which in our view, the RBI will try to knock off and come to a more reasonable number, maybe around $30 billion or $40 billion odd. And therefore, we would expect them, that dollars to not necessarily hit the market, and we wouldn't bake in a large amount of FX appreciation. Okay. But I think the pressure that you've had on the currency and on liquidity, as you pointed out, is going to be clearly lower if you have FII inflows.
Okay, well, that's clearly up Chandresh's street. Chandresh, what are you looking at in terms of rupee levels? One factor will be what Shantanu is saying, the FX swaps that are open for the RBI. And the other factor is that RBI anyway has been against volatility on both sides. So your range and your reasoning.
Sure. Thank you, Lata, for having me on the show. I think the new range now should be around 88 to 89. So we still see more appreciation on the INR now after the deal has done. Secondly, I think once we go to 88, 89 kind of levels, RBI might try to hold some of the dollars which will come to the Indian markets. They will try to increase their FX reserves and decrease their forward book where they are short. So I don't think it's a big rally, which you should expect, but a little bit of more rally towards 88 is it's definitely possible from here on.
Okay. Now, when we were sitting on Friday last at 91.99 and the RBI holding 92, we will take 88 with both hands. But Shantanu, will the Reserve Bank be so worried, or rather, won't it be worried if it goes to 88? Would it not rather keep it a little south, because there is an advantage if the currency is low but stable?
Yeah, our view is exactly what you pointed out, Lata, that we think that the RBI will refrain from an excessive appreciation in the currency, and they will try to either build reserves or knock off the forwards. Is what our view is. Because you remember the first part of the currency adjustment was the adjustment in the RER, which was quite expensive around the same time last year, and you've corrected now to about 95 odd. And our view is that the RBI would not like to let it appreciate meaningfully further, especially at a time when you would want to shore up your external balances. So our view would be that they will try to hold the line around 90 to 92 and not let it appreciate much further.
Okay. Well, today that seems to be the behavior, but of course I'm only picking up from dealer chatter. But Chandresh, did you hear of the Reserve Bank today buying dollars? And secondly, you're betting that FPIs will come. What has changed now is the sentiment. And maybe, in a sense, the export flows because we expect them to resume what could have been, outcompeted. Is there a guarantee that FPIs will come? I mean, they can still find arguments like no AI stocks or expensive Indian valuations. Are you betting on the FPIs returning?
Okay, so two parts of your question. Yes. Firstly, I don't think the RBI is there in the market today. I think they still want to see more appreciation. And I say that with confidence because a couple of things are happening. One, with this, sentiment will change a lot. India's sentiment was very, very weak, especially from the foreign investors. They were worried about currency depreciation. They were worried about Indian equities getting sold off quite quickly. With this, I think both the things can benefit. Some flow will come back to Indian equities. And my sense is that with this, the growth number also look better, which means the earnings will also look better, which means foreign investors would like to have more Indian equities in their portfolio. And then the currency appreciates on the back of that. That's why I said 88 to 89.
Okay.
Secondly, if you observe, the oil prices have also dropped in last couple of days. Gold prices have dropped in last couple of days, which will also help the trade balance. And therefore, it aligns the perfect environment for INR to appreciate.
Okay.
And the last thing I would point is, typically March is one of the month when a lot of corporates repatriate their foreign income to onshore because of the fiscal year end in March. So that will also benefit INR.
Oh, absolutely. Many people were hoping to pencil in a BOP surplus for the Jan-March quarter for the reasons you are saying. But the January behavior has made people change their mind the way in which the rupee fell. Shantanu, what's your sense? Two macro questions for you. What are you betting on in terms of a BOP surplus this quarter and FY27? And secondly, how much does growth improve? After all, we tightened our belts, reduced costs, sought new markets when we were faced with the adversity. This could be payback time. So how much can you add to macro GDP growth numbers?
The growth one first. If you look at the tariffs getting reduced by about 7 percentage points, and I'm saying 7 percentage points because we had not baked in the incremental 25% additional tariffs from the Russian oil purchasers, that would mean anywhere in the region of 10 to 20 basis points directly from the net export channel. But the bigger sentiment change would be boosting, with a lag, of course, the private capex cycle. I think the conversation about realignment of supply chains, investments back in India for those kind of realignments of the supply chains had sort of died down a little bit in the last 2 or 3 quarters. And now that you have the trade deal, I think some of those conversations will come back on the front foot. And, these capital commitments will possibly start coming in, albeit with a lag, possibly in the second half of the year. So you can have a little bit further growth upside from there. Again, we had estimated about 30 basis points drag just from investment uncertainty last year. So some of that will start getting reversed. So medium term, we think this is quite positive for growth. On the first part, which is the balance of payments, we'll have to look at the details of the trade deal to understand what exactly the impact on the current account is. There are some import channels which we will open up also possibly, right? Because you're bringing down your own tariffs or opening up your markets in some of these segments. The second is that if if the oil markets are going to shift now a little bit, that Russian oil purchases from India is going to come down, and we are going to import from elsewhere, the net effect of that is also going to matter. So on the current account, we think about 10 to 20 basis points maybe in terms of upside, and on the growth also we would think anywhere between 10 to 25 or 30 basis points of upside, depending on at what point of time you bake in the upside from the investment channels.
Okay, fair point. This calls for a longer discussion, but out of time, we have a string of guests and analysts lined up. Thank you very much, Shantanu and Chandresh, for throwing more light on how we should look at the macros. 25 to 30 basis points higher GDP when we are standing at some, 6.7 average on the street for FY27. The chief economic advisor is saying 6.8 to 7.2. Now, I think people will move to the higher level of that band in terms of GDP. That's good news. We wrap up on that positive note. Chartbusters coming.
India and the United States seal a historic trade deal which sees a tariff on Indian goods cut to 18% from earlier 50%. The Nifty opens with a record gap up of over 1,200 points, currently holding with a gain of 725 points. The broader market gains in line with key indices. It's green all over the screen.
Sectors that take the spotlight. First up, textiles. Once the worst hit sector with a 50 to 70% revenue exposure to the United States is now flying high. Gokuldas, KPR Mills, Welspun Living all surge as India with 18% tariff is now better placed in comparison to exporters like Bangladesh and Vietnam.
The reduced 18% levy is expected to help auto ancillaries sustain global order inflows and margins as well. Bharat Forge's Baba Kalyani tells CNBC TV18 that demand could rise 25% as soon as next quarter.
Fears of volume and margin pressure set to wane for shrimp exporters. The United States is India's most critical shrimp market, forming 48% of India's shrimp export value in FY25. Shares of Avanti Feeds, Apex Frozen Foods extend gains in trade today.
Chemical stocks, other big beneficiaries of the India-US historic trade deal, SRF, Navin Fluorine, Vinity Organics, all of them have significant exposure to the US, everyone up between 5 to 7%.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam, and as you can see, the screen is green. You have a lot of stocks that are flying around. The Nifty is holding with gains of around 700 points. There was a bit of an intraday dip. We started off 1,200 points higher. We came down to around 550-point gain, but now we're back up with a 720-point gain. Hopefully, Mangalam, we end somewhere in this vicinity. You would like to go in with some big gains today. But the screen is green. It's been a long time since we got a chance to say that.
It's been a long time indeed, Nigel. And who would have thought that on a Sunday where the market was sub 25,000, sub 25,600, 24,600 as well, from the budget day lows, we've seen a near 1,300, 1,400 point rally. And it's just been a Tuesday.
Yeah.
As they say, right? There are some months where nothing happens, and then there are some weeks where months happen. And that's exactly what has happened. And we're not only done with all the triggers for this week. On Friday, we have the RBI policy coming in as well. So all of this just compressed into one short month, one short week.
Well, that's right, Mangalam. It feels like we are playing that long test and we need to dig deep because we need to pull through another 3 days. So let's get straight to a couple of managements.
All right, let's get straight to a couple of managements, and both of them are likely beneficiaries of the India-US trade deal. To what extent and what could the near-term impact be? We do have Chanchal S. Rajura, who's the Director of Finance at Transformers and Rectifiers. We have Rakesh Tiwari, who's the Group CFO, Raymond, joining in as well. Chanchal, coming to you first, if you could give us a sense on what proportion of your overall exposure is to the US, how much of that is to the EU, and at the same time, if you could also give us a sense on whether it will be easier for you to go there now because of the tariff, or there are some other competitive factors as well. Because on the one hand, it's fair to say, okay, numerically 50% has come down to 18%. But in practicality, to be able to entrench yourself in these markets and compete against others is a difficult thing as well. So start with you, Chanchal.
Morning, Mangalam. Morning, Nigel. Actually, I must say that on 26th, we celebrate our Republic Day, and it looks like we are celebrating our Republic Week. First, a good deal with the EU, then a very good long vision budget, and now this US deal. So things are going very good for the country. As far as coming to the industry of us, let me tell you that it's quite a very, very good news for us, because we have been looking to this particular things since long, because the markets are in these particular territories are opening up for the companies like us in good numbers, particularly in the coming years, which is coming up. If you talk about US, at the moment we were holding around 150 million plus inquiries with the US, and we were just going slow because of this uncertainty which is going on. And now we will go full flow basis to close them very, very quickly. And apart from that, for particularly for the company like me, this is not only an opportunity to sell the transformer to US, but also the backward integration components which we are doing is going to be a great thing for us.
Right.
Because US doesn't have these products available there, and so as EU doesn't have.
Right. And with the
Mr. Rajora, clearly, we're getting the point. You're saying that this is a big positive for the country as well as for your company. So great, good on that. Give us a few details. Exports is how much as a percentage of your revenue mix? Around 13%?
Export is around 13%, and out of that, around 25% goes to these two places.
All right, to United States as well as EU.
So net exposure is just about 5%, 5-6% maximum.
No. 25% of our total exports basically is going to these two places.
Correct. So 4%.
We were holding it because of the uncertainties what's going on, and you will see a significant growth now in these two particular things.
Can you give us an absolute number, sir? United States would be how much of your mix? Around 150 crores?
Yes, that's right.
150 crores, and the EU.
Right now, Nigel, I tell you, is about we have around 1,200 crore rupees of inquiries at very high levels going with only United States.
So, Mr. Rajora, what you're telling us is that this number from around 150 crores in the next 3 years or so, do you see it go to around 500 crores or even more than that?
Present inquiry level is that much. It's on a very advanced.
So in terms of revenues, it could potentially go up 3-4 times from here as well, the exposure to the United States?
Yes, definitely. You see that, please understand one thing, in the United States, right? The United States from next year is coming up with a replacement market of the power transformers. And India is the natural ally for that, because they don't have the capacity and they can't rely on the other countries, right? So that is going to be a significant increase, and a company like Trill and company Tyreland like BHEL are going to be the biggest beneficiary for that.
Right.
And second thing is this: the inverter duty transformers requirement is coming up in a huge number from EU and US now for the next 4 years requirement. So these two are going to be the game changer for our industry in years to 3 years to come, and particularly the company like us.
Got it. Right. We'll come back to you, Mr. Rajora, for a little more clarity on that. For now, what we understand is that the opportunity is large, even though the current numbers aren't as big. Mr. Tiwari, let's come to you now. Raymond already has a fair amount of exposure. If you could quantify that, what's the net exposure to the US, and how much is that likely to grow by because of this cut in tariffs? And in the very near term, what kind of improvement in your margins can you see because of something like this?
Morning, everyone. First of all, you have to understand that this is a very structurally positive steps for the Indian manufacturing exporters. And Raymond is well positioned to benefit across two different businesses. I mean, both across lifestyle and also across the airspace business. We have to understand one thing, that this step has given a lot of competitive gains so far your margin and earning is concerned. And having said that, you see the products of Raymond's were always class apart so far the quality is concerned. Now this support in terms of the tariff which has come for almost all the goods other than the goods which are there under Section 232, where the tariff is still 25%, but for other goods it has gone down up to 18%. This gives a great opportunity for us in terms of capturing the white space which is there not only in US but also in UK, which has just.
If you could give us some numbers, Mr. Tiwari, if you could give us some numbers, because you know what we understand is it's about 30-35% of your garmenting business, and the garmenting business by itself is about 25% of your overall revenue. So are we looking at something close to 7-8% coming in from the US?
So as of today, for my total export, which is happening, that is close to around 12% of my total turnover, out of which 6% comes from the US. I mean, the 50% used to come from the US. Now, with this steps, we see a very huge growth, which is happening in terms of the US demand coming up in the next couple of years, simply because not only the reduction in the tariff, it gives a great impetus for us as compared to Vietnam and Bangladesh, where the tariff is still 20%. In case of India, it has gone down to 18%. So that also gives us an impetus in terms of capturing the market in the US in a very big way.
Mr. Tiwari,
we expect that today the market which we are capturing close to 6% of our turnover, that is going to become in the double digit in the near future. We'll go definitely up to 10 to 12% of the total export which you are doing today. That alone is going to come from the US market.
So, Mr. Tiwari, ballpark, you'll be in the vicinity of around 450 to around 550 crores to the United States right now. Will that be a fair estimate?
Exactly, even more than that, close to 500 crore will reach the target of from the United States.
From the United States, and you're saying that in the next 3 years or so, that number goes to around 1,000 crores exposure to the United States?
Close to 1,000 to 1,200 crore in the United States. Yes.
Brilliant.
What you said is right.
And I think in the recent past, you've said that the government dependency to the United States had reduced from around 50% to around 35%. Now, with this deal being struck, hopefully you go back to around 50%. Would that be a fair estimate?
Exactly, because see, from yesterday only, we started getting a lot of the connects have already been activated, and we started getting a lot of what do you call it?
You must have been up very late, sir, if you're already getting the calls in the night.
Exactly.
I think maybe some of his associates were also up late. he was getting an update from there. But Mr. Tiwari,
all-nighter.
US is one. What about EU? You said 6% comes in from the US. How much of that comes in from EU? And what has the change been there for you? How much is the exposure currently? How much do you think that will increase by?
We have a big presence in as a company in Raymond Europe Limited. We have got an office over there. And with this FTA deal, which is coming, it gives us a great boundary line, and it gives us an impetus in terms of growing into Europe also. So today, we have already increased in Europe post this tariff. I mean, earlier, close to 3 to 4% out of the total one was going to Europe, which has increased to 5%. Now we see this with this FTA, it is going to double up in the next 12 to 18 months.
All right, so both US and European business can double for you in the next 12 to 18 months, both of them accounting for over 1,000 crores each in your overall revenue, taking your exposure to both these geographies to about 2,000, 2,500 crores. Take that point.
In the next 2 to 3 years.
In the next 2
to 3 years, that is what we are contemplating.
All right, take that point. Thank you so much for joining us, Mr. Tiwari. Good luck. You've had an all-nighter. I'd suggest you rest and then maybe pull another one in the night where you will get a lot more inquiries coming in, hopefully given the conversations that you're having with them. But Mr. Rajora, just a final question to you. You said that you have 1,200 crore worth inquiry already from the US, while your revenue is about 150 crores. Importantly, what I want to know, you said next year there will be a change in the US power transformer systems, which will open up a bigger market for you, but that will also open up bigger competition for you as well, right? Because now if you're exporting to the US, India is not the only country. You'll have competition from all the other global players as well. What, in your opinion, will make you best placed to get that sort of market share from there? And of this 1,200 crores, how much do you expect for you to win in terms of actual orders?
Please understand that which are the major countries which are producing the power transformers and have got the capacity available. It is India and China, because Korea doesn't have that much capacity available with them. And with the pricing levels and with the production availability, what we have here, India is going to be the natural ally for the US, not only for the transformers, but all capital goods industries. This is going to be the biggest factor on this issue. You need to understand machinery is going to be one of the biggest beneficiaries for this. Competition is going to be really open up, but please understand on the power sector, there are very few players available globally who can produce the quality products and who can supply the quality transformers for the countries like US and not also to the countries like UK, where national grid is also expanding after almost 45-50 years. Okay. So the companies like us is going to be the biggest beneficiaries, or BHEL is going to be the beneficiary for these kind of things. So this stand very well. And apart from that, there is a huge opportunity of the inverter duty transformers is coming up, which is the very significant in terms of the volume.
Right. Okay, Mr. Rajora, thanks a lot for joining in. As you're saying, it's a significant positive, and as time passes, both your companies will gain considerably. Appreciate you joining in here on CNBC TV 18. We'll catch up soon and we'll track those numbers that you give us. For the time being, though, we'll slip into a short break. On the other side, we have another player that's waiting for us. Ether Energy, that one delivered a healthy set of numbers. We'll touch base with the management on the other side. Welcome back. Well, the markets are still holding on to those gains, but a few stocks actually have slipped a little bit from the highs of the day. Some of these textile names have come off just a wee bit from the day's top, but otherwise, it's a good trading session. A lot of stocks actually are moving around. Gokuldas, the larger names actually that started at around 1,000 rupees before the tariffs came, and then they corrected. So they are pulling back, with greater vengeance. A few days ago, we had a resignation at the top at South Indian Bank. So that stock was down, I think, 13-14%. Now that's moved to the high point of the day. Adani Power as well is seeing some kind of traction. So that stock as well moves up. And HFCL, I think they have 20% of their business that comes in from the United States. So that as well has perked up a little bit. Metals have come in for about a profit taking today. We have Nalco that's down in trade. That's down closer to around 2%. Sona BLW Precision as well is now down closer to around 1% from the top of the day. Still holding in the green, but come off a little bit from the top. Geo Financial is a stock that actually continues to move with good momentum. It's up 7.5%. It's a good move out there. We're waiting by actually. We should get the management of Aether Energy who will be joining in shortly. So we'll wait by for that. But Mangalam, a pretty okay trading session. I don't want to slip even more from here. I want to go home with the gain at least of around 650, 700 points. That'll be a good outcome actually. But the number of stocks that are declining from around 150 stocks, it moved to 250 stocks. And now it's at around 350 stocks.
You take that point, Nigel. And, some of the stocks which actually saw a decline after opening have now begun to pick up once again. And some of them who did not open with big gains are now picking pace as well. Something like a PCBL, that's the one that should come up for you, up around 15%, and a fair amount of volumes out there backing that stock as well. Welspun Living, for one, at one point had seen a bit of a decline from the top, but now off the lows is the stock up around 19%, 19.19% for Welspun Living as well. We take a short break, come back, get you more on the other side of Chartbusters. Stay with us.
This is worth sharing. Faster Wi-Fi on the new Emirates A350.
Starting tomorrow, the United States will implement reciprocal tariffs on other nations. It's been a long time since we even thought of that.
The fact that India is the Maharaja of tariffs, it's the highest tariffs in the world, charging on American products.
We therefore weren't doing much business with India, but they were doing business with us because we weren't charging them. Foolishly, we weren't charging them.
We are engaged, we remain engaged with the United States, and at this time, I can't say more than that.
Mr. President, this is Chandra Srikanth from India. Can you give us an update on the India-US trade deal?
First of all, I have great respect for your Prime Minister. He's a fantastic man and friend of mine, and we're going to have a good deal.
Since I arrived in India about a month ago, I have said, and I truly mean it, that the two leaders have a great personal relationship. And that is something that carried this deal forward.
I'm very hopeful of a very good deal with the United States.
What excitement, what drama, and absolute rocker of a night, I may say so. The trade deal getting announced. Nifty, historic open, 1,200 points higher. 1,000 points, 26,030. Nifty Bank, 23,050, which is 60,950.
A historic trade deal that has been inked between the India and United States. If you look at the reaction to that on the markets, it's phenomenal. In just the last 3 trading sessions from budget day lows, the Nifty's traveled over 1,300 points, and it's an all green screen. There are weeks where nothing happens, and then there are days where everything happens. You're watching us here on Trading Hour. I'm Mangalam Malu. With me as always, Ritu and Hormaz. Good morning, guys.
Good morning, Mangalam, and what a historic start it has been after that historic deal that we saw, and the markets continuing to trade on those gains. And we always talk about sector-specific stocks and stocks that are buzzing, but it's pretty much green throughout.
It's the entire sector that's buzzing, and sectors are buzzing. But the corporate conversations, of course, can't lose sight of the earnings season, and we continue with that first up.
We do that as well. So let's get across to Tarun Mehta, the co-founder and CEO of Aether Energy, joining in with what was a very healthy third quarter for the company operationally. We'll be discussing, obviously, the following talking points. One, visibility on margins, whether they turn positive or not, market share target by the end of this financial year, the next financial year, and the impact of higher commodity prices. Let's attack two of them. First up itself, thanks a lot for joining in, Tarun. It's been a phenomenal improvement that you've shown in your operating performance, where the losses have narrowed. The reported EBITDA margins are now just -3%. That's an over 1,500, 1,600 basis points improvement. While this has happened on account of increased volumes, improved market share, and increased productivity gains that you got as well, on the other hand, there is this risk of higher commodity prices that may impact your operational performance. So how do you balance these two? By when do you turn EBITDA positive, reported EBITDA positive, and are you taking any sort of price hikes?
Right. So thanks. Q3 was a great quarter for us. We saw a 50% growth in volumes. We saw 1,500 bips improvement in EBITDA. We also saw a good improvement in unit economics by almost 300 bips. This was honestly firing on all cylinders. Unit economics improved because we were able to improve our ASPs, because we were able to drive costs down. And operating leverage was there. We have roughly 4x our volume in the last 6 quarters. So that's kind of played out beautifully in the EBITDA journey. We've cautioned that there are some headwinds potential from commodities in the coming few quarters. And what we've done for that is obviously kept a lot of our engineering bandwidth focused towards cost reductions, but also keeping a tight control over our fixed costs. We want to fast track our journey towards break even as much as possible, so that even if we absorb all these blows, we land up at a better place and stay on a good path.
So by when do you break even? By when do you break even?
Always difficult to say, and we don't give a guidance there, but we've gotten pretty close, and we intend to stay.
That's the worry, right? You've gotten pretty close, but the other side, the commodity prices have taken you far away from there. So with all things said and done, maybe, not a particular quarter or any sort of guidance, but any time in the next 3 or 4 quarters, is there visibility for you to break even?
So we got a few growth levers ahead of us. First, on price hikes, we took a 3,000 rupee price hike just at the start of Q4 itself. That's with the intention of absorbing some of the potential commodity hits here. I think that'll go a long way. We have further cost reductions coming our way. The biggest one ahead of us this year is coming from a transition to the low-cost scooter platform, the EL scooter platform. So between both of these, we expect a lot of gains ahead of us. So we think we should be well positioned to absorb these hits. Thirdly, our software contribution and our non-vehicle revenues have been on a tear. So we had almost 14% of our revenue coming from non-vehicle sources, a large majority of that coming from software sales. So that's continuing to support our P&L massively. And we think this trend will likely continue, given what we have seen in newer markets, particularly the northern markets, where the trends have been very encouraging.
Right, so just two questions before we let you go. A two-part question, you can give us numbers. One, your market share by the end of this year, where does it stand? It's about 18.8% right now. What's your target there? And by the end of FY27? And non-vehicle revenues, which is about 13%. You said directionally that is increasing. So from about 13%, where does that go on your market share? And your non-vehicle revenues, if you could give us three quick numbers.
So market share, think of this as two different parts of the country. In South, we've been consolidating at 25% market share now for several quarters. And with the current portfolio, we are pretty confident of this. In the rest of the geos, we believe our fair market share lies around 20%. And we've been moving towards that every quarter. So a 20%-ish, 20% plus kind of a market share is our near-term expectation. And on the other question was around
non-vehicle revenue.
Non-vehicle revenue. So that's compounding really well. So there are two parts. Software sales, we've been able to hike prices of a software also consecutively over every year. But service revenues are compounding in nature, given the fleet size. We believe in steady state, there is a 3 to 4% potential improvement from this source. So the current 14% could compound to 17, 18% over the next few years, driving a lot of margin gains for the business.
Tarun, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the quarters as well. The management there of Ather Energy. But of course, the big talking point, of course, the US trade deal and the impact on these export-oriented names, particularly the textile stocks. You look at Gokaldas, Indocount, all of them trading with gains of anywhere between 15 to 20%, and they are holding on to those gains. The one important factor is the fact that despite the fall that these stocks had seen, now this is as of yesterday's closing, from the 2nd of April when these reciprocal tariffs were first announced, these stocks were down anywhere between 10 to 30%. Now comes the deal. The deal will now bring down tariffs to 18%. This is better than the other export-oriented names, Vietnam and Bangladesh, which are still taxed at 20%. India will be taxed at 18%. So it's a positive for all of these textile companies. Now, the story here is that despite the fall that these stocks saw, despite all of these headwinds, retail investors chose to stick around. And if you look at the shareholding patterns as well for all of these companies, most of these shareholding patterns show that the retail shareholding from the March quarter of 2025 to the December quarter of 2025 has only seen an increase, be it Gokaldas Exports, be it Welspun Living, be it Indocount, or be it Arvind. All of them have seen an increase in their shareholding patterns. And there you can see. And even Avanti Feeds, of course, the shrimp manufacturer is included in this as well. That is the one outlier. But other than that, it's mostly seen an increase. Now, if you take a look at the mutual funds as well, they too have chosen to stick around these stocks. Gokaldas is a very heavily fund-owned name. Now, from 30% in March, that shareholding has increased to 35% at the end of the December quarter. And for most other names too, barring Avanti Feeds, the shareholding has only increased, even if it is for the mutual funds. Now, that is the bit that the patience is being rewarded, yes, but there's still a long way to go for these names, because despite the recovery that you are seeing today, all of these names are still down significantly from their record high levels, which was either towards the end of 2024 or the start of 2025. Gokaldas is still down 55%. This is as of yesterday's closing, of course. Welspun's down 43%, Indocount is down almost 50% as well, and Arvind too is down close to 30%. So as of now, the patience is getting rewarded, but still there is a long way to go for a lot of these shareholders.
Yes, the patience is getting rewarded for these investors that stayed put through all of that uncertainty. But let's bring in market experts to get a check of where we go from here after the historic open we've seen and the record rally. Rohit Srivastav and Neeraj Sheth, founder and CIO, 3R Investment Management, are with us now. Rohit, what a historic opening we've had. Where do we go from here? Give us your near-term targets.
So, while it may look pretty rosy to start with, I think we would want to give it some time to see whether the market can really sustain the big one-day swing. Like what we've seen it do is it's opened higher, but it's sold off during the day. And in the process, we did not get past the January high, which was at 26373. So that does keep odds open that, even if the market just stays at the current level for 2-3 days and we are not able to get past that high, that we may sell off again. Now, this is a risk to keep in mind. On the other hand, if we say that, okay, the markets are going to go higher, make a new high, are we ready for a runaway move? So then I would cap a new high at probably 26,650. That is my best case scenario right now, if at all we do that. But not the preferred scenario. So that's an alternate that we'll keep in mind that, okay, if it does happen, a lot of buying comes in, then okay, we can go till there. But the setup as of now, today morning, remains that we did not cross that high. We sold off from there and the risk is still open to the downside, though we may stay at the current level for a day or two because of the underlying event.
Rohit, you mentioned there is a risk, but you need to cross specific levels. That's for the Nifty. But the Nifty Bank has been the bigger worry, right? From record high levels, it sold off almost 2,000 points. Now it is back at those levels as well. Has that chart structure dramatically changed after this one-day move, or does it show a similar risk as to what you see for the Nifty chart as well?
So unfortunately, it also keeps something open. We also call this an inter-market divergence where, one index does not confirm with others because we haven't seen a new high in mid-cap, small-cap indices, which have only retraced 61 to 70% of the fall that they had seen. So they've actually done far more poorly. I would put a level to watch close to around 60,000 and above that, maybe around 60,700 for the Bank Nifty. So these are two key levels above which we would have to sustain to, be able to say that, okay, Bank Nifty is doing something new or something fresh. Otherwise, it would still be just part of what has been going on because we are in the same range we were in December, just a little bit higher or lower.
All right, Neeraj, quickly, your view as well on how you see the markets moving in the near term, whether we can sustain that rally. Rohit was saying we've still not hit the Jan 5th highs that we had seen.
So I'm a little more optimistic. Yes, caution is warranted for sure. But at the same time, if you take a step back and look around the broader factors, so the fundamentals, obviously you have a growth impulse that comes from the trade deal. You have a balance of payment, rupee stability. The only negative is the RBI might go on a pause. But alongside that, from a global markets perspective, you're starting to see a little bit of volatility in the AI trade, the volatility in gold, and the drop in the gold price in the last 3 trading sessions, the oil price decline. So there are a lot of different factors which I would argue have started to turn the technicals for the Indian market. So would it run away from here? I'm not sure, but at least we are in a more positive technical backdrop given the broader factors that are at play today.
And, Neeraj, of course, the bigger question about whether the foreign money comes back to India after, the kind of year that we've seen. And, the next cue from here, Friday, RBI, will announce its monetary policy. What are you expecting from there as well?
So on the FPI side, I do think this at least is the beginning of the pause of FPI selling. And then if the markets continue to perform and we see some revisions or upgrade in earning projections on the back of the better fundamentals, I do think the FPI turn will happen. On the RBI front, given the backdrop, I would expect RBI to go on a pause for at least now and see how it goes before there's more monetary accommodation is provided to the economy.
Rohit, as Neeraj was also highlighting with regards to gold and silver, do you believe that the top is being made for both of them, at least for now, especially considering the volatility that you're seeing in prices, 10% up today, 10% down tomorrow?
More than at least for now is what I believe. The way gold and silver ran up through January has completely changed the outlook that we have for the next 1 to 2 years. So if you ask me this question in December, I would have said, yeah, you'll get a correction, but it's just going to be temporary. At the most, you get 6 months of underperformance and things could pick up. The parabolic rise of gold and silver in January put them at extremes in terms of their market sentiment, their technical readings that have only been seen
at major tops that are often not surpassed for 2 to 3 years. So therefore, what I'm really looking at is a long period of underperformance as far as precious metals are concerned. And I think that is going to have a rub-off on other parts as well. I know there are hopes that, PMs cool off and then we continue to see the base metals pick up, but the entire base metal rally was actually on the back of precious metals. And you don't have an oil market rally yet. So broadly speaking, the whole idea that you are in a commodity bull run, I think is becoming questionable till we get seriously new proof. The bigger rundown to that entire argument would be the dollar itself. I think people got overly pessimistic on the dollar. And that also shows up in the data. The CFTC data was showing one of the largest short positions by non-commercial traders going into the end of Jan. And that has set us up for what we are calling now a dollar rally, or the potential that we've actually turned around or are in the early stages of turning around as far as the dollar is concerned. So we saw a glimpse of that, I think, on Friday and probably a bit yesterday. But it may be something that will continue. In fact, that itself could actually cool off what we've seen as a, not just a precious metals rally, but also an emerging market rally, because the last 12 months have seen spectacular outperformance of emerging markets relative to the US. I know India did not participate in that, and we would really love that happened now that the trade deal is through. But that trade is at its fag end, and we would have to do very quick catch up to really make up for that. Otherwise, we'll just be left, holding the bag over here.
All right. Neeraj and Rohit, thanks very much for joining in with that. Appreciate your views and your time here. We have to slip into a short break on that note, but more on the markets when we return.
Fly Emirates, fly better.
Welcome back. Time to get you a quick check on the macro signals of the day. The markets opened 1,200 points higher, now trading with gains of about 700 points as we speak. The Bank Nifty stays above 60,000, trading with gains of about 1,560 points. That's the markets for you after that historic trade deal was announced. But apart from the markets, the biggest impact that we've seen is also on the rupee. That is appreciated by 1.25 percentage points, now trading at 90.37 compared to yesterday's close of about 91.52 to the dollar. So a lot of, move on the rupee if you compare it with some of the Asian peers. Yes, year to date, or rather, from the time that the tariffs were announced in April last year, it is the worst performing Asian currency. It lost 2% this year. But then again, today alone, we made that gain of more than 1%. And going ahead, if you look at the ranges that various, people have on the street, anywhere from 88 to 89, which BNP Paribas has, one of the lowest in the street, 88, 89 to the dollar. From SPI all the way to 90, 92 from Goldman Sachs. So that's the near-term levels that the street will be looking out for as far as the rupee is concerned. Oil prices, take a look at that. They're also stable. They're noting the impact of production hike being halted from the next month. And of course, Iran and US, that continues to weigh on sentiments. Apart from that, the 10-year yield, now that is going to take its next cues from the RBI policy that comes up on Friday. Currently, slightly lower. You have the 10-year at about 6.725. That's where we're at.
All right, those are the macro signals. Let's get you a CNBC TV 18 exclusive. Speaking to Network 18, Editor-in-Chief Rahul Joshi, Finance Minister, spoke about easing China FDI rules and all the macros. Listen in.
India's trade deficit with China is greater than about $116 billion in 2025. Even though the exports have also gone up, how do you tackle this issue?
That is where I think we are very clear in Atmanirbhar Bharat. We need to have capacities built in India for those essential goods that we import and make sure that we are able to make it in India for Indian market. Even as I say this, we have not restricted the imports of some of the critical machines or equipments or some raw materials which are so important for our industries. So capacities will have to grow, but in the meanwhile you still need, for those very same capacities, imported equipments. So we are doing a fine balancing act in not denying the raw material coming or the equipment coming, because there are some precision tools which you so need when you're going to set up a particular type of factory. We need those to come in here. Sorry. But at the same time, capacities in India will have to be expanded, ramped up sooner, so that our dependencies can come down. But this story is one side of the coin.
Right.
The other side of the coin is market access in China. I was Commerce Minister, and I know in my time also we've been asking for greater market access for Indian goods.
Right, in China.
That is moving very slowly.
So now that the relationship with China is improving, would you consider relaxing restrictions on investments by China through Press Note 3? That would really take the relationship to the next level.
Well, some discussions were happening. I'm not sure where it is reached as yet. Once we arrive at something, I'll be able to expand on it.
Sure.
All right, and if you look at the trends coming in from the F&O space, a solid day of gains. Nifty Bank, Mid-Cap Index, all of them sitting with good gains. One would argue that they're not at the highs of the morning, but well, excesses are out from the morning. And right now, the kind of short positions that are built up will be very interesting to see where the second half of trade will be, because it's Tuesday today. It is also the weekly options expiry. Advance decline firmly in favor of advances. All the portfolios looking wonderful. And, just the budget day low of 24,571 seems so far away. It was just about a session and a half away. If you look at Sunday afternoon, that's where the market hit those levels. So from there, it's been a big gain. The Nifty's crossed the 200, the 20-day moving average as well, and currently very close to the 50-day moving average of 25,829. The FIIs, they are 88% short in index futures. And as we speak, this was as of yesterday, as we speak, both the Nifty and the Nifty Bank futures have seen massive short covering. The open interest is down. So today's data will be extremely crucial. What we have right now, on our screens is the 25,500 call, the 25,400 call, and the 25,300 call. All of them seeing shorts being caught on the wrong side, and as a result of which there is massive short covering. So those options come up for you on the screen. You would see there is short covering. So just watch out for the data today. Post-market will be extremely crucial to determine where all the options and the futures writers have been stuck. Take a short break. Come back. On the other side, the management of AkzoNobel joins in. Markets continue to do well, but we also have a bunch of numbers to address. AkzoNobel shares trading flat after posting a muted set of third quarter earnings. But importantly, if you adjust for the change in the base quarter, you would see that there was a mild growth in their overall performance. Rajiv Rajgopal, who's the CMD, joins us now. Rajiv, thank you so much for joining in. 3 questions. At what level has the integration completed? What's your target revenue and market share and competitive intensity? Go ahead.
Good to meet you and great to be on your show, Mangalam. Thank you so much for having me. I just want to correct that I've got redesignated as the Joint Managing Director and CEO.
Wonderful, yes.
And our chairman is Parth Jindal, and we had our first board meeting under his aegis yesterday. Delighted to be a part of the JSW group. I think me and my team are really now looking forward to being a part of the family and now really getting, I think, the sort of support that we need to win in India. So that's the first. On your question on, what's the targeted market share, how's the integration going? These are very early days. I think I'll leave that for a little longer discussion because at a high level, I think the integration has started going very well. I think, but yet the two teams are running differently. We being a listed entity, we have to make sure that we are within the framework of the rules to operate. And hence, making sure that we keep everything at arm's length is one of the considerations that we have to look at. Nevertheless, in our journey, if you look at the last 3-4 quarters, from the moment that the announcement happened in June, where we had a bit of a depressed quarter, to now, we've really started moving from a slight, what I would call relative underperformance, to now catching up with industry growth. And I'm keeping my fingers crossed and fairly confident of the days ahead. In terms of specific actions, I think decorative paints, as you mentioned, we saw 2% growth. You've got to look at like to like because you've got to take out the powder coating and IRC business, which got moved out, and also a couple of customers which have gone back to the unlisted AkzoNobel powder coating entity. And when you net that off, we had about a 2% revenue growth with about an 8% sort of volume growth, 6% overall for paints and coatings. And I'm fairly confident that now we are back onto the trajectory that we wanted to be. We've started seeing very strong volume growth. 3 things we've done. First, we've looked at pricing very carefully and used basically techniques like conjoint analysis to compare ourselves versus our competitors at a market operating price level and made sure that we were slightly having significant premiums. We corrected a bit to make sure that we get back to our consumer base. Second, we are obviously focusing on innovation to drive brand. And third, of course, we continue to drive distribution in our decorative business. In our coatings business, we've started tying up with marquee brands, including JSWMG, to make sure that we get a lion's share of the entire aftermarket. In our marine and protective and our industrial coating business, we had some challenges in our marine business. We've started getting back to growth, and I'm fairly sure that we've got a robust quarter as we move forward to the current quarter.
Quickly, Mr. Rajgopal, when does the merger with JSW Paints, when does that complete? An exact timeline? And the name change, how quickly do we expect that and what will that be?
So first and foremost, as far as the name change is concerned, we've given it to the minority shareholders. We should complete the voting process in the first week of March. It's a lovely name, JSW Dulux. So once that is done, then we start moving in. As far as mergers are concerned, currently the 2 entities will run for a period of time separately. We'll come back to you with finer details as we progress ahead.
Take that point. Always a pleasure speaking with you. A short conversation, effective one, but we'll have a longer one on the competitive intensity and the way you plan to take your premium market share going forward as well. Rajiv, always a pleasure speaking with you. Take a short break, come back, more on the markets on the other side.
You want to talk business? Meet me in the On-Board Lounge.
Welcome back. Still 750 points higher on the Nifty, and almost 15 odd stocks on the BSE small cap index are currently in a 20% upper circuit as we speak, including Gokaldas Exports, Indo Count, Kitex Garments, Avalon Technologies. All of them having sensitives to the India-US trade deal are in a 20% upper circuit as we speak. What is not in an upper circuit though is Mahindra Life. That is bucking the trend in today's session, down around 4% as an earnings reaction. Another earnings reaction is Utkarsh Small Finance Bank. That too is down around 3% as we speak. And just pull up AWL Agri. Numbers were flashing just a few minutes earlier at the bottom of your screen, just to show if there is a stock reaction to that result announcement. Barely anything. It's still just around 1% higher for AWL Agri. So at least these are some of the names that are not doing very well. And PB Fintech has now become the top loser on the Nifty 500, down around 4.5% at this point of time. And Intellect Design losses for around third straight day, still 2.5% lower after the 2-day sell-off. Now take a short break. Back with more on the other side.
This is worth sharing. Faster Wi-Fi on the new Emirates A350.
Hello and welcome to CNBC TV 18. We're tracking the outcome of the big conversation between Prime Minister Modi and President Trump. This deal has gone to President Trump's table at least 5 times in the last 1 year. He was the man. He was the chief negotiator in these trade talks. And finally, he has signed off on the deal. While an in-principle agreement has been reached, the final modalities will now take place and the deal will have to be documented and notified. Let me now go across to former Foreign Secretary Kanwal Sibal, who has been looking at this issue very closely over the last 1 year. Ambassador Sibal, Donald Trump says India has agreed to buy Russian oil. Our purchases of Russian oil have come down from an all-time high of 45% in our crude basket to 20% in the month of January. It could go down further, but will we completely stop buying Russian oil, as Donald Trump is saying?
Well, I don't think so. Of course, the Reliance has ceased buying Russian oil, and the sanctions are there on the other project that in which the Russians have invested. They have also stopped buying Russian oil. But the Russian oil, which is sold on the spot market by Russian companies which are not under sanctions, can still be bought if the price is right, if the discount is attractive. So I don't think it'll go down to zero, but certainly it has declined and can decline further. Now, Trump has to say this because he has to justify why he has suddenly announced this deal. But you know, in the post that he has put on Truth Social, he talks about reducing the 25% reciprocal tariffs to 18%, but he's silent on the punitive 25% additional tariffs on.
So, Ambassador, on that, we've got a confirmation from the U.S. Embassy. In fact, the spokesperson of the U.S. Embassy has gone on record to say that I can confirm that the overall tariffs come down to 18%. So if it was 50, 25 plus 25, it'll come down to 18%. What I would like to ask you, do you think India's red lines on agriculture would have been respected? Because here you have Donald Trump tweeting to say that India has agreed to buy American at a much higher level, in addition to over $500 billion of US energy, technology, agriculture, coal, and many other products. Do you think these will be only niche agriculture items, or we could have probably given in some concessions on wheat, rice, maize for that matter?
My understanding is that some minor concessions had already been offered on select agricultural products, some based on quotas. So that is already part of the deal, but these are very small and they don't touch the core of our red lines with regard to agriculture and dairy and you know, the interests of our fishermen, etc., etc. So I think Trump is now trying to make himself look good, because in order to justify what he's done, which is welcome, of course, he has to show that he succeeded, that his tactics of deal making by imposing punitive tariffs have worked even in the case of India. As you remember, in the case of Korea and Japan and the EU, he announced massive amounts of purchase by these countries or investments. And in the case of EU, $750 billion of investments, and buying American oil and gas and things like that. So in this case, he's also mentioned $500 billion, but he's covered it up by saying, you know, the variety of things that you mentioned, which includes technology and energy and coal and agriculture products.
Ambassador Sibal, my final question before we wrap this, what do you think finally got us across the finish line? This deal has gone to Trump's table 5 times last year. Trump wanted a conversation with Prime Minister Modi. He has been speaking to Trump as well. But what do you think finally got us across the finish line?
The India-EU deal, definitely. Because, you know, he was using Trump tariffs as a weapon. But what did the Europeans do with India? Reduce tariffs, just the opposite strategy. And I know that the American companies, including the defense companies, were feeling very worried that the relationship was going downhill and it was affecting their business in India. And they wanted this deal to be wrapped up. So the whole thing was becoming untenable. And after this massive India-EU deal, he had no ground left to deny India this deal, because his tactics were not working anymore. And we had signed a deal with the EU, with the UK, and we were negotiating more deals with other countries. So the entire, it was quite clear that India was not succumbing to these pressure tactics, and therefore it was a losing game. And finally, Trump has retreated, but he has retreated in a way where he wants to make himself look good. And therefore, he has unilaterally announced some concessions by India, which I'm sure, and I'm quite convinced when actually the details are announced, it will not be what he has said.
All right. Thank you very much, Ambassador Sybil, for joining us with that great perspective. We're going to take a short break. Lots more on CNBC TV 18.
Well, still 25,850, 2,270 stocks advancing on the index and 270 stocks declining. There are some that are still bucking the trend in a market like today, but we'll leave that to the team of Halftime Report to tell you which are those names. Ritu Mangalam and I take your leave. Thank you so much for watching, and news and updates continue.
The India-US trade deal sparks the mother of all stock market rallies in India, with the benchmark Nifty opening 1,200 points higher. Before some profit-taking trims gains, the advance decline ratio is sharply skewed towards advances.
A phone call between Donald Trump and Narendra Modi seals the long-awaited US-India trade deal. Tariff on a wide range of Indian exports will now drop from 50% to 18%. Stocks of textile, chemical, seafood exporters rally in trade.
Indian industry leaders suggest there may be relief beyond the reciprocal tariffs, with the US imposed national security-led tariffs under Section 232 on metals and auto products also being lowered to 18%.
PB Fintech's board will meet on Feb 5th to approve a QIP for funding an acquisition. Meanwhile, Aditya Birla Capital's housing finance arm mops up around 2,750 crores from Advent as growth capital for 14.3% stake. Both deals were earlier reported by CNBC TV 18.
Hello and welcome to Halftime Report, live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Ekta Batra and Vinny Motiwala. You have to say there are a confluence of factors which are leading to the market rally that we are seeing. Of course, we had budget to talk about yesterday. Today, it's the trade deal. And in a few days, we'll talk about the RBI monetary policy as well. So very, very heavy week. But across the board, it's a big gain that we are seeing. Be it the Nifty, which is up almost 1,000 points as we speak, above the 25,800 mark, or the mid caps, which are up 4%, and that has been an underperformer for a long time. Of course, sector-specific points we'll discuss in greater detail. For now, we came off from the opening highs, of course, but we have continued to remain around that 25,800 mark. Mid caps also above that 59,000 mark. But again, the opening highs, they could not sustain those levels, but I don't think anybody's complaining today.
Nobody's complaining today. It's surely a good day coming in. Everyone was waiting for this trade deal to happen. There was more on the sentiment front as well. So that is also playing out. And obviously, look at sectors. All the sectors today are trading in the green. Realty, financial services, pharma, all of them among the top sectoral gainers. FMCG also is holding on to mild green, but still 0.3% of gain right now, even for the FMCG pack. And advance decline ratio also today, obviously we're seeing in the favor of advances versus declining.
Hi, girls. Yes, absolutely. You know, the initial euphoria might have cooled down, but for the markets, the message is loud and clear that the India-US trade deal was long awaited and is one of the biggest triggers for the market. Yes, currently we do have the Nifty at around 25,820 odd. It's up around 3 odd %. We have the mid-cap index, which is rallied with a gain of around 3 odd %. The advance decline ratio has sustained on the advancing side from the get-go. So currently around 3,400 stocks advancing to around 874 stocks, which are declining at this point in time. No prizes for guessing that we have a whole host of stocks from the entire textile space, which is buzzing around, from the chemical space, all the export-focused stocks which are really taking it on in the stride in terms of the gains that we're seeing. But let's focus on our What's Trending segment on Halftime Report. It is the mother of all market moves today. The markets have surged after New Delhi and Washington sealed that long-awaited trade deal with tariffs on key Indian exports slashed sharply. The Nifty opened over 1,000 points higher before some profit-taking set in. And export-linked stocks that are stealing the spotlight in today's trading session continue to be in our What's Trending segment. Let's go across to Hormuz for all the stocks in focus on the back of this trade deal and how it stacks up.
You know, the theme of this basically is the fact that patience eventually pays off, but there is still a long way to go, even if we still consider today's up move. And I'm talking about both the export-oriented names and a shrimp name, Avanti Feeds, in this list. But before we get to the numbers, you look at as of yesterday's closing, all of these stocks were still down significantly from the Liberation Day of the 2nd of April when Donald Trump first announced those tariffs. Then the Gokaldas exports was down almost 30%, Indocount down around 10. Arvind had recovered most of its losses, so it was down, it was flat. But and if you go further, the big trigger today is the fact that the deal has been announced. The deal has ensured that the 50% tariff that was currently in place for Indian exports goes down to 18%. That makes Indian exports, particularly the textile segment, more competitive compared to Bangladesh and Vietnam, who are still taxed at 20%. That's a big positive for them. And it's also significant because they get around 50 to 70% of their top line from the US markets. Now, talking talking about patience, even during this period of adversity, this period of uncertainty, retail investors chose to stick around with a lot of these textile names. And barring Avanti Feeds, if you take a look at the shareholding patterns of most of these names, be it Gokaldas, be it Indocount, be it Arvind, all of their retail shareholding has seen an increase from March 2025 to December of 2025. Gokaldas exports increased by 1%. Welspun saw an increase. Indocount saw an increase, as did Arvind. So retail shareholders chose to stick around for these names. Same is the case with mutual funds as well. And here too, barring Avanti Feeds, most of these mutual funds have increased their stake in these textile names. So look at Gokaldas Exports, the very heavily fund-owned stock is now at 35% with the mutual fund holdings, was around 30% in March of 2025, and same is the case for most of the other textile names. Avanti Feeds, of course, is an export-oriented name, not textile, but that has seen a bit of a moderation when it comes to both mutual fund and shareholding bit. Now I talk about patience. That patience is getting rewarded today, but when I mean that there is still a long way to go, take a look at this plate. You see that despite this move today, these stocks are still significantly away from their record high levels which were hit somewhere late 2024 and early 2025. Gokaldas Exports is still down 55%. Welspun's down 43%. Indocount is down by half almost. I'm talking about yesterday's closing, of course. So today, yes, there is a bit of relief. There is a rally that's coming in all of these stocks, but still, there's a long way to go before those news highs are reached again.
It absolutely is. But thank you so much for giving us that data. Very interesting moves that we've seen in some of these exporters, which have been in focus since the time the negotiations have been going on. In fact, we spoke with the management of Bharat Forge and Aarti Industries. They're buzzing on the back of trade deal. Let's listen into what they make of this deal that has come by finally.
It's been a very, very positive development, and I'm very happy that, we have got everything done as far as India-US trade deal is concerned. But I believe from whatever I've heard from this morning from the US and late last night, that Section 232 also is under discussion between India and the US to bring it all to a levelized tariff of 18%. If almost everything will come under 18%. Okay. And if we look at our exports traditionally used to be in the region of about 500 to 550 million. On a revenue of roughly about 1 billion. So 50% of our exports were to North America. 50% of our revenue came from North America.
It's a great positive for the sector in general and also for Aarti Industries. For a country, roughly US accounts for 20% of our chemical exports globally. And in that context, $6 billion worth of $6 billion worth of chemicals get exported to US from India every year. So in that context, this reduction from 50+% to 18% will help tremendously. Even for Aarti, as part of our total revenue, 17 to 18% comes from US. So it's also a sort of huge positive for us at Aarti Industries. But I think more importantly, the certainty will help sort of decongest a lot of decision-making that has got hampered in the last 9 months from investments point of view, from future growth opportunities point of view. So overall, a very welcome move and a huge positive for the sector and for the company.
All right, strong moves coming in from a lot of these companies such as Gokaldas as well as Aarti Industries and Dixon Technologies, which is higher in today's trading session. The entire pharma pack also gaining. We need to take a short break on that note, but up next we'll be connecting with the management of Jupiter Lifeline Hospitals to discuss their Q3 numbers. Stay tuned.
Fly Emirates, fly better.
Welcome back. You're still tuned into Halftime Report on CNBC TV 18. Well, great day for the markets, but let's talk about specific companies now. Ankit Thakkar, who's the CEO at Jupiter Lifeline Hospitals, joins in now to discuss the Q3 numbers and not to forget the announcements with regards to medical tourism, which were announced in the budget as well. Ankit, thank you very much for taking the time out. So before we get to earnings, just wanted your quick thoughts in terms of the announcements, in terms of the impetus on medical tourism by the Finance Minister.
Good morning, Ekta. So I think very welcome. As a country, I think we definitely can and must do more on attracting more medical tourists to India from across the world. Today, most of the medical tourists that come to India still come from Africa and the Middle East. I think we have a lot to do in terms of even attracting people from different geographies of the world. And I also think there's a huge potential to, besides modern medicine, also look at Indian medicine for medical tourism.
Okay, but would you participate in the public-private partnership, something that the government is looking at?
So the fine print is yet to be seen. So far, we have not really undertaken public-private partnerships. We have gone fully private. But in spirit, we are fully with the direction.
All right. Well, just narrowing down on your numbers, your volumes were quite subdued this quarter. It was up only around 2%. What impacted volumes this time?
So typically, as I've said in the past, Q2 in Western Maharashtra is a much higher volume season because besides the steady state disease burden of the community that exists throughout the year, Q2 has a much higher infection load. So Q3 typically would see subdued volumes every year.
Okay, so what are you guiding for?
So I think for rest of the year, you're pretty much flat. Q2 has a little bit of a peak and the remaining quarters should not see too much of variation.
Okay. But on the other hand, Ankit, your ARPOPs or your average revenue per occupied bed was quite steady. It was up around 10-odd%. What is the mix like when it comes to, say, complex surgeries, complex procedures? And what are you guiding for in terms of an incremental rise?
So on the ARPOP front, two of our hospitals, I would say, are mature now, Thana and Pune both. The ARPOP in these two hospitals should pretty much grow in line with inflation. The Indore hospital still has a couple of more years of growth left in it. So in the Indore hospital, we should see a little higher than inflation ARPOP growth on account of complexity of services improving over the next couple of years.
You also had your Dombivli hospital start, 200 beds. I think it was ahead of schedule as well. So congratulations on that. But what are you expecting in terms of targeted occupancies? And do you think that's going to weigh in terms of your margins in Q4? And if so, how much?
Yes, thank you. I think it was a phenomenal effort by the team. We were able to deliver the entire 500-bed infrastructure ahead of schedule in just 24 months. So that was a great achievement, I think, by the whole team. On the operating side, I think next year or two, you should see a little bit of drag coming on account of Dombivli. Year one end should be a little bit of EBITDA negative, and year two end should break even or turn positive. That is what we are hoping for.
Okay, all right, Ankit, we're going to let you go on that note. Always a pleasure. Thanks very much for joining in and speaking with us. So that's Jupiter Lifeline. That stock up around 1-odd% in today's trading session, saying that they need to look at the fine print of what was announced in the budget when it comes to public-private partnerships over in the hospital space. We'll take a short break, but in our Network 18 exclusive, we will bring you excerpts from the Finance Minister's first interview post-budget after a short break. Stay tuned.
Welcome back to Halftime Report on CNBC TV. 18 Nifty manages to still hold on to the 25,800. Above that mark is what it's trading at. But let's move on. And the big newsmaker from last evening, Finance Minister Nirmala Sitharaman defended the budget in her first interview after presenting it in a wide-ranging interview with Network 18's Rahul Joshi. FM spoke about the hike in tax on futures and options. Here are some of the key excerpts.
The one thing that you did this time, which has become a subject of conversation, the markets also reacted, was increasing STT in the derivatives segment. And I've heard the comments by your secretaries who say that it was to curb rampant speculation. Could it have been done differently, by managing margins or contract sizes? And was it a prudent thing to do at a time when the global sentiment is the way it is and the markets are also on a weak footing? How do you react to this?
There are many observations that you're making on which opinions can differ.
Yes.
There are people who within India comment saying India's markets are overpriced. I'm not even getting into that debate.
Sure.
The Revenue Secretary made it absolutely clear it is not for revenue considerations that we've done this.
Yes.
It's not on all STTs.
Yes.
We are only touching on futures and options.
Yes.
Cash is not even touched.
No.
So it is the speculative tendencies. And in fact, the Ministry of Finance has received several parents, elders who call us and say, are you going to sit and watch people lose money? And one of the studies showed that 90% of people who've gone into futures and options have lost money.
Yes.
Of course, the market regulator will also do his or her bit. The institution will do its bit. So we've only tried bringing in a deterrent where speculation is rife. We are not touching the market. Other STTs are not being touched.
Welcome back. It's a green looking screen, but underneath some stocks which are under pressure. For instance, we have PB Fintech, which is down 5% after 6% downtick yesterday. Fundraise plans for some acquisition. On the back of that, there is some fall on that one. We also have Misho, which is down 5% as we speak. Varun Beverages is the stock on our radar as well. Just reported numbers, so that stock too reacting to the numbers that were just reported. That is doing well, by the way. But the big story remains the India-US trade deal. Let's get in Kirit Bhansali, Chairman, Gem and Jewelry Export Promotion Council, and Manisha to discuss what happens with the sector now. Manisha and Kirit, over to you.
Thank you so much for that. Mr. Bhansali, thank you so much for joining in as well. I've been talking to you about various FTAs and BTAs and all those travels that you have been doing with the PM. And this is something that you've been waiting for a very long time. I remember our last conversation when you told me this is the quarter, Manisha. It will come in this quarter. It has come.
This is the second time, Manisha, we are celebrating Diwali. Second time. It's really joy moments for my sector. Everybody is very happy. Since morning, I'm receiving so many calls. It's a joy moment for all of us. As you are aware that we have seen decline in export in US with high tariff. It's a big relief for the entire sector. We are so happy. And I must congratulate our Honorable Prime Minister, Sri Narendra Modi ji, our Commerce Minister, Sri Piyush Goyal ji, Jai Shankar ji, and Finance Minister Nirmala Sitharaman. This is the result of their tireless effort, day and night. You are aware, Manisha, how many meetings they've done with US counterpart, with different time zone. When I was speaking to Commerce Secretary, Rajesh Agrawal ji is involved directly from in the deal right from first day. So he has so many sleepless nights.
I'm sure.
Today, I spoke to him also, and we all are celebrating this great moment.
Absolutely. Mr. Bhansali, we do understand that the US is the largest market for India when it comes to gem and jewelry. I would love to get two numbers from you. One, from April to December, when we talk about exports to US, what is the kind of declines that we have seen, and what is it that you're working on right now?
So if I describe in a segment-wise, we have seen 60% down in loose diamond and overall decline 44%. It's a huge decline, huge decline.
Mr. Bhansali, now that you've done so many more FTAs as well, I mean, you've found opportunity when the US market was not working. We've seen UAE gain up for you, UK, you've been working on Australia, you've also been working for European Union for that matter. What is it the new financial year looking to you now with all of these markets on with you and the US markets also opening up?
Manisha, let me recall my one meeting with one-to-one with Honorable Prime Minister at his official residence, where he has clearly stated us that the government only cannot do everything. All the business leaders will have to come out from the comfort zone. All the EPC will have to work hard. This tariff, how much time it will take, it is very uncertain, difficult to say, but we will have to explore new market. And in that process, let me say to you that in spite of decline in US, we have maintained that 19 billion target till November.
While we are all
action given by our Honorable Prime Minister,
sure,
every business leader will have to come out from the comfort zone and work hard towards Viksit Bharat.
Oh, yes. We do understand, Mr. Bhansali, that all of us are awaiting the detail of this agreement. The notification and details is something that all of us would want to look at. But what is it that you are hoping to see in this trade agreement?
See, I'm waiting for the final outcome. But I'm hoping that loose diamond and jewelry will be zero, as our ministry and our Commerce Minister has worked very hard. And we have received some support from Washington, DC also. So wait and watch. I'm crossing my finger. It will take another 1 week time or 10 days time for the final clarification. But with 18% also, the entire sector is in very much relief, very much relief.
Mr. Bhansali, I do understand that a lot of Indian companies, listed and not listed, have been opening their stores in US. The expansion work is ongoing. With this agreement now going through, are you looking at more and more Indians exploring US, in sense of business there?
100%, right from Tanix to Malabar to Kalyan, everybody is seeing a huge market. Retail sector in US is, if we talk about, I said to you in past also, there are 70,000 retail outlets already working in US. with this relief, I'm sure that our retailers will open the door.
How are you looking at the other markets performing as well? Because there are other FTAs also in work. Are you looking at overall growth going forward? I mean, any number that Council has been able to come up with on how much will US recover like, and what are you looking at in sense of various other countries?
I'm looking forward, Manisha, that we will bounce back definitely. Whatever in 2023-24, we will achieve this figure in 2026 for sure. And I'm hoping that because this inventory in US is at the lowest, so there will be huge demand, and 2026 will be a very good and very positive year for the general sector as far as the US is concerned.
All right, so the US inventory for jewelry is also at the lowest levels, and the demand from India, of course, is going to be quite positive. So absolutely a very, very positive time for the Indian gems and jewelry as a segment. Mr. Bhansali, as always, thank you so much for joining in.
Thank you so much, Mr. Bhansali, as well as Manisha, for taking us through that conversation as well. One more sector which is steering the India-US trade deal as well. But on that note, we're going to slip into a very short break. We'll continue our discussion on India-US trade deal and also connect with Neelkant Mishra of Axis Bank. Stay tuned in.
Welcome back. Well, for the markets, we have the Nifty, which is up around 2.8%, the mid-cap index, which is up around 3% at this point in time. Just want to point out specific stocks. So Adani Enterprises is seeing good gains. It's up around 11.5%. But let's move away and talk about one specific company which is in focus, that is Spark. Spark, which is basically Sun Pharma's R&D arm, and there's news around that where the US drug regulator has granted priority review voucher to Spark, which is basically for the approval of one of their drugs which is used for neonatal or children's pediatric seizures. Now this PRV, which is priority review voucher, allows the FDA faster review for a drug, and it's transferable. So it can be worth around $200 million if in case Sun Pharma sells it, and that equals to around 40% of its market capitalization. So that's the reason why you're seeing Spark actually sparkle in today's trading session. We'll take a short break, but up next we'll get you that continued coverage on the India-US trade deal and that promised conversation with Neelkanth Mishra of Axis Bank.
Welcome back. Our special coverage on India-US trade deal continues. My colleague Prashant Nair joins us, and we are also joined by Neelkant Mishra, Chief Economist, Axis Bank, and Head of Global Research, Axis Capital. Prashant, take it away.
Sonal, thank you so much for that. Neelkant, thank you very much for coming back on CNBC TV 18. You know, as they say, when it rains, it pours, right? Budget, trade deal, and what's next? I don't know. But let's just, this is a happy moment, happy occasion, long delayed, and it's finally come through. And the shape and form that it has come through in, which is 18%, and we've spoken with, you know, market participants and economists and trade and otherwise, this is better than what many of our competitor exporting countries have. Your first 2 or 3 sort of, reading of what has been announced, and how durable is the impact of this going to be on the real economy and, of course, on financial markets?
Look, I must say that I think the removal of this overhang is a very important step. I think as the public pronouncements from the leaders have suggested, these are 2 very large economies, 2 of the largest democracies. I think more than the dollars that start flowing because of this, I think the symbolic impact of this is extremely important, is very high. I think the removal of the overhang is very important, specifically for sectors. Now, beyond that, I think the economy had already started to adjust to the 50% tariffs in the sense that overall exports had in September to November 2025 had actually grown faster than they did FY 22 to 25. As you know, there are many sectors which are exempt from IEEPA tariffs, electronics, pharma, petrochemicals, etc. So those have been growing very well anyway without this deal. The commodity exports, like say shrimp, they were anyway there was trade diversion, meaning that if the US market was shut, they started selling to China and Japan and Europe. There were sectors where I think there was some transshipment also starting to happen. And by and large, the tech side FDI had also been happening. So even before the new ambassador announced that India was going to be part of Pax Silica, the investments from the US hardware tech names from India were actually quite robust. But that does not mean that the deal has no value. There were sectors like gems and jewelry, apparel, auto components, where there was very visible impact of the 50% tariffs. I think for the businesses and the employees of those businesses, I think this is a big relief. What it also allows the businesses on both sides to do is now start planning for non-tech FDI. So on the tech side, it was very clear because it's not subject to IEEPA, as well as it's very hard to compete against China without India. But on several others, I think the FDI, the non-tech FDI, this does open the door and reduces significant uncertainty. The last point on INR, the sentiment on INR, remember that, unlike say a bond or an equity, the currency actually has no anchor, so there are no earnings, there are no book value, no coupons to value it on. So sentiment, sometimes the currency falls because everyone thinks it is likely to fall. This is a very welcome move. I think it boosts the currency, provides it much needed stability.
Yeah, no, absolutely. You know, on the textiles, marine products, gems, jewelry, etc., how quickly do you think order inflows will turn towards Indian exporters?
Look, the biggest season of the year is the holiday season. So starting from Thanksgiving in the US, that is, in the Thanksgiving for April, for Thanksgiving and ending with Christmas. There are though 4 seasons, and every season there is a refresh cycle, then there is a discount cycle.
Right.
So it may be too late for the spring, but maybe for the summer, autumn, and winter, maybe those can actually still be in play. And that should be, so maybe 3 months, because anyway, every 3 months there is a refresh.
Yeah. Neelkant, the other areas, right, which is the services exports and people movement to the US, where there were lots of concerns whether there will be some protectionist measures which will be imposed at some point in the future. That idea was thrown around. You think that also goes away now with this deal?
Yeah. So anyway, I mean, those were irrational fears to start with. You look at the fact that services exports from India have been growing in double digits in dollar terms. And with the changes announced in the budget, where the safe harbor clause has been extended, it looks very nerdy and technical. But just think about a foreign firm wanting to set up a GCC in India, and I think to reach 2,000 crores of revenue, which is now the upper threshold, it'll take several years. So for several years, they don't need to bother about a tax authority so long as they're willing to disclose 15.5% as the markup in India. I think this just accelerates that process. And so that fear was, I think, unwarranted and misplaced anyway. But it's very unlikely that there will be changes on H1B and all that, because that is politically sensitive within the US. So the MAGA crowd will not like it.
Yeah. The rub-on effect of this deal on what the reaction we're seeing on equities, we'll have to see how durable this is, and then the wealth effect sentiment-wise on the broader real economy. You think it could be meaningful? No.
See, you see, if the 50% tariff was not that negative to start with, remember, it was $85-90 billion before. Of course, the very fact that there will be relatively less tariffs is helpful, but nearly half of that was exempt from IEPA, the IEPA, the reciprocal tariffs, and the penalty, the punitive tariffs. And there is a very high likelihood, in my view, that the IEPA tariffs will be declared as unconstitutional. In which case the US government, through a whole range of statutes, can decide to levy the same tariffs again on every country. So very likely, given how much revenue they're collecting, it will be in this 17-18% range. So at least there is tax certainty now, and we don't have a big disadvantage. But to say that it is going to really boost, I don't want to sound like a wet blanket on what is actually a very positive day. No,
I take that, the point is that if it didn't hurt in a big way, why should it help? That's your point, right, Nilkant?
Yes.
But the point is, just to counter, it's like, if your salary is 100 rupees and it doesn't, you're used to 100 rupees, it goes to 200, you're used to 200. And incrementally, it has to go up from there, right? I mean, so I'm just saying, index is at wherever it is, and we're used to it. So I'm just saying, if the FI is done,
this is incrementally positive. Yeah. This is incrementally positive, and I said the biggest, I think, positive is on the currency. And given how I think the volatility in the currency market had started to seep into the money markets, and through it in the overnight lending rates, the CDOIS spreads, the fact that was also then starting to show up in bond yields. I think all of those risks then take a backseat. And all in all, see, this is a very important overhang being removed.
Absolutely.
For those of us tracking the tech sector developments, the fact that all of this drama was unrelated to a more strategic break from India. That's not a positive surprise, but for many who actually thought that perhaps in the attempt to get closer to China, the US was going to sacrifice India, I think for those people at least, this is also a very welcome development. They should reassure them.
Yeah. Nilkant, just last thing, 30 seconds. There is no, this is it, right? There are no nuances, detail, etc., which will throw us off in the coming days, right? Because the full agreement will have to be, but there won't be that many white spaces in that sense. Otherwise, they wouldn't announce it like this, right?
Look, again, I don't want to sound like a wet blanket, but if you think that a trade deal is a trade deal, you talk to the Koreans and the Canadians, as some people have been tweeting about. See, and even the fine print of the executive order, we haven't seen the executive order yet. The details on the Indian side, of course, the deal is signed, it's effective, but I doubt that many concessions have been given on agriculture from India's side. Most of the things we saw in the budget were pretty much the adjustments that needed to be made. But these things can be volatile. I mean, we know how the U.S. administration has been changing deals on the fly. So it's a good move. I mean, I don't want to sound too negative on a good day.
You are sounding not negative, but you're sounding a little cautious. And
because I don't think it is that important. I think for the economy, if you are able to get a rate transmission going,
yeah,
I think
that'll do the job.
happens in these deals is actually far less important than that.
Okay, well, everything helps, right? Little bit. So we'll see. Thank you very much, Nilkan, for joining us. Great conversation as always, and appreciate your time here on CNBC TV 18. Well, I think we'll say goodbye on this program, but we'll have business lunch, which will pick up on the action in just a bit from now. Stay tuned. Markets, of course, looking very good.
Starting tomorrow, the United States will implement reciprocal tariffs on other nations. It's been a long time since we even thought of that.
The fact that India is the Maharaja of tariffs, it's the highest tariffs in the world, charging on American products.
We therefore weren't doing much business with India, but they were doing business with us because we weren't charging them. Foolishly, we weren't charging them.
We are engaged, we remain engaged with the United States, and at this time, I can't say more than that.
Mr. President, this is Chandra Shrikant from India. Can you give us an update on the India-US trade deal?
First of all, I have great respect for your Prime Minister. He's a fantastic man and friend of mine, and we're going to have a good deal.
Since I arrived in India about a month ago, I have said, and I truly mean it, that the two leaders have a great personal relationship. And that is something that carried this deal forward.
I'm very hopeful of a very good deal with the United States.
What excitement, what drama, and absolute rocker of a night, if I may say so. The trade deal getting announced. Nifty, historic open, 1,200 points higher. 1,000 points, 26,030. Nifty Bank, 23,050, which is 60,950.
This is positive from a sentiment point of view.
The markets was lacking a catalyst, and this certainly comes as a catalyst.
The India-US trade deal sparks the mother of all stock market rallies in India, with a benchmark Nifty opening 1,200 points higher before some profit-taking trims gains. The advance decline ratio is sharply skewed towards advances.
A phone call between Donald Trump and Narendra Modi seals the long-awaited US-India trade deal. Tariffs on a wide range of Indian exports will now drop from 50% to 18%. Stocks of textile stocks, chemicals and seafood exporters are rallying.
Indian industry leaders suggest there may be relief beyond the reciprocal tariffs, with the US imposed national security-led tariffs under Section 232 on metals and auto products also being lowered to 18%.
PB Fintech's board will meet on the 5th of February to approve a QIP to fund an acquisition. Meanwhile, Aditya Birla Capital's housing finance arm mops up 2750 crore rupees from Advent as growth capital for a 14.5% stake. Both deals were earlier reported by CNBC TV 18.
Finance Minister Nirmala Sitharaman, in an exclusive chat with Network 18, says she will be focusing on divestment and the budgeted target will be met. She also clarifies that STT was levied only to curb speculation and the government is not ignoring the rupee but taking a realistic approach.
It seems like the night has never ended. It's still continuing from where we left off from yesterday. You're watching Business Lunch. We're coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Horvaz Patakia. With me as always, Arundhati Ramanan. Arundhati, good afternoon.
Good afternoon, Horvaz. Hi, guys. You know, we started with the budget this week. Now we have this big trade deal, and then we've got the monetary policy to look forward to. But what a day. Nifty opening over 1,000 points higher. Coming off those highs a little bit, but nothing to complain right now.
Why would you complain? Yes, 700 points higher. You don't see that every day on the index, right? As a 1,000-point move, although was the biggest in history in absolute terms for the index, still managing to hold that 25,800 mark as we speak. And nobody's really talking about the fact that today is the weekly expiry of the Nifty. That is usually the big talking point on a Tuesday. But the big talking point today is, of course, the trade deal, and that's showing up on the market as well. Now, you know, the Nifty Bank as well, that was the one that was leading the laggards over the last few days. And the Nifty Bank, after the kind of rebound that it has seen, 1,500 points higher now on the index, above the mark of 60,000. We spoke to a lot of experts earlier in the day, and they've mentioned that the 60,000 mark is going to be a very important one for the Nifty Bank. Just a couple of sectors, of course, the textile names continuing to have that 20% upper circuit, the Gokaldases, the Wellspuns and the likes continue to trade with gains. Then just pull up Zydus Wellness. That is an earnings reaction that has come in just a few minutes earlier. The textile names, of course, 10 to 20% higher, but Zydus Wellness reported a net loss this time around compared to a profit last year, although the operating performance though was stronger on a year-on-year basis. But the stock has slumped to the lows of the day. In a market like this, when almost everything that you see is in the green, The Zydus Wellness is down 4%. And the other one that's not in the green is PB Fintech. It's down around 5.5–6% on last check. The board meeting on the 5th of February to consider fundraising, it's 5% lower there as well. So there's plenty of red, plenty of green actually, some red as well today.
Very little red, but lots of green. And those sectors, so many sectors doing well. As Hormas pointed out, chemicals, all of those export-facing stocks doing really well. On top, leading the pack is that realty pack, which is doing really well in trade today. All of those stocks in the green. We've got even pharma, we've got the auto stocks, all of them doing well today. But beginning with the top story of the day, after a long wait, India and the United States have finally agreed to a historic trade deal. The United States will cut its tariff on Indian goods to 18% from 50% earlier. The tariff on India is the lowest amongst emerging market peers at 18% and significantly lower than that of China, which endures a tariff rate of 34%. The United States ambassador to India, Sergio Gore, also told us yesterday India would also stop buying Russian oil. Also hear out what the Commerce Secretary had to tell us last night.
We remain engaged, very positively engaged, and it's progressing very well. The two frameworks are still in place. The larger framework is going to take time because US is a big economy and a larger, deep, wider FTA will always going to take time. But the one which can be done in the short run is the one which is an early harvest, can address the reciprocal tariff bit, is also getting shape. When it will happen, how fast it will happen, these are the questions I think. I'll not put a date to it, but we are hopeful that we should get it sooner than later. One of the key discussions in this is how we are able to align our tariffs on both sides to see that we work towards a more balanced trade between the two nations. So that is going to be the core of whatever we achieve in the first.
And here's what market veterans have to say on the deal announcement and its impact on the markets.
I agree, Nigel. I think the markets was lacking a catalyst, and this certainly comes as a catalyst. In fact, I jokingly say that people had just stopped even talking about stocks. It was all about gold, silver, and I have never seen phones not ringing after a budget the way this time it was quiet because no one was just interested in knowing what to buy. So I think this comes as a very, very pleasant surprise. It helps I would say the mood, which was the most important. It definitely helps the economy, the corporate profit growth, and hopefully the currency should also respond. So I think all in all, the positioning is light. FIs have been short, has been seen by the futures, open interest. Position on the domestic side, at least on the speculative side, is low. And expectations after the budget fall were also very, very low. So this definitely comes as a big, big catalyst.
Undoubtedly, Prashant bhai, this is positive from a sentiment point of view. There was a hanging sword on Indian equity rates and currency market because of uncertainty over US tariff deal. Obviously, we stimulated our economy. So from a growth point of view, there was no negative impact. But there were sectors like textiles, aquaculture, handicraft, gem and jewelry, which were getting impacted. Now, this first boosts sentiment. Second, it provides support to sectors which I mentioned. And finally, Prashant bhai, we have to go through the details. Devil is always in the details.
Completely understand the way markets are behaving. People must have been short or there is a lot of excitement. But I would expect, just like it did not have too much impact on the downside, I don't think there is any durable, meaningful impact on the upside either. But it's a very good thing to happen. See, foreigners have been underweight India for three simple reasons, in my opinion. One was India was pretty expensive 18 months back. Second, earnings estimates were very aggressive. We were simply extrapolating the faster growth in earnings coming off the COVID lows. And finally, I think India was missing the popular narratives of these times, which is AI or semicon, etc. And these were the reasons why we saw so much selling. I think with the currency where it is, with the valuations having come off, with so much selling behind us, I think I would be a little more optimistic on foreign flow.
So which sectors are in the spotlight? once the worst hit sector with a 50 to 70% revenue exposure to the US, is now flying high. Gokuldas, KPR Mills, Welspun Living all surge as India, with an 18% tariff, is now placed better versus exporters like Bangladesh and Vietnam. The managements of Raymond and Perel Global are also bullish on the US business. Listen in to what they had to tell us.
Of today, for my total export, which is happening, that is close to around 12% of my total turnover, out of which 6% comes from the US. I mean, the 50% used to come from the US. Now, with this steps, we see a very huge growth, which is happening in terms of the US demand coming up in the next couple of years, simply because not only the reduction in the tariff, it gives a great impetus for us as compared to Vietnam and Bangladesh, where the tariff is still 20%. In case of India, it has gone down to 18%. So that also gives us an impetus in terms of capturing the market in the US in a very big way. So we expect that today the market, which we are capturing close to 6% of our turnover, that is going to become in the double digit in the near future. We'll go definitely up to 10 to 12% of the total export which we are doing today. That alone is going to come from the US market.
News that has come in the last night. Definitely, we look forward to the growth both in the top line and bottom line in India as well. Bottom line, this is a kind of advantage that we are giving to the customer just to maintain the business in India. So our customers give us the choice. Either you make this production from the other countries and, which is more of the same balance. Everybody within the 19-20 range of tariff. Now, to compensate that out of India, we were giving this 50% discount. So that, I think, goes away. So I don't think it's like passing off. It was not a sustainable thing to pass off to any customer. So I think this will definitely come to the bottom line.
The textile stocks doing well for themselves today, continuing to trade with gains of 15 to 20% as we speak. Now, the reduced 18% levy is expected to help auto ancillaries sustain their global order inflows and aid their margins as well. Now, we spoke to Bharat Forge's Baba Kalyani, who told us that demand could rise up to 25% in the next quarter. Listening to what he and the management of Ramakrishna Forgings had to tell us earlier in the day.
It's been a very, very positive development, and I'm very happy that, we have got everything done as far as India-US trade deal is concerned. But I believe from whatever I've heard from this morning from the US and late last night, that Section 232 also is under discussion between India and the US to bring it all to a levelized tariff of 18%. If almost everything will come under 18%. Okay. And if we look at our exports traditionally used to be in the region of about 500 to 550 million on a revenue of roughly about 1 billion. So 50% of our exports were to North America. 50% of our revenue came from North America.
On that note, it is time for us to head into a short break, but more news and updates coming up on the other side. Stay tuned.
Fly Emirates, fly better.
Welcome back. The markets are doing what they are after the announcement of the trade deal, but the other major reaction has come in the rupee, and that is, of course, after it strengthened by over 1%, buoyed by this trade deal between the two countries. Dealers, however, say that further gains will come only after one sees foreign funds bringing in the dollars and buying Indian equities. Lata is here with more on this. Lata.
Yes, first the number, the rupee opened 1.2% higher. In number terms, it was about 90 rupees 40 paise to buy a dollar. Let's remember it closed overnight, that is on Monday night, at 91 rupees 52 paise. So, you know, it was a gain of over 1 rupee 20 paise when it opened. The point is, you know, New York trades, what we call the NDF trades, offshore market trades, that had already started reacting to the news overnight. And there we had seen 90, 60, 90, 50. So it was expected to open higher. And even on Monday, we had seen the rupee trade or end the day a good 0.5% higher. And people were saying it's not because of RBI. There doesn't seem to be dollar demand. It looked like already the short rupee, long commodity currency trade was shifting. And that's why the rupee is strengthening. We now can realize that some people in New York probably knew or were smelling that the deal is coming. But the important point is the huge recovery of the rupee was unaided by the Reserve Bank today. Dealers said they were not in the market trying to lessen the appreciation as was expected. The key point is dealers don't expect a further appreciation immediately because they want to wait and watch to see whether foreign investors are coming in. Ultimately, you want an actual flow of dollars, not just, you know, that our exports should grow, but on a daily basis, we want FPI flows. And we don't know as yet whether the FPIs are convinced enough to come and buy dollars. So 90 will not be crossed, is what the economist from Goldman Sachs told us. Also because the Reserve Bank will not want to lose the advantages of a weak currency. Depreciated currency makes exports attractive, makes imports difficult, so domestic industry gets a better chance. And finally, there are others who say that the striking of the deal will ensure that India's growth itself improves a bit, and therefore the foreign investors will come. So BNP Paribas' view is that in the medium term, that is by the time we reach middle of this year, we are going to look at it 88 to 89 rupees to buy a dollar.
All right, Lata, many thanks for taking us through those details. But as promised, let's shift focus to the bond market. Manisha Gupta joins us now with all of those details. Manisha?
Well, it has been a back-to-back action in the Indian markets, whether it is about equities, rupee and bonds for that matter. After that big reaction to the India's budget, where we did see higher than expected borrowing and expenditure from the Indian government for FY27 slated out, it really is about the US and India trade agreement, and that seems to be ruling the markets right now. So we have seen the bond yield slip slightly, 4 to 5 basis points as the markets open today. Well, India and US finalizing a long-awaited trade deal has supported the equity markets, which have jumped up. We saw the rupee open up by nearly 121 points on the higher side, and the bond yields seem to be taking their sense or support from there as well. Interestingly, the trade deal positive possibilities are quite a bit, and that is where we are looking at support coming in from. The markets do believe that FPIs will come back to the Indian equity and debt markets, and that would bring in liquidity and more action coming in here. It also is about inflows of further dollars coming into the market. There also is a possibility of Indian bonds getting included in other global indices as well. So whichever way that you look, it seems quite positive to the markets right now. The support from the Indian rupee, the inflows of the US dollars leads to be supporting bonds right now, with markets believing that this week at least this euphoria could just about continue.
Manisha, thank you for that update there. Numbers from Adani Ports flashing at the bottom of your screens at 22% revenue growth compared to last year, 9,704 crore. They look at the operating performance as well. On the margins front, has the company fared 21.2% growth in the profitability as we speak compared to last year. So 8% higher, still holding on to gains from the morning is Adani Ports. Take a short break. More news and updates on the other side. Stay tuned. Welcome back. Earlier in the show, we spoke about PB Fintech as the one stock that is bucking the trend today. That is because the sources are saying that the board is going to announce a fundraise on the 5th of February. Yash is joining in with more on this. Yash, what is the kind of quantum that PB Fintech is looking to raise here?
Well, Hormaz, just yesterday we had reported that the management is expected to approve a large fundraise for supporting a major acquisition which the company intends to make. In continuation of that, what sources are telling us is that the size of the fundraise itself could be upwards of about 3,000 crore rupees. PB Fintech at this point of time has about 5,500 crore cash on its books, and according to our sources, the size of the acquisition could be upwards of about $1 billion. So it's going to be a large fundraise with a large cash already present on the books for the purpose of supporting an acquisition which could be upwards of about $1 billion. As far as the acquisition and the geography itself is concerned, we've been told that the company is evaluating a couple of target companies in UK as well as Europe. As far as the board meeting is concerned, the next one would be on February 5th, where the size of this fundraise would be finalized and announced to the exchanges. But importantly, what I've been told is that this particular acquisition would be in the space of insurance product distribution and aggregation, similar to what the company does in India. Of course, this would be in the international market. What I've been told, as I said, the geography could be UK or Europe.
All right, Yash, many thanks for those details. Now, it is a CNBC TV 18 news break confirmed. Advent International is all set to pump in 2,750 crore rupees into Aditya Birla Housing Finance. Let's go across to Rachna Dhanrajani, who broke this story yesterday. Rachna, how much stake will Advent hold?
Well, this does mark a CNBC TV 18 news break confirmed, and it marks one of the largest capital infusions in India's housing finance sector in recent years, that is. Now, the boards of Aditya Birla Housing Finance and its parent company, Aditya Birla Capital, have approved this proposal. The investment will be made through Indriya Limited, which is an Advent entity, and the deal is structured as a primary capital infusion. Completion of the transaction is, of course, subject to shareholder approval and regulatory clearances and other customary conditions. Now, let's first understand, why does this deal matter? The 2,750 crore rupee check significantly strengthens Aditya Birla Housing Finance capital adequacy and balance sheet, providing firepower to scale its loan book at a time when housing financiers are preparing for the next phase of credit growth. Now, the capital is expected to support expansion in affordable and mid-income housing segments that continue to see resilient demand driven by urbanization, infrastructure-led development and policy support. Now, housing finance companies are also under increasing focus from regulators and rating agencies to maintain stronger capital buffers and diversify liabilities. A large long-term private equity infusion not only supports growth, but it also gives a chance to enhance confidence among debt investors and bond markets. Now, this deal also comes amid a broader revival of investor interest in India's housing finance space. Over the past 24 months, that is, we've seen Shriram Finance, Warburg Pincus deal happen, we've seen Aavas and CVC deal happen. So against this backdrop, Advent's 2,750 crore rupee investment stands out as one of the biggest primary equity infusions in the company. Now, this is second only to outright acquisition or deals like Shriram Housing Finance that I mentioned. But this particular transaction is also interesting because this marks Advent's second stint with Aditya Birla Group. The global PE firm was previously an investor in the parent company, that is Aditya Birla Capital, and has since monetized parts of that exposure. Its return this time, though, is to the subsidiary is very focused, and it of course shows the renewed conviction that people are seeing in the sector. With this specific bet that Advent has made, things are looking up for Aditya Birla Housing Finance.
All right, Rachna, many thanks for taking us through all of those details. But with that, it is a wrap on this edition of Business Lunch. Mid-Cap Radar takes all the action forward.
Good afternoon. Welcome to Midcap Radar live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Iyer. A stellar rally all around, but we have come up from the opening highs. That's of course an important note. We are still awaiting a granular detail of the tariff cut that has come by, but for now, markets are cheering that on.
Good afternoon, Sonal. Absolutely. Most of the exporters locked in the upper circuit. Most of the stocks seeing a lot of positive momentum leading to a very strong advanced decline ratio. A lot lined up on the show. Some important corporate conversations. So let's start off with the top headlines. The India-US trade deal sparks the mother of all stock market rallies in India, with the benchmark Nifty opening 1,200 points higher before some profit-taking trims gains. The advanced decline ratio is sharply skewed towards advances.
PB Fintech's board will meet on February 5 to approve a QIP for funding and acquisition. Meanwhile, Aditya Birla Capital Housing Finance arm mops up 2,750 crore rupees from Advent as growth capital for a 14.3% stake. Both deals were earlier reported by CNBC TV 18.
Textile stocks are now flying high. Gokul Das, KPR Mills, Welspun Living all surge as India, with an 18% tariff, is now placed better versus exporters like Bangladesh and Vietnam.
The reduced 18% levy is expected to help auto ancillaries sustain global order inflows and margins. Bharat Forge's Bhaba Kalyani tells CNBC TV 18 that demand could rise 25% in the next quarter. Okay, all right. Those are the top headlines that we are tracking. Of course, the biggest news being what's happening with India-US trade deal. Finally, there's some clarity. Markets were in the wait-and-watch mode for the longest time. Rupee was also depreciating on the back of no clarity there, and that has come in as a big positive across the board. And the commentary from managements and sector specialists and market guests also have been quite positive on this move. Of course, we're still waiting for granular details as to what all comes under this, what is exempted. So these are some details we'll keep getting for you. But let's do one thing. Let's get to the first management on the show. Vishal Thakkar, Deputy CFO of Anupam Rasayan, is joining in now. Vishal, good afternoon. Thank you so much for joining in. The overall chemicals industry has a 20% exposure to the US as a market. How is it for Anupam Rasayan in terms of numbers, and how does it change things for you? You also made a major acquisition in the US recently. If you can explain how things change now from 50% to 18% now.
So Sonal, first, thank you for getting us on your channel. And yes, I think it's a fantastic time for India and chemical manufacturing industry, and especially for somebody like us. If you look at it, India exports over 20% to US and another 17% to Europe. So overall, 35-40% of India's exports is having a favorable outcome over the last 1 week. Even if you look at from a budget point of view, we have had a very good budget from setting up domestic infrastructure for manufacturing, including 3 chemical parks. So that really helps out. And if I speak specifically for Anupam, yes, this acquisition could not have been better timed. I would just say that it's a fantastic opportunity for us to offer a broader basket of portfolio of products across various end markets, be it polymers, pharma, agro. In pharma, KSM especially, where US is having a very high focus, semiconductors. Also in terms of the larger valuation that we will be able to offer to our customers, I think this is one of the very buoyant and very interesting 1 week that we have seen across Europe deal, budget, or the US now announcement from the US government. So I think we could not have expected anything better than this.
Vishal, give us particular numbers. You said the overall industry, these are the exports, 20% to US, 17% to European Union. How much it is specifically to Anupam Rasayan? And on the acquisition side as well, you say that you will get better markets, but having a facility there already wouldn't have impacted you anyway, right? 15% tariffs or 18% tariffs. Or it did get impacted because you would have to get some products from India for production. I'm just trying to understand how is it different for you now?
Sonal, if you look at any of these kind of industries that we are, we're an industry where anybody is looking at a supply chain solution. They are looking at a relationship of over a decade and otherwise, and they look at larger trends, larger connections that you have. So yes, the manufacturing from Jayhawk would not have mattered in terms of the tariffs. But if you look at a combination, when I go to a customer and say I can offer you a supply chain over India and US, your ability to attract that business anyways is higher, and then with this kind of an event really helps us even further to offer that. So that's what I'm trying to say. Even if you look at from a
Just quick clarification we'd like from your end. What we want to understand is before today, what was the total tariff that was applicable for you? And before both of the deals, what was the tariff you're paying to EU? What was the tariff you're paying to US? Post this deal, we understand it will drop down to 18%. So we want to understand whether there is a material difference.
Okay, so let's talk about Europe. Europe was anything between 6 to 13% that we used to pay. My customers used to pay effectively, and today it will be 0. From the US point of view, there were few products which were exempted, but there were few where we were paying a higher duty, and that will now come to 18% as we understand. Yes,
so how much
are yet to be seen, but a priori understanding that we have from the announcements is this range. So yes, there will be a delta for us as Anupam. There will be a better, one thing that we have to also understand, the people like us who are into CSM, CDMO play, the contracts that we get is over 5, 7, 10 years relation, period. Now there, the visibility of the tariffs, visibility of the supply chain is far more important along with the rates. So to that extent, it will matter to us. It will matter significantly to us.
Okay, all right. We take that point. Vishal, thank you so much for joining in today. Market's in a different mood, so we have to address that as well. But a pleasure speaking with you. Thank you for explaining the impact of both the EU FTA and the US trade deal as well. We'll slip into a short break. When we come back, we'll connect with the management of Intellect Design Arena to decode their Q3 numbers. Stay tuned for that.
Welcome back to Midcap Radar. Well, one particular company that saw a muted quarter in Q3 was Intellect Design Arena, a name from the midcap IT space. We can welcome Arun Jain, Chairman and MD of Intellect Design Arena. Well, thank you so much, Mr. Jain, for joining us. You know, the first question which we want to ask you, and which has led to quite a bit of a sell-off as far as the stock is concerned, has been the muted margin performance both on a year-on-year as well as on a sequential basis. Analysts on the street were anticipating a steady-state run rate of over 20%, but this time around it's been quite muted. What is the reason for that, and when can we expect a recovery?
Yeah, so thank you very much for inviting me to this call. And on an ongoing basis, we are saying we are a business which should be tracked on LTM basis, last 12-month basis, not quarter on quarter, because single license revenue could be as high as 50 crore to 100 crore difference can create a margin difference. So margin trajectory should be looked at it from the annualized basis. We have last 12 months, we crossed 3,000 crore, very significant mark in Indian IT industry. A product company is crossing 3,000 crore revenue in last 12-month period. Our revenue grew 23% on LTM basis. My margin grew 33% on LTM basis. My cash position moved 49% year-to-year basis, point to point. Now, this is a phenomenal quarter from our internal perspective. Quarterly number, we cannot manage, and we don't want to manage, because the deal sizes are big, contracts are complex, and they cannot be tracked on 90-day period.
Got it. So, Mr. Jain, since we're not talking about quarterly numbers, on a FY26 basis and FY27 basis now, if you have some visibility, what kind of margins are you looking at? Will they, on a consolidated basis, see the 20% mark? And in terms of growth as well, what kind of deal wins and growth are you looking at?
Yeah, so if I look at it, our three businesses which you started, GTB business now is a 1,400 crore business. GCB business, consumer banking business, we started in 2018. That is close to 1,000 crore, 960 crore. The AI business we started in 2021 with the wealth and insurance included is close to 500 crore business. So these three businesses are healthy businesses. Our geography distribution is Americas, which is giving 25% of revenue, will be close to 1,000 crore. With the new deal signing it up, it will further accelerate. Americas, Europe is another 25% of revenue comes from there. And rest of the 50% comes from Middle East and Africa itself gives the 600 crore revenue, and then India and APAC. So I think this is a second lever which is there. Third is the tech edge on eMAG.ai. Fourth, opportunities are, what you asked the question is, what opportunities are there for next year? There's a huge shift in moving from mainframe to cloud business. So big opportunities are coming because MIPS rating in mainframe are is 5 times more expensive than cloud migration. So that's the other area where the big opportunities are coming us our way. These deals are big in size. So these deals can run into double-digit millions of dollar deals. So that's why it takes time to close those deals. AI, you know, it's a big driver for us to look at it. So from all the four angles, opportunity angle, tech edge angle, geography angle, product edge angle, we have distributed our multiple.
Mr. Jain, you know, we understand the business opportunity and we appreciate that. So, you know, can you distill it down and can you quantify it? So FY27, what is the kind of growth you will end the year with, you know, even if we track it on an LTM basis? And FY27, what kind of growth are you seeing? And can we expect margins to recover back to, you know, double digit or even 20% levels that earlier you used to enjoy?
That's right. So you want to push on the right number. I'm saying we designed the business for 20% growth year on year.
Okay.
The business design we are talking about. And margins are also about 20%. Now we are in investment phase. So we moved to 25% and come back to 21%. So these are the two bandwidth range we designed the business.
Take that point. Mr. Jain, we have a lot more questions, but you would appreciate we are speaking to you on a day when markets are soaring higher on the back of US-India trade deals. So we'll keep this conversation some other day. Thank you so much for joining us and patiently answering those questions. We'll slip into a short break now. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. Welcome back. You're still tuned into Midcap Radar. Well, in a market where most of the sectors are in the green and other stocks, couple of outliers. PB Fintech, we've spoken about the stock earlier as well. It is at the day's low as we speak, down 6% after the cuts that the stock saw yesterday as well. Some fundraising plans, some acquisition plans as well, but the street seems to take it the other way. We do have Misho as well, which is down around 4%. Varun Beverages, after the numbers, that stock is also on our radar. It's down around 3.5%. But rupee is set for the biggest single day gain versus the dollar, and it is up around 1.3 rupees against the dollar. So that is another big story that we are tracking very closely, the rupee move after the big depreciation that we saw in the last couple of months. With that, we'll do one thing, take your leave on this edition of Midcap Radar. Stay tuned, your stocks when we return. Hello, good afternoon. You've tuned into CNBC TV 18. You're watching Your Stocks coming live from the CNBC TV 18 Motilal Oswal studios. Obviously, we had the US-India trade deal that came in, and that is why this is a special edition of Your Stocks today to answer all the stock-related queries that you all have sent us. I'm Vinny Motiwala. With me is my colleague Sonal Butra as well. Sonal, good afternoon. Nifty managing to hold on to the 25,800 around that mark. Advance decline ratio obviously clearly in the favor of advances versus declines today.
Oh yes, continues to be a big day for Indian markets. But of course, as we've been pointing out, the details matter a lot. And that is something that we'll be analyzing and getting for you. But yes, you all have sent in a lot of queries related to stocks that depend on US with respect to their exposure and are impacted by this cut in tariffs as well. So to answer all those queries related to such stocks, we have with us today Somil Mehta, Head of Alternate Research, Capital Market Strategy, Mirai Asset Sher Khan and Gaurang Shah of Geojit Financial Services. Gentlemen, good afternoon. Thank you so much for joining in. We have received a lot of queries for stocks which have exposure to US in some or the other form. So let's get started with the first one. Krishna Prasad is writing to us from Kerala, holds 2,500 shares of Sona BLW at 477 rupees a share. He asks if we should continue to hold or exit at current levels. Auto Anks, they continue to be in focus because they do have big exposure to the US markets. Gaurang, come in on this. Handsome profit here for Krishna Prasad. Do you think they should continue to hold it or add at current levels as well?
Thank you so much, Sonal, for having me on the show. Good afternoon to all the viewers of CNBC TV 18, to you and to your entire team, and of course, Somil, my good friend as well. A small disclosure that all recommendations that I'll be sharing with you this afternoon on the show are a part of our fundamental research team recommendations. Our company Geojit or myself, we do not have any kind of investment interest, no financial interest, no conflict of interest, but we share similar advice with our clients. They might have their investment interest in the portfolio. So I think a lot of negativity will get cleared once we have a detailed verbatim from Minister Piyush Goyal. I guess he's supposed to address the parliament at 3 p.m. this afternoon. We still don't know the contours of it, but primarily all those sectors that were beaten down, be it textile, be it auto ancillary, be it gems and jewelry, be it aquaculture stroke marine, specialty agrochemicals will tend to benefit out of these positivities that we'll have to wait for some time for the details to emerge. As far as the question on Sona BLW, well, it's a well-established company. There is no doubt about it. Large part of their business operations are focused in US and related European countries. If auto sector is going to do well, Sona, definitely auto ancillary, tire and battery manufacturing companies will do well. I won't be able to give specific buy, sell and hold on Sona BLW because we don't have a coverage, but a competitive advantage is definitely there over here.
Okay, surely a competitive advantage that is there. But Somil, what's your view on the technical front for Sona BLW? They bought it at 477, making a profit. Now with this trade deal also coming into place, could we expect it to go further up?
Good afternoon to everyone. Absolutely. It's been consolidating for a very long time now, below 200 daily exponential moving average. Now today, yesterday actually I was talking to my team as well that this is a breakout levels, and it has already given us a breakout above the previous swing high in the monthly charts, quarterly charts. So it's a great stock to be in. My next target on the stock would be 560, and above that would be 610. So these are the two targets, and the base for this stock now becomes 480 and 440 levels. So that will be a base for the stock, and I'm not expecting the stock to go below those levels.
Take that point. So that's in Sona BLW Precision. The stock is up 5% as we speak. Let's go to the next query that we have. Shritish Kumar writes to us from Mumbai, holds 50 shares of Vari Energies at 2,463 rupees. He asks if he should hold the stock for the long term. This is one space which did generally very well, and it has some exposure to US markets as well, and some US rulings that impacted the moves in these Indian names. Gaurang, come in on this. What do you make of Vari Energies in particular, or any other stock from this solar equipment space?
Well, so we do have positive coverage, again, a disclosure on Vari Energies. And, not only there is a lot of opportunity now for the export-related geographies where these companies have their footprints, but a lot has happened in the domestic market as well with the government's new policy rather, Sonal, for new power generating capacities that are going to come up. a large part, 75% plus, is going to be clean and green energy with respect to solar as well as wind. From a long-term point of view, we do have positive coverage on Waaree Energy. So if you're a long-term investor, hold on to it. Other investment ideas, this one would be a little bit high beta, high risk counter, but we do have positive coverage on Suzlon as well. So.
Okay, Suzlon and Waaree Energies also, you have a positive outlook there. Yes, they do have exposure. Around 28 to 30% of their revenue is mainly from the US as well. Somil, on the technical front, the viewer has bought it at 2,463. Obviously, they're making a profit on this one today as well. The stock is up 12%. What is the level that one should keep an eye out on, whether stop loss or continue to hold it? What's your view?
The viewer has actually bought it at the bottom. Great buy actually. It has broken some very crucial levels on the upside. Now the trend reverses from these levels, and it is trading about 20-40 daily moving average. It is trading about 200 daily moving average. Previous swing high on the monthly charts has also broken on the upside. Looks great to me. Hold on would be my suggestion. 3,400 would be my target in the short to medium term outlook. But I think in the longer term, it would perform really well from here.
Okay, on the long term, Waaree Energies would perform well. Let's get to the next query. Kiran Jain is writing to us from New Delhi. She asks if she can buy shares of Avanti Feeds for the short term. There's a big fundamental change, but since the question is for short term, Somil, let me come to you first up, and then Gaurang, tell us your long term view on this one. Somil?
It has broken out of a triangle pattern. It is a gap up opening, a gap up breakout actually. Now, short-term trading I will not suggest, or even medium term. The stop losses are too deep. 740 would be the stop loss, but I think whoever has this in your portfolio should keep it for a target of above 1100 or so, because the next wave has already started in the monthly outlook, monthly charts, which has a target above 1100.
Okay, and Gaurang, your view on this one, Avanti Feeds?
Well, so I was expecting a question on this. To be very honest, Sorel, I beg your pardon, Ravini. Good afternoon to you as well. So we have positive, not only Avanti Feeds, but Apex Frozen Food also features in our fundamental coverage. And Vinny, these were the stocks last year, April 2025, when President Trump announced tariffs. These stocks hit maybe lower circuit, if I'm not mistaken, and if I recollect right. I think opportunities will definitely open up with the details, contours that will be known later on in the day. Hold on to it from a long-term point of view. It's 20% circuit Avanti Feeds now. Don't rush into it, to be very honest, Vinny. Give it some time, let it settle down, let the euphoria settle down, and possibly at lower levels you can either make new investments or you can average as well, both on Avanti Feeds as well as Apex Frozen Foods.
That's what actually going to be my next question, because we've seen this surge already and anything can come out in the fine print, right? So should investors hold on to current levels? They should wait for some correction. At what level do you think it becomes a good buy, both Apex Frozen and Avanti Feeds, Gaurang?
I think Somil is the right person in terms of levels, to be very honest.
No, I meant to say fundamentally, valuation-wise. I'm not asking from a technical term, but you know, there are times when the stocks are not fairly valued as well, despite the sharp fall that we saw in the last couple of trading sessions. That's why I wanted to ask from a fundamental viewpoint.
So Sonal, I think don't go into it with a FOMO fear, with a FOMO factor. These stocks were beaten down when the negativity is there, and now with the positivity is emerging, I think these stocks will definitely tend to outperform. And more importantly, Sonal, India will have, according to whatever details are known to us up till now, as far as this trade deal is concerned, at 18% tariff, that's the figure. Then we become more competitive compared to our neighboring countries or the APEC region. So the possibility of a larger market share as far as exports are concerned, it will definitely be there. I think sub 900, if you get an opportunity, maybe tomorrow, day after, or next week, once this euphoria cools off and we have the details in front of us. So at lower levels would be, and do a staggered investment. So I think that's the best approach in any fundamental strong stock. Don't try to time it. You waste your time trying to buy the stocks at a particular level. So make a beginning, maybe somewhere close to 900, sub 900 would be a decent level to start nibbling into it.
Okay, that's for Avanti Feeds. Sonal asked you about Apex as well. You gave your view there because the next query is actually on Apex Frozen. Ritu Srivastav, she's holding 200 shares and this is at a price of 400 rupees. So on the technical, Somil, for Apex Frozen, what is it looking like? She is making a loss on this one right now. It's at 351. What should they be doing?
Hey, hold on to it. Definitely in the last 3 or 4 months, it has been consolidating about 200 daily moving average. It has been forming higher tops, higher bottoms. So it's a good chart today with a gap up opening, a circuit, 20% circuit. I think it looks good to me. Triangle breakout on the upside on the daily charts. The next level on the upside would be 366. That will be my target in the medium term. But on the upside, I think the final target in the medium term outlook would be 440, 450. But I think the entire range from the last 6 months has broken on the upside. So even the long-term outlook starts becoming great from here.
Take that point, Somil. We have to get into a quick break, but a lot of queries on the other side. We'll answer them after this short commercial break.
Fly Emirates, fly better.
Welcome back. You're still tuned into Your Stocks on CNBC TV 18. We still have with us Saumil Mehta of Mirae Asset Share Khan and Gaurang Shah of Geojit Financial Services. We are answering all your queries related to the stocks that could be impacted by the changes in the US-India trade deal. Let's get to the first one now. Shaleen Sharma writes to us from Mumbai, holds 700 shares of Bharat Forge at 350 rupees a share. Now that the deal has been sealed, wants to know if she can add more shares. She bought it at around 350. The stock is at 1544, so it's a substantial gain that she's already seen. So from a long-term perspective, Gaurang, do you think she could add at these levels, or do you think the stock is valued at the correct levels? I can see that smile. I'm trying to understand what that smile means, though.
No, that's wild because, I was just thinking how stock markets can create wealth, Solan. She got it at 350 and the stock is trading at 1500. This can be a perfect example of how, being invested in a fundamentally strong stock rewards you over a long period of time. So she's deep in the money. I don't think she's got any reasons to worry. Again, a disclosure, Sonal, we do have a fundamental coverage on Bharat Forge from a long-term point of view. So here is the point. The situation as far as Class 8 trucks, chassis are concerned to exports to US, I think the opportunity will definitely open up a lot more. Secondly, as far as the domestic side is concerned, this companies also have invested, in fact, rather heavily into defense as well, and it specialized into artilleries and automatic arms and ammunitions. You want to add on to it? Again, I would say the stock is up somewhere close to about 7% today. Add a small quantity at current levels, and you can possibly use dips to average further at lower levels. This will eventually, because you got it at 350, if you average it at 1500 or thereabouts, it could inch up your investment cost. But nevertheless, it's a very strong fundamental company. I would definitely say average small quantity at current levels and rest on dips and continue to hold on from a long-term point of view.
Okay, continue to hold on for the long term. That's the fundamental view. On the technicals, Saumil, what's your view as well? The viewer is making good amount of profit already here. So what's your suggestion here now?
Absolutely, a perfect investment, example. A very good stock to be in. One of my favorites for a long-term, portfolio stock. I think a hold on would be my suggestion. You can add more if you want. 1650 would be a medium-term target, but for long-term, I think the previous all-time high should be cleared. But now the base on the downside would be around 1300 levels. I'll not be expecting this stock to go below 1300. So this level is around 200 daily exponential moving average, and we've seen this entire consolidation around those levels. So long term, definitely hold on.
Take that point, Saumil. In fact, we spoke to the management of Bharat Forge on the India-US trade deal announcements. Listen into what they have to say.
It's been a very, very positive development, and I'm very happy that we have got everything done as far as India-US trade deal is concerned. But I believe from whatever I've heard from this morning from the US and late last night, that Section 232 also is under discussion between India and the US to bring it all to a levelized tariff of 18%. If almost everything will come under 18%.
Okay.
And if we look at our exports traditionally used to be in the region of about 500 to 550 million on a revenue of roughly about 1 billion. So 50% of our exports were to North America. 50% of our revenue came from North America.
Okay, let's move on to the next query for today. We have Bhuvan, who is writing to us from Pune. He's holding 20 shares of Siemens, and this is at a price of 3,892 rupees. Wants to know if he should continue to hold or sell. Gaurang, there are a lot of these cap good companies also who have exposure there, like Apar Industries, that's managing to hold on to very strong gains in today's trading session. Siemens, as such, also is a good name that comes in here. But your view for this one, what should they be doing now?
So, Vinny, not only will this open up avenues for cap goods engineering space in the export related, but even in domestic market. Look at the kind of capex that the Honorable Finance Minister Srimati Nirmala Sitharaman ji has lined up, not only this time, but in the budgets gone by. And of course, I am assuming that the similar is going to be the case. So, There are, other than Siemens, of course, as a disclosure, we do have a long-term positive coverage on Siemens. But other than Siemens, we are positive on companies like L&T, Thermax, ABB, mid to small cap company, KC International. So domestic market is buoyant for these companies, and I think the only trigger now awaits is the kickoff of private capex. I think if these three combinations get together, it'll be a good opportunity for clear earnings visibility for cap goods engineering companies. So hold on to Siemens, and you can also look at other companies that I mentioned.
Okay, all right. What about you, Saumil? How do you look at this particular stock?
Siemens definitely looks good. It has been consolidating for a little while now. I'll wait. If I want to add more from here, I will wait for a breakout about 3,420 and then I will add. But if somebody is already invested, please hold on to it. Looks great to me. I'll expect this entire consolidation to break on the upside, and the targets on the upside would be above 3,800 levels.
Okay, 3,800 levels, target on the upside. That's the word there on the technical front. Next query for today, we have Sridhar, who's writing to us from Coimbatore. He's holding 50 shares of Vaibhav Global. Price is 799 rupees. Also NIIT and 1,360 shares, and price is 227. What should they be doing with both these names, Gaurang? Vaibhav Global also does have some exposure there in the US.
So, Vinny, unfortunately, we don't have coverage on either of them, so I won't be able to give you a buy, sell and hold. But my sense is that look at stronger players and larger names with a clear visibility in terms of taking advantage of this trade agreement with US and taking their business to the next level. Unfortunately, no specific coverage, so I won't be able to give buy, sell and hold on either of them.
Okay, take that point. Thank you so much, Saumil and Gaurang, for joining in today and taking us through your outlook and your recommendations on specific stocks. With that, we'll take your leave on this edition of Your Stocks, but do remember to email us your queries and we'll address them with our experts. Stay tuned for Closing Bell to take you through the last hour of trade.
Welcome to India's #1 budget headquarters. Decoding key policies, delivering market-shaping insights, and unlocking the potential of India's growth blueprint. Beaming live from the CNBC TV 18 Motilal Oswal Budget Headquarters.
Starting tomorrow, the United States will implement reciprocal tariffs on other nations. It's been a long time since we even thought of that.
The fact that India is the Maharaja of tariffs, it's the highest tariffs in the world, charging on American products.
We therefore weren't doing much business with India, but they were doing business with us because we weren't charging them. Foolishly, we weren't charging them.
We are engaged, we remain engaged with the United States, and at this time, I can't say more than that.
Mr. President, this is Chandra Shrikant from India. Can you give us an update on the India-US trade deal?
First of all, I have great respect for your Prime Minister. He's a fantastic man and friend of mine, and we're going to have a good deal.
Since I arrived in India about a month ago, I have said, and I truly mean it, that the two leaders have a great personal relationship. And that is something that carried this deal forward.
I'm very hopeful of a very good deal with the United States.
What excitement, what drama, and absolute rocker of a night, if I may say so. The trade deal getting announced. Nifty, historic open, 1,200 points higher. 1,000 points, 26,030. Nifty Bank, 23,050, which is 60,950.
This is positive from a sentiment point of view.
The markets was lacking a catalyst, and this certainly comes as a catalyst.
Well, that is, of course, a sum and summation of everything which has happened, how it started, and how it's come to fruition, and a happy kind of sort of ending for now, right? 680 points is a good-looking screen. It's not at the day's highest point, but 25,770 is where we're at. Last hour coming up, this is Closing Bell. We are coming to you from the CNBC TV 18 Motilal Oswal studios. We've got Rima in green and Nigel joining in. Guys, hi, afternoon.
Hi, afternoon. So shots are getting covered, and plus it helps that today is also the Nifty weekly expiry. Adani Group stocks are on fire, 10-12% kind of up move. And then you've got a 10-20% kind of gain coming through in the textile, gems and jewelry, the Avanti shrimp-related companies, and the advanced decline ratio. I think since morning you've been saying, look at that advanced decline ratio, 2,500 stocks gaining, 2,200 stocks gaining. It's held up.
Like Prashant said, it was a rocker of a night, and it's a rocking day as well. The bulls will have not seen something like this. Rima in green and a lot of stocks in green. Beautiful looking screen. But I'll tell you what, the rupee is the most heartening aspect, right? Because it's done a swift 92, almost at around 90. Beautiful, right? I mean, the Lanavla to London plan can restart, I think. So the drift from, from London. Nice. Good to see some strength on the rupee. I think that's an important barometer. And I think post-market hours, we have our hands full because there'll be a lot of short covering that we'll have to analyze. Let's see whether or not we get a large buy number coming from the FIs. But it's a very, very good trading session. And it's been so long since we said that.
And making it to Tanishq is still tough, huh? Because gold and silver prices have recovered very sharply.
I spoke to two investors, not a lot, two, but fairly decent foreign investors in the last 2-3 hours or so. And the general feedback, I'm just summarizing that, well, this will run maybe for the next couple of days or so, but eventually we'll have to see what is the actual earnings, will it lead to, and the answer to that is a little skeptical. Will this lead to a really big earnings bump or anything of that sort? We actually had Neelkan Mishra on the air at mid-afternoon, 12:30, 12:45 or so, and he also was. He kind of said he rated credit transmission into the economy much higher than, and his point was, well, it didn't hurt, so why should it help?
Correct.
In that sense. But I think sentiment is underrated, as Rhythm said, and sentiment makes a lot of difference in that sense. So we'll we'll pick it up from there. Nigel, your
NMDC's numbers. Yeah, I think it's more or less in line, a little bit softer on the margin front, but I think that's par for the course. Last quarter, actually, the realizations were under pressure. But what could have helped that top line is that the volumes were much better on a sequential basis as well as on a year-on-year basis. So that explains why NMDC more or less flattish. On expected lines, you'll have to say. The net profit number is appearing a little bit higher. That's because the top line was higher. But the margins actually are more or less in line. And the absolute EBITDA number is in line. So I think, the bulls will take that. But, Prashant, the important point the Rhythm made yesterday, both for life as well as for markets, sentiment is very important. And the way you put it, right, you wake up some morning, you're feeling very, very good. You go out there, you shop. But if you're not feeling good, you don't do much about it.
As the Gen Z, was the Gen Y, Gen Z. Well, Gen Z put it, vibes.
Good vibes.
Good vibes.
Good vibes only.
Sentiment is equal to vibes. Good vibes. I think good vibes are important in that sense. Well, last hour coming up, right? Mitesh is with us with what he'd want you to do in terms of positioning, because, I mean, it's trade management, risk management, and position sizing after a run-up like this, which is going to be important. Mitesh, good afternoon. Good to have you here. So what would you advise viewers do?
Look, in terms of the index, I would still want the chart to settle down a bit. We had a big gap up and then tapering off. As I said, I think a big gap up should not be chased. That was the only understanding. And also is the fact that the market kind of just went near the earlier highs of 26,300 plus levels and then declined from there. So for the time being, I think I'll wait it out on the index. Though I think this gap up, kind of negates the bearish movement which is happening till yesterday afternoon. So I think that has been taken out, but we haven't had signals of a positive movement starting. So just hang on. What could be interesting to watch is the Bank Nifty. The Bank Nifty has never had a closing above 60,200 levels, and we are close to that. So, wait and watch kind of a mood going on. On the stock side, Coforge is something, which has come on my buying list today. That's a stock which has done well, after corrections trying to reverse. So recommend a buy here. The stop just below levels of 1689 and a target for around 1775 can that. Bajaj Finserv is another one which is a buy with the stop below 1994 and a target around 2065 is what I would look for.
Got that. Thank you very much for that. Mitesh, we'll come back to you. For now, it's over to Ritu. She's compiled what brokerages have said on the India-US deal and the way forward. Ritu.
Well, no two ways about this. The street sees this India-US trade deal as a clear growth positive. So Barclays, for instance, calculates that the India trade-weighted tariff on exports is going to fall to around 16.3% from 35.7%, which is the effective tariff currently. And that's a meaningful reduction in the trade cost, which puts India firmly back in the trade competitiveness play. But Barclays also warns that some of the key conditions are still unresolved. So India's stance on Russian oil purchases, the commitment to buy large volumes of US goods, these are not mentioned by Prime Minister Modi in his tweet anywhere. And these are the factors that are going to influence how the deal plays out in practice. So fine print is something we still have to wait for. But if history is any guide, we've seen what happened with South Korea and Canada, where initial tariffs underwent big changes, and you can't really rule that out with US President Trump. But Barclays says markets have probably priced in the best possible outcome as of now. They're also not rushing to change the FY 26-27 GDP growth forecast, which is still retained at 6.5%. From JP Morgan's standpoint, export-oriented sectors like your textiles, gems and jewelry, leather, chemicals, etc., they stand to benefit the most with potential for increased foreign investment there, a stronger rupee and clearer earnings outlook. They also reaffirmed their Nifty year-end target of 30,000. Bank of America takes it even more optimistic view. They estimate that the effective tariff can drop all the way to 12 to 13%, and that gives India one of the most competitive export tariff rate in the region. They also see this as providing significant relief, especially for labor-intensive segments, and point to an upside risk to India's FY 27 growth of around 6.8%.
Well, absolutely, and this has done its job. Ritu, by the way, the RBI meeting later this week, right? It's on
Friday.
Friday
10 a.m. is when we'll hear. So far, the consensus is building towards a hold.
Yeah, but big OMOs?
Big OMOs to support the yields. Despite all that RBI has done, record high OMOs, they've not really come down from 6.7% kind of a level.
So that's the other trigger for financials once it happens. So we'll have to see if the OMOs do come through. But as Ritu said, in terms of rates themselves, it's likely to be hold. Well, so much has happened, right? There's the budget, and then, of course, after that, there's the trade deal. So compared to where we were last week, just how you'd go into the policy, perhaps a little bit different in that sense. Gurmeet Chadha is with us with what he's making of things. Gurmeet, good afternoon. Good to have you here. So what's the, we spoke after the budget and now, of course, this is, of course, a much more pleasant thing to discuss. So this 3-4% across the board indices move has happened now, right? So what's the best way to position yourself for making money from here, Gurmeet? Do you think small and mid caps, that part does well, so maybe get some exposure through a ETF? Actionable stuff that one can do here now.
So hi Prashant, I think this is how quickly things change, in markets, and we keep discussing that 2 or 3 days in a year actually make a big difference in your overall returns, and that is why it is important to stay invested at least as far as your core allocation goes. I think a lot of stocks will see a bit of a re-rating, especially sectors which have been impacted due to tariffs and US exposure. We're already seeing upper circuits in a lot of textile stocks, whether it is Gokuldas or KPR, etc. Then I also think there will be some, once there's more clarity on Section 232, etc. I think even in some auto ancillaries, there'll be very good movement because if you see from the top, they've been quite suppressed and auto numbers have been exceeding, doing very well month on month. So, players like Sandhar Technology or Uno Minda, Sona VLW, Mothersons of the world, I think there is some bit of action which should play out there. I also think with some of the cloud over IT companies, mid-cap IT services company, in terms of deal wins, etc. Although there's already a bit of some companies have done well. I think that would play out. I think something like a KPIT, which is really corrected and it's more like an auto tech. So actually, I think there's a large universe which is down 30-40% despite Nifty being 27-2800, and there can be reasonable upside there. So you got to increase a little bit equity allocation. 2-3% doesn't make a difference. I also think the growth numbers, GDP estimates will get revised for India with a lot of foreign brokerages.
IT, though, is having a slow day, Gurmeet. Tech Mahindra has dipped into the red. KPIT Tech, a stock that you were talking about, is flat in trade. Wipro, LTI Mindtree, Tata Elxsi, HCL Tech, all just up a meager 1%. And the other pocket, which is slow today, are some of these FMCG-related names. So Tata, pull up a Dabur, pull up a Colgate, and you would see flattish moves coming through. So Gurmeet, you said it's time to increase equity allocation. We know about the stocks that you like, and I presume you're topping up those. But any fresh ideas post the earnings season?
So as I said, we are looking at some of the auto ancillaries and related plays. We recently added Raj Ratan Global Wires, which basically makes bead wires for tires. They had an issue in terms of their Thailand unit not doing well because of dumping from China. I think that's behind, and they've set up a new plant in Chennai. Which will meaningfully start contributing both to volumes and a bit of an operating leverage going out. The stock has seen a very healthy correction of what it was 2-3 years back. So we've added some chemical names like JG Chemical, which is again into zinc dioxide, where again the end use is more tire, which is again linked to auto. So that's something we've added. We've added a little bit to some of the large cap names, which is Bharti and M&M, etc., wherever the movement is more modest. And we are looking at some more weightages in pharma and defense names because we are looking at more 2-3 years. We are not really looking at on a daily movement. I think there is a lot of re-rating left. And then you have a Biosecure Act, which at some point of time will see the light at the end of the day. So as I said, you have a lot of options now. And I think if you should probably start front loading it a little bit. And then any interim volatility in between can be used to, so maybe 30% now and the balance over maybe next few weeks.
Okay, all right. Gurmeet, a quick word on Gokuldas. You had briefly mentioned it. I think you'll had that stock. I'm not sure whether you'll still have it. What are you doing with that? And you're looking to add now?
We wanted to, Nigel. Unfortunately, we didn't get anything since morning. It's been on the circuit. But we took the pain. We actually entered 2-3 years back. So from our price, obviously, it's done 2x. But obviously, it's went up to 12-1300 and is down. So I think we'll continue to hold. I think because there is a lot of margin impact a lot of these guys have taken. And I think with the EU FTA also, you'll have more, although they said they are full, till early part of 2027. But this is very timely. I think the next season will not get spoiled. A lot of unlisted guys, Nigel, are our clients in Narayana, in Gandhinagar. A lot of the local wholesale garment market here. There was a lot of pain there, and I'm more happy because this is a very labor-intensive sector. A lot of women labor involved here. So I'm most happy for textile. But this will be a tactical play. You can't really buy them and hold. At some point of time, you'll have to take a call. But I think I see some more upside coming over the next few days here.
No, I think that's an important point, right? There's the market, of course, but there's also livelihoods, etc., which were impacted, disrupted, and so some relief there, and should happen actually fairly quickly, because that was the other question: how quickly will these export orders start to come through towards Indian companies, MSMEs, etc., with these tariffs, which are now very competitive. So the feedback is, well, it should happen pretty quickly. I asked that question to Mr. Vadhavan, the former Commerce Secretary, and that was his response. Some numbers from Adani Enterprises, revenues are up 9%. I think you've got the profit number coming through as well. But one name, market's going one way, one stock is going the other, which is PB Fintech, right? And we reported yesterday during market hours that there's during the board meeting for results, and by the way, the results are strong. They're going to consider a fundraise for a potential acquisition, and it did happen. The company confirmed exactly that. So that news break was confirmed. We have more details now in terms of the quantum of the fundraise and some more indication of what they are planning to acquire. Yash is here with details. Yash, take it away.
Just yesterday, we had reported that the management is expected to approve a large fundraise for supporting a major acquisition which the company intends to make. In continuation of that, what sources are telling us is that the size of the fundraise itself could be upwards of about 3,000 crore rupees. PB Fintech at this point of time has about 5,500 crore cash on its books, and according to our sources, the size of the acquisition could be upwards of about $1 billion. So it's going to be a large fundraise with a large cash already present on the books for the purpose of supporting an acquisition which could be upwards of about $1 billion. As far as the acquisition and the geography itself is concerned, we've been told that the company is evaluating a couple of target companies in UK as well as Europe. As far as the board meeting is concerned, the next one would be on February 5th, where the size of this fundraise would be finalized and announced to the exchanges. But importantly, what I've been told is that this particular acquisition would be in the space of insurance product distribution and aggregation, similar to what the company does in India. Of course, this would be in the international market. What I've been told, as I said, the geography could be UK or Europe.
Yeah, Yash, thanks very much for that. Gurmeet, any thoughts on this one? Market's not taking a very charitable view. Numbers were strong, but 2 days, 10-11% correction.
Prashant, it happened earlier also when they announced something to do with health, and then there was a reaction. So I think we'll have to wait what the acquisition is. Operationally, numbers look good. Also, the last quarter is the best quarter for most insurance companies. This anyways is an aggregator. And there is some cloud over the commission as well. So a lot of headwinds also in terms of how much our IRDA will reduce commission, both on endowment plans, par and non-par. So you'll have to see a bit of that. So I would wait for in terms of what are they willing to acquire. If it's in terms of acquiring a physical distribution, large physical distribution, or maybe getting into insurance themselves, then we'll have to see. So I think and they already have 2,100 crores cash in the books, if I'm not wrong. So if you're raising another 3, seems to be a pretty large acquisition. So better to wait it out because if the capital asset allocation is not to the liking of the market, you may see some more reaction.
Yeah, no, absolutely. That's the other one, right? Gurmeet, the Adani pack is all, of course, sharply higher. Any thoughts? Ports, Enterprises, Power Green?
So we really don't own any Adani stock, Prashant. Although I like Adani Ports, I think it's something which is their cash cows. Plus, I think it's got to do with the US deal happening. There have been some uncertainty in terms of SEC serving notices over there. So maybe the market feels that the worst in terms of the issues they are having with SEC could be behind them. So I think it's more a reaction there. but we don't own any. I think Adani Ports is something we have interest, and we genuinely believe that logistics is something with our cost of logistics as a percentage of GDP keeps coming down. What they have created is something is very difficult to replicate, and they will have a very, very large market share. Will continue to add market share there. So that's something we like, and maybe at some point of time, if valuations is to our liking, maybe we will get into it.
Gurmeet, I want to ask you about chemicals, right? We spoke with one of the largest and the oldest players in that space, which is Aarti, and just want to play out that soundbite. Basically, they told us that about 40% of the revenues is US exports, and within that there will be a meaningful benefit. The numbers, let's hear it from Aarti management themselves.
It's a great positive for the sector in general and also for Aarti Industries. For a country, roughly US accounts for 20% of our chemical exports globally, and in that context, $6 billion worth of chemicals get exported to US from India every year. So in that context, this reduction from 50+% to 18% will help tremendously. Even for Aarti, as part of our total revenue, 17 to 18% comes from US. So it's also a sort of huge positive for us at Aarti Industries. But I think more importantly, the certainty will help sort of decongest a lot of decision making that has got hampered in the last 9 months from investments point of view, from future growth opportunities point of view. So overall, a very welcome move and a huge positive for the sector and for the company.
Meaningful positive, Gurmeet, for a company like Aarti Industries. Do you have a view post the change, post the India-US trade deal, or any chemical company that you like?
So one, as I said, we have JG Chemicals in our portfolio, which is into zinc dioxide, with end use 80% is tire. We have Navin Fluorine in some of our non-discretionary portfolios. So that's done well, actually. That's done well despite the headwinds. We are looking at even agrochemical space. So maybe PI Industries is one of our old holdings. Maybe if we want to add, over a period of time, we will. But as I said, I'm favorably looking at it, even Deepak Nitrite. So these are some of the names which we are evaluating, and I think that it's also at a cyclical low. And a lot of the capex actually has happened over the last 2-3 years. So that might start coming into play as things normalize.
Okay. Thanks very much, Gurmeet, for joining us. Good speaking with you. Appreciate your time here on CNBC TV 18. 670 points, 25,761. And I think there's about 40 odd minutes to go for market close. We'll take a quick commercial break here. Our Alpha manager, Sanjay Parekh of Soham Asset Managers, on the other side. Stay tuned.
Welcome back. It's a very green looking screen, but let's find out who the outliers are in terms of more price action, more gains, more volumes. Hormus is here to put the spotlight on those stocks that are running against the trend today.
Green looking screen, but there are pockets of red as well in today's session, although they may just be 250, 260, but there are significant names in this list. PB Fintech is one of them. It's the third straight day of losses. Of course, the stock reacting to the CNBC TV18 news break, which got confirmed last evening. More news breaks coming on this front as well ahead of the board meeting later in the week. The stock is down 11% now in the last 3 sessions from when it has been selling off. And today's volumes are the highest since June of 2024. So it's almost at 18-month high on the volumes, and today's session we've seen over 1 crore shares that have been traded on PB Fintech compared to a 20-day average of just around 11 lakh shares. And in light of this, the stock is now below its key moving averages. It has remained so over the last couple of months now, and because of today's fall and over the last 3 sessions, of course, PB Fintech's market cap has slipped below the mark of 70,000 crore. The other one is an earnings reaction. Varun Beverages numbers came out just a few minutes earlier. The third straight day of losses here as well, reacting to its fourth quarter results. And the last 10 out of the 12 trading sessions, the stock has ended lower. It's been underperforming over the last couple of weeks now. Today's volumes are the highest in nearly 4 months, with over 2.5 crore shares that have been traded compared to a 20-day average, which is just around 40 lakh shares. And this too has slipped below its key moving averages, down around 24% from its 52-week high of close to 600 rupees. And lastly, Intellect Design, the stock continuing to sell off from last week. The third straight day of losses here as well, down 12% now in the last 3 sessions. The volumes over the last 3 sessions that you have seen are the highest since November. And today's session too, you've seen 13 lakh shares that have been traded, the 20-day average of just around 3 lakh shares. This stock is also below all of its key moving averages and has further slipped below its 52-week high, taking that fall from those levels down to over 35% now.
All right, Hormus, thanks very much for that. Sanjay Parikh is with us. He's founder and CIO at Soham Asset Managers. Sanjay, good afternoon. Good to have you here, and it's a good day to be speaking to you. It's always good to speak to you, but exceptionally good today with the market doing what it is. How's the portfolio doing across, Sanjay? And any fresh ideas come to mind? How to approach things with this big change which has taken place from last night?
Yeah, I mean, good afternoon, Krishan. So, I mean, luckily our portfolio was positioned quite well. Of course, we don't have a direct play for opening up, but we did. There's a very strong hope that this should get through. Maybe it was taking time, and then economy also is recovering. That is more important. So post-budget, we realized that, of course, this future-led issues will be a dampener, but in few days, and that time we didn't know that, this trade deal will happen so fast. But one thing we are very positive that the economy is actually recovering. And, this has been like 17, 18 months where we were wanting to happen. But now when you see on the ground cement demand, cement prices going up, steel demand, power demand, the one-day ahead market in power, JSW Energy told us, is up 35%, month in 20 days. So that credit growth at this inflation level, inventory levels, CV demand. So it is clearly showing that economy is recovering, and that was more enthusiastic for us, So that's where our cash levels are low, and luckily market portfolio has done well because ours is a cyclical portfolio, and it's helped us.
Okay, hi Sanjay, good to see you, Ben. And as you're saying, the economy is seeing a bit of a recovery. So I had a couple of questions then. The capex spend is as good as expected. The economy is seeing some kind of recovery as well. I wanted your view on some of these infra-related names. And the reason I ask is their order book is good. Some of the execution is quite good as well. But looking at the stock prices, it appears that they've gone through a corporate action, which is not the case. Some of the stocks are down 30, 40, 50%, and some are half from the top. I was looking at your portfolio, you'll have stocks like Dilip Bilcon and the likes. Do you think this is the space that's actually one of those ignored sectors? And if the economy is going to go up, the capex spend is going to spike up, then maybe they're providing an entry opportunity?
Yeah, Nigel. So you have a valid point. Some of these stocks, they have moved down dramatically. And in our case, luckily our entry point was better. So it's still 5-7% lower, and of course you lost a whole year. But there's clear deep value that we see in some of them. But markets apprehension has been, and some of it is valid, that the working capital situation at times, the working capital cycle, some of the states not doing the heavy lifting of not paying on time. All these are very, very valid concerns. So the problem is not order book. The problem is getting the money back on time. And that is always been a worry with this sector, and hence they've been significantly derated. I mean, the one we are holding, in fact, the standalone business coming free to us. If I take the whole MDO value and the InvIT value, the standalone business with 900 crore EBITDA is free, and now the order inflows have started to come in. But I think the working capital situation for all of these have to get better. And for that, the support of the states, in certain cases, center also, but center has been normally good in pay, is important. So I think that's where, as it gets better, I think it will be slow re-rating upwards for them.
Sanjay, did you have a word with at the dealing rooms with any of your friends in the brokerages? Have FIs been buying today? Will they come back in a meaningful way?
No, Ima, I mean, you're not so networked, but I'll tell you broadly, I'm very, very hopeful that, and I've been into Prudential earlier meetings globally when I was in ICICI and mutual fund. So, India as a country is just one stock, where if the ROEs are higher, growth is higher, and what is the price earning or price to book. So it was not in place in the last, if you take in hindsight, growth was not coming back, price earning were higher or price to book were higher, and that adjustment was happening. Now I think, and that's where we are preempting at least that if earnings growth comes back, and if it is not one-off and it is clear U-shape, but it does sustain, then the earnings growth, and I'm saying economic growth comes back, and then the earnings growth has to follow, and the earnings upgrade cycle can come. And then world over, that's been tracked very heavy. And that's where they start buying. And valuations also now, we have very good time correction, almost 17, 18 months. So valuations are also now reasonable, at least in the large cap. So I think we need to preempt a bit, and hopefully, currency also will help with this trade deal, and FDIs will come in. The pressure on rupee or RBI to support rupee will be easing off, and that will certainly help FIs to further increase the allocation at a point of time.
Sanjay, what about the metals pack? How far are we from the peak? You have timed that very well. You have been patient as well on bad days. Will you take some money off the table, or are you looking to ride it for a longer run?
So we just saw, as you know, we own Vedanta.
Vedanta and JSP and Jindal Steel, I think so.
JSP, yes, we recent entry, we bought it around 2030. So all throughout our down ferrous, we were very, very positive. But after we bought JSPL the day they got the duties, the protection. Because then we said now, certainly these companies will get pricing power. Obviously there's some price increase. And, JSPL was very reasonable. Even if we give 7 times EV EBITDA, we were getting a good upside from an entry point, and that's why we bought small way. So I think that cycle, ferrous, we still have to always be aware of. We have protection now. That is now not a worry, but if we did not have it, we would not have bought it. Non-ferrous, I think the SOTP of Vedanta, once the demerger happens, I still feel there could be a good unlocking. You've seen that earlier in Tata Motors, even earlier you would have seen in Raymond's, when the combined piece was 1800, the one which got split, it got listed at 1800. Recently you saw Tata Motor PV and CV. So I'm very, very hopeful that, assuming reasonable assumptions, more like $60 or silver, $60 an ounce of silver, more around 3,000 for zinc, and around 2,900 for aluminum. Even with that, there's a good upside. And when the companies become very focused, there clearly can be re-rating. So we are still holding on, and we will continue to hold on.
Yeah. Sanjay, just I was looking at your portfolio. Do you still own Indus Tower, or you sold out?
No, this was again we sold off because, we are making good money. And we realized actually all throughout Indus Towers, Vodafone was one issue. So, whenever Vodafone-led panic was there in Indus, we used to buy. And in fact, this is the third time in 3.5 years that we bought at around 328, 330. And then around a little lower than the current levels, we reduced. So we love the business. It's just that now Vodafone risk is significantly less, but the growth trajectory of growth is still slow.
Yeah.
So be it the Africa expansion, the tower expansion, then the Geo reprice. Whenever Geo comes for renewal, they may not renew with Indus Tower.
Yeah.
So with that, we were a little, we thought we'd take money at the table, and we booked profits.
May make sense again at 320, 330, right? If it comes to that. But as you said, you've done this. I mean, you bought it lower and sold higher a few times now in the last couple of years. But good speaking with you. Good chat as always, Sanjay. Really appreciate it. Thank you for joining us here on CNBC TV 18. We'll take a quick commercial break here.
We'll just do a quick check, actually.
Futures and options, Nigel.
Futures and options space. Let's do a quick check out there. There's definitely a short covering bounce that's taken place. Take a look at the screen. I'll pull up the futures plate, actually. On the Nifty, there appears there is some shedding of open interest with the Nifty up close to around 600 points. So there's about a short covering taking place out there. But the bigger short covering actually is taking place on the Nifty bank. Because out there, the open interest is down by close to around 10%. So massive short covering bounce is what we're seeing. Now, keep in mind, the India VIX had a bit of a journey towards that 16.5 odd. That's cooled off yet again. That's telling you that you're not seeing any big risk. And on a day like this, they move inversely. Markets move up, India VIX moves down, and that's precisely what's happened. The PCR, that had moved to around 0.62, 0.65. Couple of trading sessions back as well. On budget, it went to 0.6, 0.59 as well. And we had said it's stretched on the downside. Currently, it's at around 0.9. Remember, all this will change because in the next few minutes, we'll have the contract that will expire. 25,800 call, there's a mix of activity out there, so you've got the direction correct. But, since the time value of money is eating into that one, the premium, I think, is more or less flattish at around 15. Let's get that strike up for our viewers, 25,800. And the 25,700 put, well, the premium has eroded big time. So those writers, they're having a blast in today's trading session. What are the levels you're looking at? Well, the 50 as well as the 100 DMA, that's important. The next level of resistance really will come at the highs of today and around 25,830 or thereabouts. 50 and 100 DMA, the nearest reference point. ITC, after a while, we're seeing actually some fresh buying out there. The stock is holding strong at around 310, 308, 315. We're seeing a lot of long additions. So I'll keep an eye out on that stock. PFC as well is seeing a good amount of long addition out there. Fresh buying is what we see on that counter. And Divi's Laboratory, silently, that's actually gone in for a short covering bounce. Stock is up close to 4%. Open interest is down big time out there. So that's clearly seeing a bit of a bounce. And finally, in a strong market, you have Godrej Consumer that's actually relatively underperforming. So fresh shorts being seen on that counter. Net, there's about a short covering that's taking place. The cash market flows will be important. But I think given that it was expiry, those call writers, they got stuck on the wrong side with the markets up more than 600 points. We'll slip into a short break, but on the other side, we'll tell you some technical ideas, buying and selling trades. And also Nimish will be waiting in to tell us what is he picking up in D-Street Chatter. Welcome back. Well, the market's still holding in the green, so that's good. Now, today the event is mostly playing out, and bulk of the good news is going to be digested, but it's going to be about earnings, earnings, and earnings from here on. And Vivek joins us to give us a wrap about some companies that have actually delivered the numbers today. Vivek, take it away.
Well, that's right. Between last evening as well as today, quite a few earnings, have slipped our attention, but sharp reactions is what most of them are seeing. First on the list, a couple of hours ago, Warren Beverages came out with a set of numbers. Post the earnings, you saw a very sharp spike, post which it has cooled off considerably. In terms of the numbers themselves, on a year-on-year basis, revenues higher by 14%, EBITDA higher by 10.5%, margins at 15.7%, and profitability jumping by 33%. However, the management commentary has mentioned that this particular quarter was impacted by unseasonal rains, and especially when you're talking about the domestic volume growth, quite healthy at 10.5%. But despite that, margins have been something that's a bit of a dampener. It'll be important to see the kind of guidance that the management will give in the conference call, but the stock has seen a sharp fall. Ather Energy, very sharp up move that was seen in the stock today. Healthy set of numbers as far as Q3 is concerned. A major significant margin improvement, almost 1,600 basis points improvement on a year-on-year basis. Total income is up 53%, and the management said that they saw continued market share gain as well as volume increase on the back of, and a very healthy commentary coming in from the management as well today when they joined us. Interaj, again, a mid-cap company, but very sharp up move that is seen in the stock today. Revenues have almost 43% on a year-on-year basis on account of an expanded capacity base. EBITDA higher by 44%, margin steady at 9.5%, and profitability up at 32%. Order book quite healthy at over 1,650 crore. City Union Bank, clearly an outlier, very strong set of numbers as far as the smaller private banking names are concerned. Net interest income up almost 28%. The pre-provisioning operating profits up almost 17.5%. Profitability high by 16%. And the management got the confidence to go ahead and up the loan growth guidance from low to mid-teens to now mid to high teens. So that particular stock doing quite well. On the other hand, Utkarsh Small Finance Bank, multiple consecutive quarters of loss that this particular company has seen on a sequential basis. Losses have widened and credit cost elevated quite significantly, almost 10 to 15 basis points in this particular quarter. That stock seeing quite a bit of a decline today.
Very helpful summary, Vivek. Thank you very much for joining in. But just turning our attention to gold and silver prices because they've rebounded after the massive fall over the last week. Manisha joins in with the details.
Well, thank you so much for that. Yes, 2 days have been a massive decline that we've seen gold and silver, both of those commodities. The sell-off came in because of the margin hikes, the speculative unwinding, and also because of the easing geopolitics. So whether it has been about US and Iran or even US and India trade tariffs for that matter have led to some ease in the international markets therein. But when you look at the markets today, well, gold is trading 5% on the higher side. Silver is trading 10% on the higher side. It continues to be very, very volatile. So even as we are back at around $4,900 an ounce for gold, markets do believe that some profit taking is still remaining, and $4,400 to $4,500 an ounce is a very strong support on the lower side. For silver as well, while we have been looking at that $70 to $85 an ounce of a range in last 24 hours, a lot of experts tell me that $65 an ounce perhaps is a level that silver prices can go up to on the lower side. So volatility in the near term is something that is not ruled out. As of now, we've seen a bounce because the structural strong support numbers have kind of held on. And then there is no changes really in the long-term fundamentals. If you look at the year-end targets for gold and silver from most banks and brokerages, they believe that even higher highs is where you could be looking at by the time this year ends. The other reason that the buying has come back into the market is because the narrative about this partial US government shutdown is still on, and is the reason you wouldn't be looking at labor data. The US non-farm payroll data will also not come into this week. So some of these concerns are yet again supporting gold and silver prices. And then, of course, the kind of sell-off that we saw in the last 2 days, this is a bit of a bounce back that we're looking at in the day.
Okay, all right. Thanks a lot for that, Manisha. Well, let's hop across to Mitesh. He's here to give us a couple of trading ideas. Mitesh, what do you have on your radar?
So I think, after the opening, Nigel, we did have some kind of a decline, but since the afternoon time, we have held on well. So I'll go with some long calls, hoping that the momentum will spill over in the next couple of days. So DMart is a BTS with a stop at 37.59. Look for targets of around 3,800. And Apollo Hospital after correction is trying to reverse. So that's the BTS with the stop at 70.75 for targets of 71.20.
Okay, all right, Mitesh, thanks very much for that. So those are individual trades. Markets, of course, holding rupees at the day's highest point. 90.22. Well, it's a CNBC TV news break confirmed. We reported that Advent International is set to pump in 2750 crores odd into Aditya Birla Housing. That's essentially the fully owned subsidiary of Aditya Birla Capital, which is a listed entity. Rashna broke that story and now she has got more details. Rashna, congratulations and take us through the transaction.
Right, it is a CNBC TV 18 news break confirmed, and with this deal, Advent will hold about 14% in AB Housing Finance by investing about 2,750 crore rupees. Now, what's important here to understand is that this deal marks one of the largest capital infusions in India's housing finance sector in recent years. The investment will be made through India Limited, which is an Advent entity, and the deal is structured as a primary capital infusion. Completion of the deal is, of course, subject to shareholder approval, regulatory clearances, and other customary conditions. Now, why this deal matters? The 2,750 crore rupee check significantly strengthens Aditya Birla Housing Finance's capital adequacy and balance sheet, providing firepower to scale its loan book at a time when housing financiers are preparing for the next phase of credit growth. Now, the capital is expected to support expansion in affordable and mid-income housing segments. These are the segments that continue to see resilient demand driven by urbanization, infrastructure-led development, and policy support. Now, housing finance companies are also under increasing focus from regulators and rating agencies to maintain stronger capital buffers and diversify liabilities. In this scenario, a large long-term private equity infusion not only supports growth, but also enhances confidence amongst debt investors and bond markets. So the deal comes amid a broader revival of investor interest in India's housing finance space over the past 12 to 24 months. We've seen the likes of Shriram Housing Finance's deal with Warburg Pincus or Aavas and CVC. So a lot of private equity action in the sector. So against this backdrop, Advent's 2,750 crore rupee investment stands out as one of the biggest primary equity infusions into a housing finance company, second only to outright acquisition deals like the Shriram Housing Finance one that I mentioned. Now, this transaction also marks Advent's second stint with the Aditya Birla Group. The global PE firm was previously an investor at the parent level, that was in the Aditya Birla Capital, and has since monetized parts of that exposure. Its return this time at the subsidiary level signals definitely a renewed conviction in the housing finance business specifically, rather than a broad holding company bet that we've seen. So we will keep an eye out for more.
Okay, well, lots of transactions there, and we'll get you more over the next many days and weeks. Rachna, thank you very much for that. I think markets, of course, holding on 645 odd points in the green, and you know, some of the stuff which, of course, started one way is continuing to look at lots of these, you know, specifically affected in a positive way companies, right? In the textile, the shrimp, Avanti feed, and so on and so forth, all have not opened up from their respective circuits. Jay Bala is with us with what he'd want you to do as we look ahead. Jay, what's the sense? I mean, 7:30. You know, right after the budget on Sunday when we were trading, it looked like perhaps there was that a touch of the August low, 24, was it 330, 340, right? Perhaps coming, but dramatic swings since then.
Hi, Prashant. It's not a surprise for us. We've been pointing out for the last 6 weeks here on CNBC TV 18, the markets are likely to hit to the August low of 24,400 and then recover from there for a resurgence to 29,000 on the Nifty. So the market's gap up today is not a surprise at all from Elliott wave perspective. But the low of 24,713, which was 24,571, which is very close to 24,400, might have got a truncated move. So I think the next leg of the move for 28,000 might have already begun. I just want to, I don't come to a conclusion on emotional markets, and such huge gap ups are classic emotional markets. I'll allow for the markets to settle down for one more day and let the follow through come through. But in all probability, the markets have started its move to 29,000. I'm just a little bit, want to see the markets have a follow through. So it's quite bullish from here.
Quite bullish from here. All right, Jay. But earlier, I think you were thinking that we'll dip and then we'll move up 24,000, and then the journey comes up. It seems we've skipped that step. You're ruling out that we go ahead and visit the recent low, or do you think now let's get fasten our seatbelts and get ready for a ride in the northward direction?
That's right, Nigel. You should always be flexible about your views on the markets. As far as technicians are concerned, market is the god, and whatever it says, you just nod to it. And the low that it registered on the budget day, the spike low, which is very close to the 24,400 low, has a very good chance of being a significant low that doesn't get visited for the next 6 to 12 months. So watch out for it. So we are looking for, like I said earlier, I want the market to stabilize for a day or two, and then we can, thump our desk and say, yes, that's the bottom. But, in all likelihood, the pointers are towards the possibility that the markets have already bottomed and fresh record highs are coming. And, Stranger Things is no longer going to be things that you're going to see on Netflix or Amazon Prime. It's probably coming to the market. You're going to have disparate moves in the markets, and yet markets, misbehave for a lot of people. So, but it's all bullish from here on. I reiterate the bullish stand.
So you said straight to 29,000 without too much hesitation and pullbacks, etc., or it's a long drawn journey?
There'll be pullbacks, Prashant, but it'll be a sequence of higher highs and higher lows. But the budget low, that we saw on Sunday, there's a reasonable probability that it's going to hold. I'm reiterating the same point. I just want the market to stabilize and have a follow through in the next couple of sessions.
So so you go long Nifty and trail Nifty stops here, or is it better to do through stocks?
Yeah, it can get to the stock level, the micro level, but you have to be cautious on, or at least in my opinion, I'll be cautious on two sectors. One is the metal space, another one is the FMCG space. FMCG have not been bullish since the September 2024 peak, and but there could be pockets where there could be outperformance. Metals, they've been the first to clock fresh record highs, and they could see considerable amount of pullback. I'm seeing a significant reversal possibility for copper on COMEX, and even gold and silver. They might have peaked for the medium term. You could see increased sharp levels of decline, but the long term is still bullish. But in the short to medium term, you're going to see very likely to see very sharp pullback for gold and silver and platinum.
Do you have a level on gold and silver? Because in the past, when there has been a drawdown, we've seen falls of 30, 40, 50%. What could be the extent if there is a correction in gold and silver?
See, what you saw on last Friday, Rima, it's just the beginning. And we could see something like 3,400 to 3,100 on COMEX gold, and something like 62 to 58 on COMEX silver. So that, like I pointed out last time, on trading it requires a considerable amount of knack and considerable amount of skill. So yeah, so it's not for everybody. But my opinion is that silver is going to see a bounce somewhere close to 91 to 93, and then resume the decline it saw on Friday. Same thing for gold. Gold probably going to go somewhere closer to 5,100, and then resume the decline that it saw on Friday.
Okay, Jay, stay on. We'll slip into a break. Before that, here is what market veterans have to say on the deal announcement impact on the markets. Sunil Singhania, Neelkant Mishra.
I think the markets was lacking a catalyst, and this certainly comes as a catalyst. In fact, I jokingly say that people had just stopped even talking about stocks. It was all about gold, silver, and I have never seen phones not ringing after a budget the way this time it was quiet, because no one was just interested in knowing what to buy. So I think this comes as a very, very pleasant surprise. It helps the I would say the mood, which was the most important. It definitely helps the economy, the corporate profit growth, and hopefully the currency should also respond. So I think all in all, the positioning is light. FIs have been short, has been seen by the futures, open interest. Position on the domestic side, at least on the speculative side, is low, and expectations after the budget fall were also very, very low. So this definitely comes as a big catalyst.
As you know, there are many sectors which are exempt from IEEPA tariffs, electronics, pharma, petrochemicals, etc. So those have been growing very well anyway without this deal. The commodity exports, like say shrimp, there was trade diversion, meaning that if the US market was shut, they started selling to China and Japan and Europe. There were sectors where I think there was some transshipment also starting to happen. And by and large, the tech side FDI had also been happening. So even before the new ambassador announced that India was going to be part of Pax Silica, the investments from the US hardware tech names from India were actually quite robust. But that does not mean that the deal has no value. There were sectors like gems and jewelry, apparel, auto components, where there was very visible impact of the 50% tariffs.
Okay, just 2 minutes to go before we wrap the trade. Still in conversation with Jay. Jay, any more trading ideas that we can take just for the near term?
Yeah, I don't have anything for the near term. I have something for the slightly longer term. The one is Aarti Industries, and it's made an important low at 330 odds. And today's move is a reiteration of the fact that it's heading to huge levels from here. I'm anticipating it to be a 2.5, 3 bagger from current levels. The stop loss is 360. And we had a call on Bharat Forge in September, October. So I'm reiterating a call on that. It's heading for fresh record highs past 1800.
Okay, all right, Jay, thanks a lot for joining in and giving us all of those details. But let's wind down trade, and what a terrific Tuesday it's been for the markets. The total market capitalization that the BSE listed companies have put on today, I've not got this number wrong, it's 12.5 lakh crores in a single trading session. We had bombastic gains actually. If you pull up the Nifty, look at that, 2.5%. When is the last time we've seen the markets move to that sort of a level? And this is the important one. The advancing number of stocks, 2,500. Brilliant. Your portfolio must be feeling very, very good. Let's run you through a few big names then that moved today. Gokuldas, Wellspun Living, they are direct beneficiaries of the tariffs coming down. So all those stocks did pretty well. Indocount as well was locked up. You couldn't buy these stocks after a while because there were pending buy orders out there. Other stocks that have exposure to the United States, Apar Industries, Avalon Tech, and ADF Foods. All three of them come up for you on the screen. Again, circuit stocks. So quite a few of them moved up today. And the other stocks that have export exposure, whether it's Goldium, whether it's GNA Axles, as well as Carousel. Remember, all of them have a fair bit of exposure to the United States. And that's why those stocks as well did pretty well. We should get some of them up for you. Goldium, GNA Axles, and Carousel. A few trading sessions ago, everyone was worried about STT, right? Today, everyone was only talking about TT. Terrific Tuesday is what we saw. Everyone forgot about STT. And BSE, that's the barometer of the market pulse actually today. After correcting 10% in a single trading session, the stock today ended at a level prior to what we saw on budget day. So brilliant move, brilliant bounce back is what we saw on BSE. From the big boys that did well, Reliance Industries, that came in there, that did bulk of the heavy lifting. With the weightage that it has on the index, it's as good as an index by itself. So that one did well. And because Geo Financial Services as well has a large chunk in Reliance Industries, that was up close to around 8%. Result reactions, earnings is going to drive markets from here, right? MobiWick, the markets seem to have liked what they reported. Adani Ports, you had an upgrade in terms of their guidance to the street like that. And the Adani Group stocks itself, they had a bit of a relief rally. Whether you're looking at Adani Power, Adani Enterprises, those stocks did pretty well. Solar plays, they got smashed out of shape, but they said, let's bounce back. Let's participate in this party. So we had Vari Energies that was up. Premier Explosives as well did pretty well in today's trading session. There were a few stocks, though, that were under pressure. Far and few, though, but we did have a few stocks that ended lower. So you had PB Fintech that was down. You had Meesho that was down in reaction to its numbers. And Aegis Vopak as well that was under pressure in today's trading session. But you only had around 450 stocks that were declining in today's trading session. But that's the one that you'll clutch onto and you'll say, the bulls, they fought back. A terrific Tuesday is what we saw. BSE market capitalization, 12.5 lakh crore in a single trading session. You're feeling good, right? The rupee showed some strength. The equity markets end up. The deal that was signed overnight, or that was the truce that was announced overnight, that definitely made the bulls feel good. And at least for now, sentiment is positive. We'll have to wait by for earnings and see what the RBI does later this week. But for the time being, a good close to the trading session. And it's been a long while since we saw that. From budget rate lows, the markets ended up close to around 1,100 points.
Well, it is indeed a terrific Tuesday. It's the kind of session where the bulls wish that it hadn't ended at 3:30 and trade had continued. Well, it brings us to a close in this edition of Closing Bell. Thank you very much for watching. Don't go anywhere. We'll prep you up for tomorrow with Markets Forward. But
Starting tomorrow, the United States will implement reciprocal tariffs on other nations. It's been a long time since we even thought of that.
The fact that India is the Maharaja of tariffs, it's the highest tariffs in the world, charging on American products.
We therefore weren't doing much business with India, but they were doing business with us because we weren't charging them. Foolishly, we weren't charging them.
We are engaged, we remain engaged with the United States, and at this time, I can't say more than that.
Mr. President, this is Chandra Shrikant from India. Can you give us an update on the India-US trade deal?
First of all, I have great respect for your Prime Minister. He's a fantastic man and friend of mine, and we're going to have a good deal.
Since I arrived in India about a month ago, I have said, and I truly mean it, that the two leaders have a great personal relationship. And that is something that carried this deal forward.
This is a good thing that has happened for the country, and the exporters will be happy.
Trade talks had never had any adverse impact on the defense collaboration, which was going on like as usual in any case.
But
Thank you.
It will, the collaboration between Indian defense companies and US companies will increase?
I hope so. We welcome all global OEMs to invest in India.
We are happy that the trade deal has got finalized. It removes uncertainty in this space, and we look forward to the partnering of two of the largest economies and democracies in the world.
After months of tensions and tough talk, the US and India have agreed on a trade deal. Let me explain to you what's happened. The US has agreed to cut tariffs on Indian goods from 50% to 18%. Remember, the 50% included that 25% punitive tariff on account of the purchase of Russian crude. Now, in a post on Truth Social, President Trump claimed that India will stop buying Russian oil and buy US goods worth $500 billion, which is pretty much the size of the annual budget of the Indian government. Prime Minister Modi has said the deal will benefit both nations, but he stopped short of confirming many of President Trump's claims, including that on Russian oil and the commitment to buy specific US goods. The US tariffs of India are now at the lowest level compared to other emerging economies, with Indonesia facing a tariff rate of 19%, China 34%. The announcement comes just a week after India and the EU finalized a deal which has become India's 9th trade agreement in the last 4 years. While neither side has confirmed details of the trade deal yet, speaking to Network 18 exclusively, US Ambassador to India Sergio Gore said that part of the agreement is the promise to stop buying Russian oil. Stock markets skyrocketed at opening bell, and the bulls managed to hold on to the gains through the day. The Sensex gained over 2,000 points, and Nifty 600 points higher. All sectoral indices closing with gains more than 12 lakh crore rupees added to the market capitalization of listed companies today. The rupee also rallying against the dollar. The rupee closer to the 92 mark yesterday, and today closer to the 90 mark. The rally on the rupee has been the biggest that we've seen in the last 7 years. Well, to take us through the industry pulse check, joining us now is CII President Rajiv Memani. Also with us on the program, Amit Kalyani, the Vice Chairman and Joint MD of Bharat Forge. Joining us on the show, Sanjay Budhia, the Chairman of the CII National Committee on Exports, also the MD of Patton International, and Subankar Sen, the member of the CII Task Force on Gems and Jewellery. He's also the MD and CEO of Senco Gold and Diamonds. Gentlemen, appreciate you joining us here on the program. Rajiv Memani, first up to you. President Trump doing what President Trump does, keeping all of us up at night, and that element of surprise, 9 months after bickering, after all the tough talk, finally coming to the table and closing a reciprocal tariff framework. And again, I'm explaining this to our viewers. This is not the larger bilateral trade agreement. This is a reciprocal tariff framework that has been agreed on. Your first reaction, Rajiv, on the fact that these two strategic partners are now back on the same dance floor. To quote the Commerce Secretary yesterday, it takes two to tango. At least it looks like they're both now on the same dance floor.
Yeah. No, thanks a lot, Shireen. I think it's a positive development for India. And I would say it's particularly very, very positive for the sectors that were impacted. US is India's largest, trading partner, especially in terms of merchandise exports, almost 20% of our merchandise exports are to the US. Some, not all, but some parts of the exports were impacted because of the tariffs, and those were the labor-intensive sectors. So I think to that extent, I think it's been very positive. The second is in any interactions that you had with global investors, Indian investors, industry amongst each other, with government, with media. I think this used to be, inevitable question: when will the U.S. trade deal be done? I think to that extent, I think this is one sort of uncertainty off, and people had different dates in mind. People had different ramifications in mind. So I think to that extent, there is one uncertainty off. So if you look at the India strong growth story that is there, I think this was one thing that always used to hang, and I think that's off the table. So I think that's positive. And third, what we have seen, thanks to our Prime Minister and Commerce Minister in the last 12 to 18 months, we've done a lot of these trade deals, and a lot of them are in the process of getting finalized. And whenever, as CII, when we have gone and visited these countries, whenever something like this gets done, the quality of relationship between industry, between government to industry, government to government, cross-border investments, cross-border trade, opportunities to look at manufacturing, alternate supply chain routes, they all get positive. So I would say, from a Make in India standpoint, from a supply chain standpoint, particularly for labor-intensive sectors, and as India is looking at more competitive manufacturing setup, I think this is positive. In the overall grand scheme of things, Shireen, if you look at it, this is like, $40 to $50 billion of exports in a $4 trillion economy. It's not it's not a big number, but I think in terms of messaging, and particularly in terms of the impacted sectors, I think this is big news.
Yes, it certainly is a very positive development. And to your point, it removes that overhang that has been weighing on investor sentiment. Amit Kalyani, let's talk sector specific now. And, our conversation with the Defense Secretary last night on our budget verdict, he made it very clear that while we may have had this tariff tantrum between the two countries, there has been no spillover on the defense relationship, on defense cooperation. What does this now mean in terms of further cementing the defense cooperation between both sides? Also to President Trump's claims, and I'm saying claims because we haven't heard from the Indian government yet, that this is also going to mean India buying more, including defense, perhaps aircraft and so on and so forth. How do you see this?
Hi, Shireen. Thanks for having me. I didn't realize it's been 9 months. So, good news comes after 9 months in a lighter vein. I think if you look at India and the US, our strategic relationship on defense and defense collaboration has gotten much stronger in the last 5 years, especially with the track 2 between our NSA and their NSA, which started and created a real longer-term approach over defense R&D, defense collaborations, and defense cooperation. So I think with this trade deal having been now inked and clarity on what it means, it's a good thing that we have the building blocks in place to leverage and to really scale up our relationship. Indian companies have tremendous capability in the manufacturing of components, subsystems that go into global defense equipment. Obviously, the US has a lot of the critical technology that goes into the very high-tech stuff, control systems and, the very navigation systems and sensors, etc. So I think between the two of them, if we can leverage them to bring them together, this is a big opportunity going forward. Notwithstanding, we are seeing generally this whole rearm the world kind of activities, creating tremendous opportunities for the supply chain of defense.
Yeah, no, absolutely. You talked about some of those collaborations, but I want to get you to comment specifically on the Section 232 items, Amit, and whether you believe, and we are still waiting for the fine print, so I'll get you and Sanjay both to comment on that. Do you expect, the 18% rate to apply even for the Section 232 items?
Shireen, I'm not sure personally because Section 232 was a specific, let's say level which was set. And I mean, unless there is some overriding of that, we don't know, or tweaking of that, we don't know. So like you said, the fine print is yet to come out.
Yes, we are still waiting for clarity on that. And of course, it is instructive to point out that this is not in effect as of today because those executive orders are yet to be signed. So this is still an announcement. It has not translated into reality. Sanjay Budia, let me come to you now. On balance, what does this mean really for, the shrimp sector, for the textile sector, for the gems and jewelry sector? How badly were they already impacted? And how quickly do you believe they'll be able to bounce back and recover as this gets operationalized?
Yeah, Serene. So it's a real great win-win situation for everyone. And the sectors, particularly what you mentioned, textile, seam, leather, they are the sectors which are labor intensive, and definitely US being one of our largest markets, they were impacted. So from the morning, there is a huge positive sentiments, and all of them are gearing up their additional capacities, and the capacities what was created. I must comment that, on just within a week of signing EU trade agreement, the signing of the agreement with the US really shows our position on the global table. And in fact, our persistence has paid off. Honorable Prime Minister and the Commerce Minister and the team, they have really done from a position of strength. And we are on the high table, and we respect that, there's a long-term relationship between the two strategic partners. It's not only B2B, it is P2P, people to people. We have our friends, relatives, and most of us have somebody in US. So you consider US as your natural extension. So this was more or less everybody was expecting that this is going to come. Question was when. As Rajiv rightly said, it was in the conversation, morning till evening when the US is coming. It was Diwali, it was New Year, but finally it has come. So we are all waiting for the fine print, and I'm sure that the fine print will be as fine as it is expected.
Well, we certainly hope so. But Suvankar Sen, let me come to you now, specifically as far as the gems and jewelry sector is concerned. One, I want to understand how badly the sector has been hit on account of the tariff imposition, and what do you believe is likely to be the recovery period now?
So Shireen, US has been one of the largest markets for the gem and jewelry exports. Almost 30 to 40% of our exports are to US and to the consumers of USA, whether it be diamonds, gemstones, gold and diamond jewelry. And because of the reason of this high tariff, if you look at the data of the last, I would say 6 months, 9 months, the exports have come down by 60% when it comes to cut and polished diamonds. It's come down by 24.5% for the studded diamond jewelry and about 29% for the plain gold jewelry. So you can easily imagine the kind of negative impact this whole higher duties on the Indian gem and jewelry sector by the US was. And now that after 9 months, we are really, really optimistic and positive, because from a 5 to 7% duty, it had gone up to 50%. And now with the 18%, overall duty that is being announced, I think it's a big, big relief. The unemployment that got created for the karigars, for the artisans, for the, for creation of jobs was a challenge. Government in the budget also announced the SEZ flexibility of, utilizing the infrastructure and the manpower for domestic only because of such situation. And I must tell you, Shireen, that we as the gem and jewelry sector are very positive that if there is a scope in Annexure 3 of the understanding that is happening, that for loose diamonds or for gemstones, there could be a possibility of 0% duty also, so that we can provide the cut and polished raw materials to the US, and US can do the manufacturing of finished products, anything of that sort. But that will bring a big, big relief to the gem and jewelry sector. And we are very thankful to our Honorable Prime Minister and to President Trump that they are trying to get the two countries together for the benefit of the world.
Well, so Ankur, you're talking about zero duties. President Trump spoke about zero duties as well, but he mentioned that in the context of U.S. goods that would enjoy zero duties coming into India. Rajiv Memani, back to you now. And, you know, we haven't heard from the Indian government on any of those claims being made by President Trump. And many experts also suggest that it would be prudent to take a measured approach and not be celebratory at this point in time, because we have seen Mr. Trump take decisions, roll them back, and so on and so forth. So navigate this, you know, in a more calibrated fashion. Now, in the immediate terms, till we see all of this being realized, operationalized, the T's dotted and so on and so forth crossed, you know, what stance is industry likely to take, and what is it that you want to see in the fine print?
So I would say, you know, at least in what we have seen, there have been lots of discussions between the trade side, the trade groups on both from India, Commerce Ministry in India, and the trade people in the US government. And I have a feeling that there is a good understanding overall to where things stand. India now also has, I won't say a template, but a good, reasonable way of how do we navigate forward given UK, EFTA, EU in particular. So I feel quite confident, Shireen, that we will be able to navigate through this. There must be almost 90-95% understanding of where things are. I'm sure the last 3-4%, 5% will be done. I think both parties are pretty clear that they have to avoid the red lines, you know, both whether it's for India or for the US. And I'm sure where they have to give concessions also, those concessions will be more quantitative concessions whenever that happens later on. And at the end of it, I think this is more from a tariff standpoint. So I personally don't think, you know, it should take that much of time to get this done. I think at least that industry's view. Second is, you're absolutely right. I don't think there's any point in being euphoric or making loose comments or on this. And third, you know, as I've told earlier, I mean, overall, from an economic standpoint, the impact is not that significant one way or the other. I think it's really, so overall industry-wise, I mean, it's good news for the reasons that I mentioned earlier. But for the industries that are impacted, I think for them, at least when they are negotiating their next level of contracts when they're talking to their vendor, to their customers, long-term contracts when they're looking at. Earlier, I think somewhere in December, a lot of these contracts get negotiated in December, January, depending on the sector that you're in. And sometimes in some of these cases, I think people were kind of giving up. I think at least here, people will say, okay, let's bite the bullet for some time, and let's see, you know, if we get the new set of deals done in the next month or so, if this thing gets announced.
No, you're absolutely right on that. Amit, I'll give you the final word. You know, how much does this move the needle as far as your company, for instance, is concerned, given the fact that this overhang now seems to be behind us, even as we wait for the final details?
So, Shireen, what this does is it gives a lot of clarity and transparency to our customers in terms of, you know, where we stand as a country on tariffs, and give us, you know, more visibility and the ability to better negotiate with our customers on a longer term basis. So it changes the perspective from a short to medium term to a longer term. And I think that's the big difference. And it allows us to, you know, modify our strategies or do whatever it takes to build a longer term, bigger engagement with our customers. So that's really, it removes the overhang of uncertainty.
Yeah. It removes the overhang of uncertainty. And to borrow from Amit Kalyani, pun intended, it's been 9 months of labor, but we're finally through, and we do have at least a reciprocal tariff framework in place, if not a bilateral trade agreement, with the fine print yet to be vetted. But we will, of course, keep you posted on that right here on CNBC TV 18. It's been an all-nighter for us. We wrapped up at 2 in the morning and we started again at 6. But gentlemen, appreciate you joining us here on CNBC TV 18 to take us through industry's first reactions to what has been a significant development, a positive development, a big overhang that has now been removed. Rajiv Memani, Amit Kalyani, Sanjay Budhia and Suvankar Sen, thanks very much for joining us. We'll take a break. There's a lot more coming up. Don't go anywhere. We're back in a moment with more. months of tension and tough talk, the United States and India have agreed on a trade deal. U.S. has cut tariffs on Indian goods from 50% to 18%. President Trump claims that India will stop buying Russian oil and buy U.S. goods worth $500 billion. Prime Minister Modi says the deal will benefit both nations, but stops short of confirming Trump's claims on not buying Russian oil and commitment to buy U.S. goods. Stock markets rocket after U.S. cuts tariff on India to 18%. The Sensex and the Nifty gain over 2%, marking the biggest rally in 9 months. More than 12 lakh crore rupees added to investor wealth as all sectoral indices close in the green. The rupee rallies against the dollar after the U.S. tariffs are cut, moves closer to the 90 mark after the biggest single-day gain in 7 years. India incubates the fine print of the trade deal with the U.S. Industry is hopeful that the 18% tariff rate would be extended to sectors including metals and auto, which come under the purview of the U.S. national security industry. Bodies also hailed the reduction of tariffs as a step forward in the strategic partnership. Chaos in Parliament. Opposition demands the government submits the full text of the trade deal with the European Union and the US. Rahul Gandhi once again stopped from quoting an article about an unpublished book authored by the former army chief on the Ladakh standoff with China. Finance Minister Nirmala Sitharaman promises to meet the 80,000 crore rupee disinvestment target in her first post-budget interview, says STT hike on F&O is purely aimed at curbing speculation. Also adds the government is not ignoring the rupee but taking a realistic approach. That's an exclusive. Gold and silver rebound after suffering a historic sell-off in the last 2 sessions. Stock markets also recover across Asia and Europe. Bitcoin attempts to rebound after a brutal week but remains below $80,000. Private equity major Advent to invest more than 2,700 crore rupees into Aditya Birla Housing Finance's growth capital. This marks one of the largest fund infusion into the housing finance sectors in the recent months, following deals at Shriram Housing and DMI Finance. Policy Bazaar's parent PB Fintech to consider acquiring an insurance major in UK and Europe. Sources say the deal size could be around $1 billion. This comes a day after the board approved raising funds through a QIP. The Supreme Court lashes out at WhatsApp for sharing user data with its parent company. Meta observes the only choice to customers cannot be to either share data or stop using the service. WhatsApp argues the company Law Appellate Tribunal has allowed it to share data with Meta. Stock markets skyrocketed at opening bell and the bulls managed to hold on to the gains through the course of the day after that big breakthrough between India and the US on the trade deal after months of wrangling. The Sensex gained over 2,000 points and the Nifty closed 600 points higher. All sectoral indices closing with gains. More than 12 lakh crores was added to the market cap of listed companies today. Nigel standing by to take us through what was a terrific Tuesday for the bulls. Nigel.
Well, it was a terrific Tuesday. You said it, right? What a trading session we saw, both in the equity as well as in the money market. The bulls will be feeling good because the rupee showed some strength. And I think the biggest positive today was the kind of breadth that we had with the number of stocks that were advancing were way more than the number of stocks declining. And in fact, if we looked at it, well, the total market capitalization was close to around 12.5 lakh crore rupees. There was a bout of massive short covering that we saw in today's trading session. Well, to give you a couple of gainers then in trade, the textile gainers, they were up and about in today's trading session. Whether you look at Gokul Das, you looked at Wellspun Living, or even Indocount, big gains is what we saw on all these counters. And that's the number that I'm actually talking about, the number of stocks that were advancing. 2,500 stocks. It's been a while since I've seen a number like that. But any kind of stock that had exposure to the United States across sectors did well. Case in point being an APAR that has cables out there, or an Avalon Tech that is an EMS play. It has exposure to the United States. That did pretty well. And ADF Foods as well. That stock was flying away in today's trading session. So plenty of gainers on the list out there. Add to the list some of the jewelers. Goldium was higher in trade today. And an auto ancillary stock like JNA Axles that had pulled back a goodish deal from the recent top, well, that went home with gains of close to around 15%. You also had Carousel. That's a building products company. Well, that stock as well did go up close to around 18%. But the barometer of the kind of sentiment that you saw in the market today was BSE. A couple of trading sessions ago, everyone was worried about STT. Guess what? The stock has bounced and now it's trading at above the levels that we saw prior to the STT announcement. So that's the kind of move that we saw, 6% higher in today's trading session. For the time being, the street has brushed aside those STT worries. Big boy Reliance Industries did participate from the Nifty pack, and following it up, was Jio Financial because of its holding as well that it has in Reliance Industries. Result reactions, there were a couple out there. MobiWick, that stock ended higher with a gain of around 20%. And Adani Ports did go ahead and up its guidance, so the street liked that. In fact, the Adani Group stocks did pretty well. Adani Power, Adani Green, as well as Adani Enterprises, those stocks were up and about. Some of the solar plays, there was a worry when this tariff was there that the solar plays, some of their exports could get disrupted. But Vari Energies and Premier Energies, both of them did bounce back in today's trading session. So it was good for any kind of stock that has some exposure to the United States, and now the tariffs will be relatively lower. There'll be a few stocks, though, that were under pressure. PB Fintech, they're being very ambitious, looking at inorganic growth, looking to raise some money. So the stock did get slammed back. Meesho as well, in reaction to its numbers, the stock was under some pressure. And Asia's Wopac as well was under some pressure in today's trading session. But net, it was a terrific Tuesday. The bulls will be feeling good now that you've got the sentiment booster with the tariffs coming down and a trade deal being announced with the United States. Now it's back to tracking earnings, and more earnings. But for the time being, the bulls, they're back in the game and they fought back today. Back to you.
They are back in the game, most certainly are. Nigel, many thanks for joining us. And that's the big story this evening. After months of tension and tough talk, the US and India have agreed on a trade deal, a reciprocal tariff framework to be specific. The US has agreed to cut tariffs on Indian goods from 50% to 18%. Now, in a post on Truth Social, US President Donald Trump claimed that India will stop buying Russian oil and buy US goods worth $500 billion. That's pretty much the size of the annual budget of the Indian government. Now, Prime Minister Modi has said the deal will benefit both nations, but he stopped short of confirming President Trump's claims on Russian oil and the commitment to buy US goods, which in President Trump's post includes things like agricultural products. Now, the US tariffs on India are now at the lowest level compared to other emerging economies, with Indonesia facing a tariff rate of 19%, China 34%. The announcement comes just a week after India and the EU finalized the deal, which has become India's 9th trade agreement in the last 4 years. Now, while neither side has confirmed details of the trade deal yet, speaking to Network 18 exclusively, US Ambassador to India Sergio Gore, the man who's played a crucial role in perhaps breaking the stalemate, says that part of the agreement is India's promise to stop buying Russian oil. Here's a timeline on how the two nations delivered on the trade deal after months of labor.
Starting tomorrow, the United States will implement reciprocal tariffs on other nations. It's been a long time since we even thought of that.
The fact that India is the Maharaja of tariffs, it's the highest tariffs in the world, charging on American products.
We therefore weren't doing much business with India, but they were doing business with us because we weren't charging them. Foolishly, we weren't charging them. We are engaged, we remain engaged with the United States, and at this time, I can't say more than that.
Mr. President, this is Chandra Shrikant from India. Can you give us an update on the India-US trade deal?
First of all, I have great respect for your Prime Minister. He's a fantastic man and friend of mine, and we're going to have a good deal.
Since I arrived in India about a month ago, I have said, and I truly mean it, that the two leaders have a great personal relationship. And that is something that carried this deal forward.
This is a good thing that has happened for the country, and the exporters will be happy.
Trade talks never had any adverse impact on the defense collaboration, which was going on like as usual in any case.
But
Thank you.
It will, the collaboration between Indian defense companies and US companies will increase?
I hope so. We welcome all global OEMs to invest in India.
We are happy that the trade deal has got finalized. It removes uncertainty in this space, and we look forward to the partnering of two of the largest economies and democracies in the world.
Well, it's taken us 9 months, but here we are, a stalemate that has finally closed and ended as far as the US-India bilateral trade agreement is concerned, the BTA is still way off. What we do have is a reciprocal tariff framework. I'm joined by the FICCI top brass, President Anant Goenka, Senior Vice President Vijay Shankar, Vice President Puneet Dalmia, former FICCI President Shubhrikant Panda, also with us. Gentlemen, appreciate you joining us here on the program. Anant, to you, we've been waiting for this overnight. President Trump surprising us with the announcement. A big overhang put behind us, at least for now, even as we await the fine print. What does it mean for industry and for business?
Absolutely. We are very optimistic about this. It's something that an uncertainty that has gone away. The benefits really is on the psychology that the uncertainty in general is never welcome. So to that extent, we now have clarity. The second benefit is a lot on the rupee, now strengthening, which has been weakening for some time. And the big benefit to certain key sectors that were getting affected, which are employment linked. So certainly it will bring about a lot more employment and big relief to critical sectors of textiles, apparels, and others.
Yes, a big relief to a lot of those exporting sectors that were hit quite badly, including sectors like gems and jewelry. Vijay, let me come to you now. And, we heard from the Chief Economic Advisor. This was one of the factors he had said that could propel growth higher. And he believes that with this tariff overhang out of the way, we could be looking at a 7.4% number as well. On balance, even as we wait for the details to be operationalized and the tariff rates to kick in, what does this now also mean for India looking at the US as a market?
Irene, as we all know, the US is the biggest market globally, is the biggest consumer globally, and certainly the biggest market for Indian goods, for Indian merchandise goods and services. And I think this is the one remaining big overhang on the Indian economy over the last few months. And now that once this is lifted, I think the sky is the limit. I certainly see an upside to this growth projection. And I think it's up to India Inc. to take advantage and work with the government to ensure that this growth indeed materializes.
Yes, while we await the details, Puneet Dalmia, many claims that President Trump is making, whether it is India committing to saying no to Russian oil or that $500 billion number that he's spoken of that India will purchase from the U.S. made in America goods. But Puneet, while we wait for those claims to be responded to, and we haven't had a response yet, the biggest beneficiaries outside of the sectors that were impacted the most, the export-oriented sectors, what do you really believe this could mean in the medium to long term?
I think this is a defining moment for India in many ways. We just started with a large deal with the EU, and it was termed as the mother of all deals. And back to back, we have a great deal with the US. So I think the good thing for India is that we are diversifying our markets. We are participating in equal terms with the big economies of the world, and we have a seat at the global high table of geopolitics. And also, I think we are doing transactions with large democracies of the world with shared values, which will create more sustainable long-term relationships. So I think it's a defining moment for India in many ways. Large transactions, very defining opportunities for Indian exporters, and also I think sustainable deals. So it's not done in a hurry, but it's done with a lot of thought, lot of detailing, and I think there was a lot of discussion when it will happen. But I think a lot of work has gone behind the scenes. So my big compliments to all the people in the government and the bureaucracy to ensure that we have started 2026 with a bang, and I hope that we can build on this and deliver exceptional long-term growth for exporters as well as provide opportunities to Indian consumers.
Yes, those opportunities are something that we need to focus on. But Shubhrikant, coming to you, now, as this deal gets operationalized, what is going to be crucial is that what goods come into the zero tariff category, as President Trump has claimed. We need to wait to understand what the fine print looks like. But, if India has had to give some concessions, do you believe that in the long term, it all adds up because you now get this big overhang out of the way?
So, Shireen, this is a point I have been making in a variety of contexts over the last, couple of weeks, which is that free trade agreements and deals such as these are give and take. It would be wonderful to get everything that we wanted without conceding anything, but that's not how it works. So one will have to wait for the fine print to see what is included, what all is covered under zero tariffs, and all of that. But there is no doubting the importance of this because, as Vijay mentioned, the US is the biggest consuming market in the world. And our largest trading partner with $130 billion plus worth of goods, merchandise goods trade. And if you add services to it, then in excess of $210 billion. So this is very significant. And I think what is worth highlighting here is not just the 18% number in itself, which is, of course, a big relief from the punitive tariffs of 50%. But the fact that we have a leg up on competing economies. So barring, I think, South Korea, which has a slightly lower rate, and that also is in a little bit of a limbo at the moment. But compared to other competing nations, we certainly are at an advantage of between, one, yeah.
No, and you make a valid point there that, we're at 18% now, straight down from 50% earlier. But, you brought up the point about South Korea, where President Trump has changed his mind and said that you didn't give enough or you didn't hold up your end of the bargain. And so I'm sort of winding the clock. And I think that the trust issue, Shubhrikant, I mean, how much is that going to weigh now, even as far as investors are concerned, even though you do have an agreement technically on paper?
Well, I mean, I think President Trump has repeatedly referred to his rapport with Prime Minister Modi. That has certainly had a role to play in getting to this agreement. And not to mention that India is a large consuming market in itself. And if you look at the China plus one strategy, we certainly have a role to play. So, I mean, right at the beginning, let me not get into into casting doubt about what may or may not happen in the future. I think the fact that we have got to this stage and cracked the first the first level is a very significant development, and I'm extremely positive about it. And I think good things will come out of getting to where we have got late last night.
Oh, most certainly a significant development, without a doubt. The question, though, now is, as Shubhrikant was pointing out, and the chief economic advisor also telling us very clearly that in light of all of these FTAs, whether it's the US or the UK or in fact the EU, there is no choice but for Indian industry to become a far more competitive industry because, you cannot offer protection in perpetuity. Anant, how ready is industry for all of these changes? We keep asking government, how ready is government? But how ready is industry to cope with all of these changes?
We are absolutely gearing up, particularly with respect to, say, the EU FTA. We are sharing all the benefits and opportunities with our members. We are getting chambers to speak to each other, outreach to the Europeans as well as within India as to what all are the sectors that can benefit, what are the details on the fine print, and then activating some of that before the EU gets ratified. Similarly, for the US, similar kind of activities. Of course, it's something where it is a removal of duty. So I'm sure business there will start immediately in terms of taking advantage of that opportunity.
Right. Vijay and Puneet, a quick final word from you before we close. Vijay, now the next steps, what is it that you're going to be watching out for? What would you like clarity on?
I think we're all waiting for the fine print, Shireen, on this. But honestly, it's a truly historic moment. I think it's as was explained earlier, 2 large deals within 3 weeks is truly unprecedented. Our full compliments to the Commerce Ministry as well as to the Prime Minister and the rest of the team for pulling this off. I think the opportunities for Indian industry, we should not forget, Shireen, 9 months ago, we were speaking about China plus one. I think those aspects of Indian, the opportunities for Indian industry will resurface. I think we've got a huge opportunity with the US, and we're all very excited with this announcement, Shireen.
Puneet, the last word to you.
Yeah, I would just say that India is offering domestic growth as well as global opportunities. For this, we have to be globally competitive in terms of production and efficiency. And I think a lot of enablers are also being put in place, which was already outlined in this budget. We are making massive investments in physical and digital infrastructure. which will reduce the cost of logistics and also boost productivity. We are also enabling more ease of compliance and better stable tax regime. So I think a lot of these enablers, which will give predictability internally and also improve productivity and cause inclusion, are being put in place. So all in all, I think it is not just about these deals, but how to strengthen ourselves and gear ourselves up for capturing these opportunities is something that has been well thought through, and it will play out over the coming years.
Yes, it certainly will play out over the next coming years, and hopefully to our advantage. That is the hope and the aspiration. Anant Goenka, Vijay Sankar, Puneet Dalmia and Shubhrikant Panda, always a pleasure. Many thanks for joining us on what has been a big day for the Indian economy, a big day for the Indian stock markets, and a big day for the Indian currency market as well. We've seen gains across the board and a sigh of relief that while it may have taken 9 months, it certainly is something that hopefully is behind us. With that, it is time for us to wrap up this special edition of CNBC TV 18's broadcast. We'll take a quick break. Don't go anywhere. We decode the whatever fine print we do have of the India-US trade deal after the break.
Hello and welcome to this Commodity Champions special. I'm Manisha Gupta. Gold and silver prices have rebounded after suffering major losses over the last two trading sessions. The gold prices are hovering around that $4,900 per ounce mark, while silver is trading above $87 an ounce. Last Friday, gold prices had plunged nearly 10% in one single trading day, its steepest one single day decline in decades, while silver marked its worst one-day performance since 1980. Prices have dropped after Chicago Mercantile Exchange announced hikes in margin on its precious metal futures, and the dollar index strengthened as U.S. President Trump named the next Federal Reserve chair. Despite today's relief rally, the gold prices still are down 6% on a week-on-week basis, while silver is down 22%. Back home, the precious metals rose on the back of a sentiment-led market response as U.S. and India agreed on a trade deal. The tariffs on India have been cut from 50 to 18%. While the deal doesn't directly impact gold and silver, it could improve export flows of gem and jewelry, ease pressures on the rupee, and support physical demand for the precious metals. In fact, the rupee staged its biggest rally in 7 years following the announcement. Joining us now to discuss this and more is Michael Dorenzio. He's President and CEO at Silver Institute. Also joining us is Amit Goel, co-founder and Chief Global Strategist at Pace 360. Gentlemen, hi, thank you so much for joining in. And I first of all want to talk about silver, Michael, because it did continue to gain even as markets fell, that after 1995 perhaps was all froth. And then we've seen a big profit taking come in as well. 37% on Friday, 15% on a Monday. It continues to be volatile today as well. Your first sense on the volatility in prices?
Well, the volatility in prices, well, first of all, Manisha, thank you so much for having me on. The volatility in prices was rather striking on Friday, right? It started in China overseas. You saw more sellers than you had buyers. It extended into the United States with the appointment of Mr. Warsh as the nominee to be the next head of the Federal Reserve. And then it went further from there. We saw a lot of volatility in the SLV. But what's maintaining this market and why we are still up on a percentage basis this year overall is the fact that we're seeing a lot of retail demand for silver, not just here in the United States, but across the globe. So yes, some of these moves were quite striking on Friday. Some people have called January the most volatile month in the history of the precious metals market. But look, we're up another 10% today. We're well above $80 marks. New floors have been set for silver. So we're looking forward to a rather robust year as we continue down.
Michael, at these current levels and the way the prices have run up, there also have been concerns from the industrial demand side of it, would you say?
Yeah, look, there is no doubt about it. But Manisha, let's not forget the fact that even when silver was at $13, $15 an ounce, and $25 an ounce, industrialists were looking to see if they could get out of their silver position in their particular applications. So this is nothing new. We're seeing it clearly in the photovoltaic world. We're going to have a small decrease in silver's use in PV in 2026, but it's going to be small because the number of installations will continue to grow across the globe.
Michael, you said the retail demand has been quite strong, but we do understand that a lot of speculative froth also started to come into the market. From where we stand right now, would you say much of that is that money is out, the weak hands are out?
I think they are. I think for now they are. Look, there was a big run up. It took us over 45 years to get to $50. It took us a little less than 2.5 months to get to 100. And then as the year progressed, we got up darn near $120 per ounce. A lot of that is clearly speculative. Some of it's traded on the fundamentals of the market, meaning that we're in the 6th year of a structural market deficit. Industrial demand is projected to be somewhat strong this year. And quite frankly, retail investment last year was at one of its highest levels ever, and it's continued. We project it will continue through the remainder of 2026.
Michael, as we move forward from here, most people believe that we could be looking at higher highs continuing in silver. I mean, 100, 125 is still a possibility by the end of this year, would you say?
It is indeed. It is indeed. I've seen numbers that are higher. As you know, I don't make price projections, but quite frankly, the market is operating well. I think what happened on Friday and again yesterday was somewhat healthy for the market. It happened in 2011. It happened in 1980. The markets do take a step back, but look at in those two previous years, the market really never totally recovered. Here we are at about almost $90 silver this morning. I'm getting ready for the U.S. to open up here in a few hours, and we'll see how it goes. But everything I'm reading is that it's a bull market for silver still, and there's a lot more room to run.
Let's get in a sense from Amit Goel as well. He's joined into this discussion. Amit, what's your sense? Such huge volatility. I remember you telling us that at some point in time, there's going to be a brid profit taking. You told me 40, 50% is easy to come, and we've seen that happen, Amit.
Yeah, firstly, Manisha, thanks for having me on. So my understanding is that the silver bubble has got burst. It got overextended a way lot more than what I had imagined. Even till a few weeks back, I was of the opinion that 104, around 104 to 108 is possibly a target that could happen, and then the bubble would fizzle out or the bubble would start deflating, but it went all the way up to 121. I would call silver one of the biggest bubbles that has happened, not just in the precious metal space, but in the overall financial market space in a very, very long time. But having said that, with any bubble that has got burst in the world in last 500 years, there is a very important characteristic which has played out time and time again, literally every time without exception in the last 500 years, which is that once the bubble gets burst, once the bubble pops, the first fall is sheer Armageddon, because people are so overextended. When something is at its multi-year and all-time high and going up like many percentage points on a daily basis, people are so overextended and people are so over invested in that asset class that the first blow is a crushing blow which takes out all the weak players. And I agree with Michael that a lot of the weak players have been taken out in the last few days. But this is a very, very long-term bubble deflation process. So I would not be surprised if silver goes back to $100 or even maybe a little more than $100 over the next few weeks. And the long-term bulls will yet again start declaring victory. They will say, look, the weak hands had come in, the weak hands have now been taken out, and we are now back in the bull run. But that is not what I believe it is. It is a bubble that has popped. The bubble deflation process is on, but no bubble gets deflated in 2 or 3 days of trading, Manisha. It takes at least 1 to 2 years for the bubble to get deflated down to its logical level, which is about 70 to 75% lower than the top, which has already been made. But before that, I think the first rally after the first collapse is usually a very powerful rally because the long-term conviction is still unshakable in precious metals.
Right.
So we see silver going back to $100 or maybe higher. I see gold going back to maybe $5,200 or $5,300. And then the next downward phase would begin. And this is a long-term process which will take at least 1 year. But in my opinion, it's going to be longer. It's probably going to be 1.5 to 2 years before they can come down to levels where a long-term buyer can buy them without having sleepless nights about what my potential downside is.
Well, I'm assuming Michael would agree with everything that you said, except your usage of the word bubble, Michael.
Yeah, I do. Look at people have different terms for different events in the financial markets, and clearly Amit is saying what a lot of people have already said, that this is a bubble in the silver that we've seen in the last 15 months or so. But quite frankly, I think today's price performance is rather positive for silver and for gold as well. And I do agree with him that we need to take some time to let things pause for a bit and see where we go from here. But as I mentioned earlier, quite frankly, new floors have been set for silver. And, I don't know what that number is, but it's not 40, it's not 50, and it's not 60. So let's just see how this year plays out. The fundamentals of the silver market are strong. And I think that a lot of the weakness in the market has been weeded out, and we'll see where we go from here.
The other thing, Amit, that I want to speak to you about is the US and India trade agreement. And we've seen markets already cheer that on. The equity markets, the commodities have seen some strength come in as well. Bonds, Indian rupee for that matter. This is the day that you have a single largest increase in the Indian currency in the last 7 years, 1.5% of gains almost. How have you read into that?
So, Manisha, I think clearly it's a big event. And I think in quick succession, we have concluded deals with two of our largest trading partners, US and European Union. And I think this is a great tailwind. And plus the fact that the Indian equities have underperformed so much. In my career of last 31 years, I have never seen this kind of an underperformance by the Indian market, except when there is a scam or something that broke out in India, which the rest of the world did not have to worry about. So my sense is, Manisha, that this stock underperformance would see some reversion to the mean. And Indian equities are in a sweet spot for the next couple of months, not just because of the trade deal, but also because of the fact that our GDP numbers have been good. Corporate results have not been great, but not disappointing as well. Plus, we would be getting into a new financial year. So, if you would look at fiscal year 28 earnings, then some people would begin to say that Indian markets are not finally so overvalued after all. And plus the fact that this AI bubble is probably on the cusp of being at least start deflating, which would mean that some money would flow from South Korea and Taiwan and China to India. So my sense is that Indian market is in a sweet spot, and that will also take away some of the attention from precious metals to Indian equities. And I must point out here, Manisha, that the global silver ETFs have been seeing massive outflows since 24th of December. So they peaked out at about 870 odd million ounces. And today we are at less than 820 million ounces. So my sense is that some of the smart money has already been coming out of silver ETFs on the way up. And a lot of retail guys have got stuck with silver at high prices. And you are going to see more of that because retail guys are probably going to continue to buy. But I think the smart money is going to play those waves up and down, but not be wedded to the metal for the next few years. But I guess it's all happening in real time, and the cross flows between equities and precious metals, there is always going to be some tussle as to which one has lesser risk or which one has more potential.
Well, yes, a lot of money is moving around, and whether it's about equities and commodities, currencies, bonds, there's a lot of movement everywhere. Whether it is about the domestic cues or, of course, the international cues, all have been quite volatile there. Thank you so much, Michael and Amit, for joining in and making sense of what really to look forward to in the international markets there, and how should you be approaching silver in the months to come as well. But with that, we'll go for a very short break. When we come back, we will also be talking about the US and India trade deal in slightly more detail. We'll also talk about on what does it really mean for the gem and jewelry sector in sense of exports. This is on the other side. Welcome back. You're watching Commodity Champions with us. Well, the India-US trade deal might ease pressure on the country's gem and jewelry exports. The tariffs had disrupted trade flows to the United States. The duties on polished diamonds and colored gemstones had jumped from near zero to as high as 50% by the time it was August in 2025, while the duties on jewelry surged from 5 to 7% to nearly 55 to 57%. The US has historically been one of India's largest markets for gem and jewelry exports. The trade deal could help gradually recover those export numbers. We are now joined by Adil Kotwal. He is owner at Creation Jewels and also chairman at SEEP's Gem and Jewelry Manufacturing Association. Adil, hi, thank you so much for joining in. It clearly comes in as a breath of good news, I'm sure, for your sector. The numbers that I have been looking at from April to December last year clearly have been quite dismal when it comes to US markets.
Thank you, Manisha, for having me on this call. Yes, it's been a great relief this morning to hear that the tariff has come down to 18%. Our exports fell by 44%. And the good news is that now we have a level playing field with all our players in the Asia. Bangkok, Vietnam, all these players had a lower tariff and we had a very high tariff. So obviously, business went to those places. Hopefully, we should get back the business because we have the diamonds, we have the ability to manufacture jewelry here. So that's a big positive. The US retail space, because of the high tariff situation from India, the retailers also were very careful of what they could buy from us. And keeping that in mind, now the retailers will have a clarity. This is going to be the duties. This is going to be the goal. The goal we are expecting at about 4,800 to 5,200 levels. So there's going to be some certainty in the pricing structure, and that's a big positive.
Adil, I was reading a report which suggested that the US jewelry inventory is also on the lower side. That would mean positive for Indian sellers.
Yes, for 2026, we expect a good bumper year because the retailers are at a very low on their jewelry. You see, even though Thailand, Vietnam, and all these people do manufacture, but the entire funding eventually is from India. So to the US also, we have a very strong financial backing, which the other countries don't have. So based on that, I think the retail will be very good this year. Our exports will definitely, I would say, skyrocket. We are ready to take on that challenge. We have some great styling already in place. And we are ready to take on this new phase. And I think it's hugely positive.
I know it's still early days, Adil, but last year, as you said, the last April to December, that is, has been a 44% overall decline. Are you penciling anything at all for 2026 as a calendar year, a 10%, 20% growth from where we stand?
I would say compared to the fall of 44%, first we should catch up on that 44% loss. We have to catch up that entire ground that we have lost, which I'm very confident we'll be able to do. So in some ways, if you calculate, I think it's just going to be that jump. So we are this year at about $3.8 billion exports compared to the $8.7 billion, which we have been used to doing. We should go back to the $8 billion export range.
Adil, I mean, this is just tweets from both the President and the Prime Minister of India, really. The details, the notification, the document is something that, assuming both the countries are still waiting for. What is it that you're hoping to see in that document?
Well, we were hoping to see a little less tariff for jewelry, but if it's 18%, great. But if it finally comes out to a little lower, that would be fantastic. We were all expecting it to be 15%. But if it's going to be 18%, then it's going to be 18%. We can all live with it because we have gone through a very difficult phase last year. We were hit two ways. One was with the tariff and one was the gold price going crazy. So hopefully in 2026, we have definitely some certainty over the duty part. And gold now, don't expect that it will double. We expect, all the bankers expect gold to be in the region of 4,800 to 5,200 is what my sense is. That's where gold will be. So it will bring stability to the market. And I think a good year for India and a good year for SEEPs for sure.
Would you see a lot of Indian players then increasing their exposure, stores, etc. in US now? Those plans have been around for some time.
Yes, definitely. It's our largest market. Of course, whilst the US tariffs have gone up, we have started looking at other markets also. But there is no comparison. US by far is the largest market. It's the largest consumer market. and it will keep growing. People love jewelry out there. People have the ability to spend. They can afford. No other country in the world has the kind of power that USA has. The consumer power in USA is at its best. So it's a very important market for us. We are very happy. All the hard work put in by the Commerce Ministry, by Shri Piyush Goyalji, by the Prime Minister and everybody else has all worked out in our favor finally. We had a rough 6 months, but it's all behind us. From today onwards, it's sunrise.
All right. Adil, I was looking at the details and the numbers as well. So while, of course, jewelry has seen a decline, plain and studded, both, of course, diamonds have taken a very big hit, 60% down for naturals, 50% down for lab-grown diamonds as well. Do you see all of these numbers recover as well?
So the jewelry market has taken a turn towards the lab-grown industry. It's just people who could never afford a 2-carat oval center stone ring can now buy a 2-carat oval lab-grown at an affordable price. So the masses will start buying lab-grown in a big way. Lab-grown pricing has come down purely because the efficiencies have come in. Manufacturing efficiencies came up. People's machineries got depreciated, so they could sell at a better price. So in natural, the overall volume has come down because the overall pricing has come down purely because of efficiencies that we have brought in. However, now I believe the lab-grown prices should be at the same level going forward. I don't expect the lab-grown prices to go further below these levels. On the natural side, well, people have lost a little bit of faith in why they should be buying a $400 per carat goods against $100 a carat lab-grown. So gold having gone up to this level, duty having gone up, the only savior for our jewelry industry was the lab-grown diamonds. They look great. All stones are VSSI. The jewelry looks beautiful instead of using previously the I2, I3 or the I2 goods, which were, dull and hazy. Now we're going to give a consumer a great quality product in natural, in lab-grown. So obviously lab-grown is going to be the flavor for the next couple of years. And keeping in mind that the gold prices have gone up to where they are, the only affordable jewelry now will be gold with lab-grown.
All right.
Natural will still have its place amongst the ultra-rich. The medium players, the people who are earning $100,000, $200,000 will definitely go towards lab-grown. And then people who have the money will buy high-end natural diamonds.
I got the point. Adil, just one final quick question. And you told me earlier that while India is exporting and doing FTAs and BTAs with various other countries, there's no market as big as US there. But how are you looking at European Union, UK? UAE continues to be a great market. So is the case with Australia. You guys have worked with Oman. Conversation with various other countries is ongoing as well. Would you say it's a great time, really? US is coming back, and now you have more countries.
Yes. So you see, Australia, UK, European Union, all of them which had some duty or the other, the duty is gone. So the retailers find that, it's more affordable to buy from India. They were previously buying from various other countries. Let's say they were buying from China, whatever, or Bangkok. Now with India, if it's going to be a much lower rate of duty, we don't know what the final print of the European Union will come out. But let's say for Australia, now there is no duty. We are shipping to Australia duty-free. So obviously, India has a better chance of selling to those countries. And Australians will kind of buy more from India than buy from the rest of the world. So same process will happen with the European Union, same process will happen with UK, and I hope with Canada very soon. These are all large markets for us.
Oh, absolutely. It does look like, Mr. Adil Kotwal, as you said, 2026 does seem like the year that India is going to cherish, because while you have other markets opening for you, there are more FTAs happening. And the US, which is the largest market for us and growing, is also coming back. So clearly, 2026 seems to be a great year for gem and jewelry as a segment. Thank you so much for your time. Really appreciate you joining in and opening up to that analysis there. But with that, it's a wrap on this special edition of Commodity Champions. Thank you for watching.
Starting tomorrow, the United States will implement reciprocal tariffs on other nations. It's been a long time since we even thought of that.
The fact that India is the Maharaja of tariffs. It's the highest tariffs in the world, charging on American products.
We therefore weren't doing much business with India, but they were doing business with us because we weren't charging them. Foolishly, we weren't charging them. We are engaged, we remain engaged with the United States, and at this time, I can't say more than that.
Mr. President, this is Chandra Shrikant from India. Can you give us an update on the India-US trade deal?
First of all, I have great respect for your Prime Minister. He's a fantastic man and friend of mine, and we're going to have a good deal.
Since I arrived in India about a month ago, I have said, and I truly mean it, that the two leaders have a great personal relationship. And that is something that carried this deal forward.
This is a good thing that has happened for the country, and the exporters will be happy.
Trade talks never had any adverse impact on the defense collaboration, which was going on like as usual in any case.
But
Thank you.
The collaboration between Indian defense companies and US companies will increase?
I hope so. We welcome all global OEMs to invest in India.
We are happy that the trade deal is got finalized. It removes uncertainty in this space, and we look forward to the partnering of two of the largest economies and democracies in the world.
Hello and welcome to this special broadcast. After months of tension and tough talk, the US and India have clinched a major diplomatic breakthrough. They've agreed on a reciprocal tariff framework. The US has also agreed to cut tariffs on Indian goods from 50%. Remember, that includes the punitive 25% on account of buying Russian crude. That tariff rate now cut down to 18%. In a post on Truth Social, President Trump claimed that India will stop buying Russian oil and buy US goods worth $500 billion. That's pretty much the size of the annual budget of the Indian government. Prime Minister Modi said the deal will benefit both nations, but he stopped short of confirming many of President Trump's claims, including on whether India will stop the purchase of Russian oil, as well as President Trump's claim that India will commit to buy US goods. The US tariffs on India now at the lowest level compared to other emerging economies, with Indonesia facing a tariff rate of 19%, China 34%. The announcement comes just a week after India and the EU finalized the deal, which becomes India's 9th trade agreement in the last 4 years. While neither side has confirmed details of the trade deal yet, speaking to Network 18 exclusively, the US ambassador to India, Sergio Gore, said that part of the agreement is India's promise to stop buying Russian oil. Well, we're now joined by Meera Shankar, the former Indian ambassador to the US, and Mukesh Aghi, the president and the CEO of the US-India Strategic Partnership Forum. Mukesh, Ms. Shankar, many thanks for joining us on the program. Mukesh, to you first. It's been 9 months of agonizing waiting, a lot of back and forth. There were questions on whether this was going to lead to an irreparable damage between India and the US. What would become of the strategic partnership? Finally, President Trump doing what he does best, surprise and awe and shock and awe. Mukesh.
Well, we were, I would say, taken back by surprise. Last 9 months have been agonizing, trying to, push, cajole, pull both sides to come to understanding, because this is having a dramatic impact on the low-end exports from India, garment, gem jewelries, and a lot of people are getting basically unemployed because of that. So I think this is a very good news for India, because vis-a-vis China, which has 24% trade tariff, India has 18%. And also, if you look at the rupee depreciation of 67%, India gets much more competitive from that perspective. And this is the largest market for Indian export, both from goods perspective and services perspective. But more important, this is not just a trade deal. It does have an impact on a larger geopolitical partnership between the two countries. But more important, it does have an impact on people to people. You have around 5 million plus Indian Americans who are very much focused on building a strong relationship with India. So overall, it's good news, positive news for both countries.
Well, yes, as you point out, this is going to be a significant development for the Indian diaspora in the US as well. But Mukesh, I want to come back again now to what the deal entails. We are still waiting for contours. We're still waiting for the fine print. But let's look at President Trump's claims. And I want to understand from you the sense that you've got over the course of the 9 months where the negotiations stand. Now, President Trump says zero tariffs, that India has agreed to zero tariffs for US goods. And I want to again highlight to our viewers that this trade framework is only about goods. Services are not involved. Mukesh, in your understanding, in your assessment, were any guarantees, commitments made on zero tariffs, at least on certain products by India?
No, I think you have to understand that while there's an 18% tariff on Indian goods exports to the US, India has lowered. In certain cases, it has lower than 18%, but in no case it is 0%. But we have to look into much more details as the fine prints come out. But overall, I would say that the deal structured is a fair deal. It helps India export into the US market. Also, it helps US companies to gain access to the Indian market. But more important is the energy partnership. You have to understand that India's import of oil is substantial. And by partnering with the US, both in the crude and LNG, it is going to bring the trade surplus which India has with the US to equilibrium. That's what the president of the US wants.
Yes, that is certainly what he wants, and he's explicitly said so in his post on Truth Social. But Mukesh, to President Trump's claims that India has agreed to stop altogether the purchase of Russian crude. Now, Lindsey Graham also tweeted congratulating President Trump, saying that other countries will follow, that the actions that the Trump administration has taken with the punitive tariffs are working. Now, India has always maintained that its crude purchase is a matter of strategic autonomy. It's a choice that India will make. Do you believe that there might be conditionalities attached to it where the Trump administration has said by a certain period you need to wind down to zero and perhaps not immediately?
Well, if you look at the past history, India brought its import of Iranian oil down to zero once it was 30%. Did the same thing Venezuela. Today, Russian oil import is around 50%. It's coming down. Obviously, there's an offer to provide Venezuelan oil to India. So I think there will be some understanding. There'll be timelines to come to that understanding, but it's not immediate overnight stopover. It'll take some time.
Well, that is the big question. What is the commitment? What is the assurance? And what are the caveats and the conditionalities attached to that winding down of Russian crude, so to speak? Mukesh, I'll come back to you. Let me bring Ambassador Shankar into the conversation. Ambassador Shankar, many thanks for joining us. It's been a long night, looking at what President Trump has been saying and, of course, reactions from India while they've been calibrated, not getting into the specifics of what President Trump has said. On balance, the stalemate that we saw over the last 9 months, a big breakthrough with this development, the first big step towards mending the partnership?
I think, yes. It's a good step that the reciprocal tariffs, which were the highest on India, with the oil tariffs going up to 50% total, they have come down to 18%. And though, of course, the notice is still not out in the Federal Register, it comes into effect only when that comes. Because this means that we are getting a lower tariff rate than most of our Asian peers, though UK, Europe, Japan, and South Korea have lower tariffs. UK has 10, EU, Japan, South Korea have 15. We have 18. Most other Asian countries have 19 or 20, and China has 34. So other than Japan and South Korea, we have the lowest rates of reciprocal tariffs in Asia. Now, it doesn't mean that this automatically gives you a competitive advantage, because we have other factors which slow us down. And therefore, I think it's important that we use this opportunity to do whatever needs to be done domestically to ensure that we are in a position to take advantage of this reduction in tariff and the fact that our peers have a slightly higher rate, not very much higher, 1 or 2% higher. So in textiles, garments, etc., I think it will need some imagination also by both government and industry working together to see how we position ourselves to take advantage. So it is a good step. We don't know the details of what the deal entails from our side. Though President Trump has tweeted that we will buy, oil, energy, including possibly from Venezuela, agricultural products, technology. Now, from the Indian side, we are hearing that there could be a limited amount of agricultural products that we buy, but we don't know the details. It could be for biofuels, and there could be also, quantitative quotas, that you get X amount at a reduced tariff, more than that, the tariff goes up, or what we don't really know as yet. So we have to wait and see. Also, this thing that we will buy $500 billion worth of goods from the US, I think we buy about $45 billion today. So $500 billion is a bit of a stretch. And that's the target for two-way trade, which the two countries had set for 2030. Also, the zero duties, my sense is that it would be a kind of expression of intention that eventually, if the two countries negotiate a full free trade agreement, which they are still engaged in, then, tariffs will be brought down further or whatever. But I doubt that, we are looking at zero tariffs, 0% tariffs right now. So I think the details have to be seen. What is it that we have offered to the US? We know what the US has offered to us, which is a reduction in tariffs from 50% to 18%. But let's not forget that this is an increase on the overall US tariffs, which applied a year ago under the WTO. So it's like somebody saying, I increase the price to by 50%, then I reduce it by 25%, and it's a big deal. Yes, it's a big deal because everybody else is being held to a similar standard by the US, where tariffs for many trade partners have been unilaterally increased, which doesn't mean that it's a good thing that the US has chosen to throw the WTO out of the window on its own unilaterally and use their bully pulpit, if you will, to pressurize countries into these kind of trade deals. Because it actually enhances or emphasizes the asymmetry of power between the US and its partners.
That is correct. And that's an important point that you make, Ambassador Shankar, that, while we are, of course, it is a big development, it's a positive development, but let's not move away from the fact that this is a unilateral imposition. The tariff in itself is a unilateral imposition of the Trump administration, not just on India, but across the board. And of course, that question still with the Supreme Court, and we're waiting for that verdict. But Mukesh, coming back to you now, on the specific points that Ambassador Shankar was making, she doesn't believe that we could have given a blanket assurance of not buying Russian crude. She also believes that perhaps as far as agriculture is concerned, there could be some concessions limited in their scope. What would your understanding be on agriculture? For instance, even if you look at the India-UK trade deal, there are some agri-products that are part of the arrangement, kiwis, peach, so on and so forth. With the US, we've had walnuts, pecan nuts, and so on and so forth. What would you realistically expect on agriculture, since India has maintained that the red lines on both agriculture and dairy have been adhered to?
Well, my understanding is that the US has stated to India that we do respect your red lines, but work with us and try to find a solution. And India has said yes, we can probably take some of your product in agriculture for ethanol from that perspective, or take some of the product in dairy, which have not consumed basically meat into their diets itself. That can be achievable. So I think the effort here is to find a viable solution which not basically violates the red lines of India, but at the same time helps US in its export itself. You know, when you have a trade deal, it's not just about having a 18% tariff. You look at how you basically help friends, because the relationship you have to understand is not just about tariff between the two countries. It's much bigger and broader. And when we look at where India stands from a geopolitical perspective, its partnership with the US is critical. These are two countries which basically have more joint exercises than any other nation itself. We have more students in the US. We have more Indian Americans, basically over $5 million, generating substantial amount of remittance to India itself. So I think we have to look at the relationship beyond the trade deal when you build across the border itself.
No, you're absolutely right. But, I just want to go back to that point that you made on agriculture, that, there could be limited items. Any idea on where there was convergence arrived at, Mukesh? What are you hearing from both sides, whether there was convergence arrived at some specific items within the agri-pack?
No, Shireen, I don't have the details because things have been shifting. But basically, the understanding is that less work on bringing in corn for the ethanol, the limited quantity, because you have to understand, India does not allow GM products. And keeping and respecting that policy of India, I think that's where the compromise was made by the US and India to look at that. On the dairy side, certain kind of cheeses can be brought in. So there is some compromise, but it is not crossing the red line from the US perspective.
Not crossing the red lines as far as the US is concerned, corn for ethanol, etc. Those are things that we will have to see. But Mukesh and Ambassador Shankar, many thanks for joining us. We are still awaiting the fine print. Hopefully, perhaps by later tonight or tomorrow morning, we will see those executive orders and we will have more clarity on what the contours of this arrangement are. And we will check back in with you then. Meera Shankar and Mukesh Aghi, many thanks for joining us. That's the view there, both sides attempting to find the middle ground to take things forward. We'll take a break. Don't go anywhere. We continue the conversation when we return. Well, we are waiting for the fine print. Commerce Minister Piyush Goyal is now back in Delhi. Let's listen in.
मोदी जी का साधुवाद कर रहा है कि उन्होंने यूनाइटेड स्टेट्स ऑफ अमेरिका के साथ एक बहुत ही बढ़िया ट्रेड डील, जिसका देशवासियों को कई महीनों से इंतजार था, संपन्न किया है। देशहित और जनहित को सामने रखते हुए एक बड़ा मजबूत भारत के भविष्य को चार चांद लगाने वाला ट्रेड डील माननीय प्रधानमंत्री नरेंद्र मोदी जी के नेतृत्व में कल रात फाइनलाइज किया गया है। मैं 140 करोड़ देशवासियों की तरफ से माननीय प्रधानमंत्री नरेंद्र मोदी जी का धन्यवाद करता हूं और आप सभी को बधाई देता हूं, क्योंकि ये वास्तव में भारत की अर्थव्यवस्था को, भारत के 140 करोड़ नागरिकों को, हर गरीब, किसान, मछुआरा, गांव में रहने वाला युवा, युवती, हमारी बहनें, महिलाएं, सभी के लिए ढेर सारे अवसर लाने वाला ट्रेड डील माननीय प्रधानमंत्री जी ने कल तय किया। साधारणतः तो हम पार्लियामेंट में बोलना चाहते थे इसके बारे में, लेकिन हम सबने देखा वो भद्दा दृश्य, जिस प्रकार से विपक्ष, विशेषकर राहुल गांधी जी के नेतृत्व में कांग्रेस पार्टी और उनके मित्र पक्ष डीएमके, तृणमूल कांग्रेस, समाजवादी पार्टी, कितना भद्दा व्यवहार आज उन्होंने पार्लियामेंट में किया। माननीय अध्यक्ष जी की आसन तक पहुंचकर उनका अपमान किया। मैं घोर निंदा करता हूं विपक्ष की, राहुल गांधी जी की, जिसके कारण हम पार्लियामेंट के बदले आज आपके समक्ष यहां पे जानकारी देने आए हैं। हम सब जानते हैं कि माननीय प्रधानमंत्री जी ने अपने मित्रता के रखते प्रेसिडेंट ट्रंप के साथ जो उनके आत्मीय संबंध है, उसके मद्देनजर जो ट्रेड डील यूनाइटेड स्टेट्स ऑफ अमेरिका के साथ फाइनलाइज की है, वो हमारे सभी पड़ोसी, सभी आसपास के देश, सभी जो देश हमारे साथ स्पर्धा करते हैं, उन सभी देशों में सबसे बढ़िया डील भारत को मिली है। आप सबको, हम सबको मिली है, जो देशवासियों के उज्जवल भविष्य के लिए शुभ संकेत लाती है। हम सब जानते हैं महीनों से हमारी नेगोशिएटिंग टीम्स यूनाइटेड स्टेट्स ऑफ अमेरिका के अधिकारियों के साथ, मंत्रियों के साथ लगातार डायलॉग बनाए हुए थी, बातचीत में कर रही थी। कई सारे जटिल विषय थे, कई सारी समस्याएं थी। भारत के ऊपर 50% रेसिप्रोकल टैरिफ लगा हुआ था। उद्योग जगत को, हमारे किसानों को जो बड़ी मात्रा में निर्यात करते हैं, सभी को तकलीफ हो रही थी। हमारे मरीन एक्सपोर्टर्स, सी फूड एक्सपोर्टर्स भी दिक्कत में थे। वस्त्र क्षेत्र, टेक्सटाइल सेक्टर में भी आवश्यकता थी कि ये रेट कम हो। यहां तक कि कुछ दिन पहले तक विपक्ष के नेता भी हमें पूछ रहे थे कि कब होगा यूएस डील। और मैं हैरान हूं, ये डबल स्टैंडर्ड्स जो राहुल गांधी जी बार बार दिखाते हैं। माननीय प्रधानमंत्री नरेंद्र मोदी जी ने कल इतनी बढ़िया डील भारत के लिए तय की है जो इतने वर्ष 1 महीनों में हम तय नहीं कर पा रहे थे। उन्होंने अपने मित्रता के आधार पर भारत के हितों को प्राथमिकता देते हुए और भारत की तेज गति से बढ़ती हुई अर्थव्यवस्था को विश्व के सामने जिस प्रकार से पेश किया है, उसके चलते भारत को ये बढ़िया डील माननीय प्रधानमंत्री जी के नेतृत्व में मिली है। मैं पुनः एक बार उनके नेतृत्व के लिए, उनके मार्गदर्शन के लिए और जिस प्रकार से उन्होंने जनहित और देशहित को संभाला है, उसके लिए उनका धन्यवाद करता हूं। मित्रों, हम सब जानते हैं, पूरा देश जानता है किस प्रकार से माननीय प्रधानमंत्री हमेशा हमारे किसानों के लिए, पशुपालन के साथ जुड़े हुए हमारे भाई बहनों के लिए, डेयरी सेक्टर के लिए लगातार चिंतित रहते हैं, उनके हितों की संरक्षण करते हैं। यहां तक कि हमने देखा इतना बड़ा ट्रेड डील, रीजनल कॉम्प्रिहेंसिव इकोनॉमिक पार्टनरशिप आरसेप, जिसमें कांग्रेस ने भारत को झोंक दिया था 2011-12 में, एक प्रकार से चाइना के साथ एफटीए करने का पाप राहुल गांधी ने किया था, उससे भी माननीय प्रधानमंत्री जी ने देश को बचाया और आरसेप से जुड़ने से इनकार कर दिया, जिसके बाद पूरे देश में राहत की सब चारों ओर से सूचना आई थी। माननीय प्रधानमंत्री नरेंद्र मोदी जी ने हमेशा एग्रीकल्चर और डेयरी, इन दोनों सेक्टर्स को संभाला है, उनके हितों को संभाला है और इस क्षेत्र में लोगों को उज्जवल भविष्य मिले और मौके मिले, आमदनी बढ़े, उसके लिए लगातार काम किया है। कभी उनके साथ, उनके हितों के साथ समझौता माननीय प्रधानमंत्री जी ने नहीं होने दिया और मुझे खुशी है कि पूरा देश इस बात को समझता है, इस बात का उनको आकलन है और यूएस ट्रेड डील में भी भारत के जो सेंसिटिव सेक्टर्स हैं, एग्रीकल्चर को लेके, डेयरी को लेके, उनको संरक्षित किया गया है। हमने पूरे देश भर से आई हुई खबरों को देखा, चारों ओर उल्लास है। हमारे जितने लोग भारत के निर्यात में जुड़े हुए, भारत के टेक्नोलॉजी सेक्टर से जुड़े हुए, भारत में नई आधुनिक टेक्नोलॉजी लाकर यहाँ ग्लोबल सप्लाई चेन्स, ग्लोबल वैल्यू चेन्स का हिस्सा बनना चाहते हैं, ग्लोबल कैपेबिलिटी सेंटर्स लगाना चाहते हैं, निवेश करना चाहते हैं। अलग अलग क्षेत्र जो विशेषकर लेबर इंटेंसिव है, जिसमें लाखों करोड़ों लोगों को नौकरी का, रोजगार का साधन मिलता है, वो सब कितने उत्साहित हैं इस ट्रेड डील से। हमारे मछुआरे जो सी फूड एक्सपोर्ट करते हैं, उन्होंने जिस प्रकार से सभी कोस्टल रीजन्स में खुशी मनाई है, ये दर्शाता है कि ये ट्रेड डील भारत के उज्जवल भविष्य का शुभ संकेत लेके आई है। मित्रों, मैं मानता हूं कि इस ट्रेड डील से हमारे जो सूक्ष्म, लघु और मध्यम उद्योग है, एमएसएमई सेक्टर है, हमारे इंजीनियरिंग सेक्टर के सभी प्लेयर्स, चाहे ऑटो कंपोनेंट्स बनाते हो, एयरक्राफ्ट पार्ट्स बनाते हो, इंजीनियरिंग के अलग अलग प्रकार के सामान अमेरिका में बेचने का काम करते हो या भविष्य में करना चाहे, हमारे टेक्सटाइल क्षेत्र, हमारा जेम एंड ज्वेलरी सेक्टर, हमारा लेदर गुड सेक्टर, हमारा मरीन गुड सेक्टर, सभी को ढेर सारे अवसर, ढेर सारे मौके इस ट्रेड डील के माध्यम से मिलेंगे। बड़ा दुर्भाग्य है कि राहुल गांधी जैसे नकारात्मक सोच रखने वाले नेता देश को आज गुमराह या भ्रमित करने की कोशिश कर रहे हैं। मैं घोर निंदा करता हूं राहुल गांधी जी की। झूठ और फरेब के नाम पे वो लोगों को गुमराह करना चाहते हैं। उनको देश की तरक्की से कोई लेना देना नहीं है। देश आगे बढ़ रहा है, विश्व की सबसे तेज गति से बढ़ने वाली अर्थव्यवस्था बना है, उनको उससे कोई दिलचस्पी नहीं है। उनका बस चले तो जिस प्रकार से यूपीए के राज में, कांग्रेस के राज में 10 वर्षों में उन्होंने भारत की अर्थव्यवस्था को ध्वस्त कर दिया था, फ्रेजाइल 5 इकोनॉमी बना दी, महंगाई से लोगों को परेशान कर दिया, विकास यात्रा ठप कर दी। उनका बस चलेगा तो भारत को फिर एक बार उसी प्रकार से देखना चाहेंगे। और मुझे नहीं लगता भारत का एक भी व्यक्ति, एक भी नागरिक उनके इस भ्रामक सोच के साथ अपने आप को जोड़ सकता है। राहुल गांधी जी एक नकारात्मक सोच के प्रतीक है और उनके साथ जुड़कर डीएमके पार्टी के नेता हो, तृणमूल के नेता हो, चाहे वो समाजवादी पार्टी के नेता हो, इन सभी ने शायद भारत के उज्जवल भविष्य, हमारे युवा युवतियों को जो नए अवसर मिल रहे हैं, जो हमारा उद्योग तेज गति से आगे प्रगति करने के लिए तत्पर है, जो नए नए क्षेत्र, आर्टिफिशियल इंटेलिजेंस हो, सेमीकंडक्टर्स हो, क्रिटिकल मिनरल्स हो, नए नए अति आधुनिक जो क्षेत्र खुल रहे हैं, उसमें जो हमें यूनाइटेड स्टेट्स ऑफ अमेरिका से मदद मिल सकती है, जो वहां से हमें सामान मिल सकता है, हाई क्वालिटी, हाई परफॉर्मेंस डेटा सेंटर्स भारत में आ सकते हैं, लाखों करोड़ रुपए का जो निवेश हम भारत में आकर्षित करने में जुटे हुए हैं। राहुल गांधी जी को क्या मिर्ची लगती है? राहुल गांधी जी को देश की प्रगति से नफरत है? राहुल गांधी जी को हमारी बहनों से, हमारे युवा युवतियों से कोई नाराजगी है, जो उनका उज्जवल भविष्य उनसे देखा नहीं जाता? उन्होंने जवाब देना पड़ेगा देश की जनता को कि इस नकारात्मक सोच के पीछे वो क्या चाहते हैं। और मित्रों, मैं पूरी तरीके से निंदा करता हूं राहुल गांधी जी और उनके सभी पार्टी और मित्र पक्ष के नेताओं का, जो इस प्रकार की ओछी सोच, नकारात्मक सोच फैलाने का पाप कर रहे हैं। वो भारत का उज्जवल भविष्य नहीं चाहते। वो हर प्रकार से राजनीतिक अराजकता फैलाने की कोशिश करते हैं। पार्लियामेंट में आपने उनका रवैया देखा, उनका सोच पूरे देश ने देखा। वो हमारे आर्मी के जवानों पर कम विश्वास करते हैं, हमारे सेना के ऊपर प्रश्न चिन्ह उठाते हैं, हमारे उद्योग जगत के भविष्य को खराब करना चाहते हैं। मुझे लगता है अब समय आ गया है कि देश की जनता, राहुल गांधी जी हो, ममता बनर्जी जी हो, चाहे तृणमूल के अभिषेक बैनर्जी हो या तमिलनाडु के एमके स्टालिन, उदयनिधि स्टालिन, बालू, श्री बालू जी, श्री मारन जी, कानीमोजी जी, कम्युनिस्ट पार्टी के नेता, समाजवादी के अखिलेश यादव जी, देश की जनता इन सब नेताओं से माफी मांगेगी और उनको जवाबदेही ठहराएगी उनके इस नकारात्मक रवैये के लिए। वो जनहित के पूरी तरीके से खिलाफ है, वो देश की प्रगति, देश के उज्जवल भविष्य के खिलाफ है। अनाप शनाप आरोप लगा रहे हैं और जिस प्रकार के विषय उठा रहे हैं, एक नेता ने पूछा, अमेरिकी अध्यक्ष ने, अमेरिका के राष्ट्रपति ने पहले क्यों ट्वीट किया? अरे भाई, रेसिप्रोकल टैरिफ तो अमेरिका ने लगाया था, अमेरिका ने रेसिप्रोकल टैरिफ कम करना था। तो जब उनको टैरिफ कम करना है और 50 से सीधा 18% इतना कम हुआ, तो उसकी जानकारी तो उधर से ही आएगी। स्वाभाविक है कि उनको टैरिफ कम करना है, तो उसकी जानकारी राष्ट्रपति माननीय डोनाल्ड ट्रंप जी देंगे। और इस मौके पे मैं माननीय राष्ट्रपति डोनाल्ड ट्रंप का भी धन्यवाद करना चाहता हूं, जिन्होंने प्रधानमंत्री नरेंद्र मोदी जी के मित्रता का सम्मान किया। उन्होंने माननीय प्रधानमंत्री नरेंद्र मोदी जी को विश्व का, हमारे स्पर्धा वाले देशों में सबसे अच्छा बढ़िया ट्रेड डील दिया और आगे चल के भारत और अमेरिका के बीच संबंध और मजबूत हो और उज्जवल भविष्य दोनों देशों के लोगों का हम सुनिश्चित करें, उसकी शुभेच्छा दी। और मुझे पूरा विश्वास है कि ये जो ट्रेड डील की गई है, ये मात्र एक ट्रेड डील नहीं है, ये एक पड़ाव है भारत के उज्जवल भविष्य का। ये आगे आने वाले दिनों का शुभ संकेत है, जब भारत की अर्थव्यवस्था और तेजी से आगे बढ़ेगी। आज चारों ओर इसकी सराहना देखने को मिलती है। कल रात से ही जिस प्रकार से देश और विदेश में लोग इस डील की तारीफ कर रहे हैं, जिस प्रकार से चारों ओर लोग सेलिब्रेट कर रहे हैं भारत और यूनाइटेड स्टेट्स ऑफ अमेरिका के बीच ये डील, मुझे पूरा विश्वास है कि ये जो जनता ने ठुकराए हुए नेता हैं, द फेल्ड ग्रुप ऑफ disparate, disgruntled and rejected leaders of the Congress party and their friends in the DMK, Trinamool Congress, Communist parties, Samajwadi Party, the entire India Alliance leaders who have failed India very badly, who have failed Bharat in all respects, will be rejected by the people of India, who will teach them a lesson for their negativity and for their anti-India, anti-national thinking. Friends, we stand for the people of India, we stand for national interest, and today 140 crore Indians are celebrating a trade deal which is under final stages of detailing between the negotiating teams of both countries. We will be shortly issuing a joint statement by both countries along with the details which we will be shortly inking between the United States of America and India. And as soon as the final understanding of the deal is inked and the joint statement is finalized, technical processes are completed, full details will be shared. But I can assure the people of India, I can assure 140 crore brothers and sisters that this is a deal that will make every Indian proud, that will protect the interest of every Indian and provide huge opportunities for all the people of India, and will protect the sensitive sectors, the interests of our agriculture and our dairy sectors in full respect, opening up huge opportunities for our labor-intensive sectors, export sectors in textiles, plastics, apparel, home decor, leather and footwear, gems and jewelry, organic chemicals, rubber goods, machineries, so many products, aircraft components. This is truly a deal that every Indian can be proud of. India is a fast-growing economy. We are the fastest growing large economy in the country, in the world. India's demand is continuously increasing. Our demand for ICT products, our demand for data center equipment, our demand for high quality technology and innovation, our demand for raw materials is continuously rising. And in that situation, this deal also opens up opportunities for India to get the best in class, world-class technologies to further power the India growth story, the Indian economy. I commend this deal to every Indian, to 140 crore Bharatvasis. Thank you very much.
Well, that is the Commerce Minister statement, not taking questions there, essentially saying that this is a good deal that has been arrived at with the US. But a joint statement will be issued after a finer understanding of the details. So we will have to wait for that. But saying that India's interests, India's farmers' interests, India's dairy sector's interests have been protected, but not going into the specifics or the details of what has been agreed on with the US or what has been arrived at with the US. We will have to now wait for that joint statement as and when it is issued. That was the Commerce Minister there rebuking the opposition led by Rahul Gandhi, saying that they are misleading the public and spreading falsehoods, and that this is a deal that Prime Minister Modi has struck for all 140 crore Indians. Well, Finance Minister Nirmala Sitharaman has also reacted to the US cutting tariffs on India to 18%. Listen in.
What is the government's own assessment of how the growth will pan out?
Assessment of the growth?
Because of the tariff reduction.
You're still on that?
I'm still on that.
Well, as I said, I'll have to watch how this is going to play out.
Yeah, I was actually going to ask you a few more questions on tariffs, on the US tariffs, but if you want, we can move to the next topic.
No, on this, as I said, there's been one announcement. We'll have to see how the details work out on this.
Just one, I'll just insist on asking you one more question. How will it affect the consumers? The reduction in tariffs, obviously, is going to make goods coming from the United States cheaper. So
that is when you're talking about the trade deal.
Trade deal, yes.
This is about 18%, which is being imposed on our exports.
Correct.
So goods from India going there is what is being talked about now.
At the same time, President Trump has said that 0% tariffs.
That is why I'm saying you're picking up on lines on which we cannot speak at the moment till we have the actual details before us.
Right.
I want the expanse of details in all its exhaustion.
Fair enough.
Let's come to that point and talk about it.
Well, that is the Finance Minister, once again, not getting into the specifics of the deal. But of course, the Chief Economic Advisor has said that the India-US tariff agreement will result in a higher growth rate on account of exports to the US becoming back in the game. Now, the rupee is surging 1.3% to 90.14 against the dollar, marking its biggest rally in 7 years. Lata's here with the money market action. Massive move there on the rupee. Lata, big relief.
Yes, first the number, the rupee opened 1.2% higher. In number terms, it was about 90 rupees, 40 paise to buy a dollar. Let's remember, it closed overnight, that is on Monday night, at 91 rupees 52 paise. So, it was a gain of over 1 rupee 20 paise when it opened. The point is, New York trades, what we call the NDF trades, offshore market trades, that had already started reacting to the news overnight. And there we had seen 90, 60, 90, 50. So it was expected to open higher. And even on Monday, we had seen the rupee trade or end the day a good 0.5% higher. And people were saying it's not because of RBI. There doesn't seem to be dollar demand. It looked like already the short rupee, long commodity currency trade was shifting. And that's why the rupee was strengthening. We now can realize that some people in New York probably knew or were smelling that the deal is coming. But the important point is the huge recovery of the rupee was unaided by the Reserve Bank today. Dealers said they were not in the market trying to lessen the appreciation as was expected. The key point is dealers don't expect a further appreciation immediately because they want to wait and watch to see whether foreign investors are coming in. Ultimately, you want an actual flow of dollars, not just, that our exports should grow, but on a daily basis, we want FPI flows. And we don't know as yet whether the FPIs are convinced enough to come and buy dollars.
Well, Lata, many thanks. But of course, we'll be tracking the rupee. Today was that massive move up. And speaking of massive moves up, skyrocketing the stock markets right at the opening bell. The bulls managed to hold on to the gains through the course of the day. The Sensex gained over 2,000 points. The Nifty gained over 600 points. All sectoral indices closing with gains today. More than 12 lakh crore rupees added to the market cap of listed companies. Nigel is standing by on the market wall to take us through what has been a terrific Tuesday. Nigel.
2,500 stocks. It's been a while since I've seen a number like that. But any kind of stock that had exposure to the United States across sectors did well. Case in point being an Apar that has cables out there, or an Avalon Tech that is an EMS play. It has exposure to the United States. That did pretty well. And ADF Foods as well. That stock was flying away in today's trading session. So plenty of gainers on the list out there. Add to the list some of the jewelers. Goldium was higher in trade today. And an auto ancillary stock like JNA Axles that had pulled back a goodish deal from the recent top, well, that went home with gains of close to around 15%. You also had Carousel, that's a building products company. Well, that stock as well did go up close to around 18%. But the barometer of the kind of sentiment that you saw in the market today was BSE. A couple of trading sessions ago, everyone was worried about STT. Guess what? The stock has bounced, and now it's trading at above the levels that we saw prior to the STT announcement. So that's the kind of move that we saw, 6% higher in today's trading session. For the time being, the street has brushed aside those STT worries. Big boy Reliance Industries did participate from the Nifty pack, and following it up was Jio Financial because of its holding as well that it has in Reliance Industries. Result reactions, there were a couple out there. MobiWick, that stock ended higher with a gain of around 20%. And Adani Ports did go ahead and up its guidance, so the street liked that. In fact, the Adani Group stocks did pretty well. Adani Power, Adani Green, as well as Adani Enterprises, those stocks were up and about. Some of the solar plays, there was a worry when this tariff was there that the solar plays, some of their exports could get disrupted. But Vari Energies and Premier Energies, both of them did bounce back in today's trading session. So it was good for any kind of stock that has some exposure to the United States, and now the tariffs will be relatively lower. There'll be a few stocks, though, that were under pressure. PB Fintech, they're being very ambitious, looking at inorganic growth, looking to raise some money. So the stock did get slammed back. Meesho as well, in reaction to its numbers, the stock was under some pressure. And Asia's Wopac as well was under some pressure in today's trading session. But net-net, it was a terrific Tuesday. The bulls will be feeling good now that you've got the sentiment booster with the tariffs coming down and a trade deal being announced with the United States. Now it's back to tracking earnings, earnings, and more earnings. But for the time being, the bulls, they're back in the game, and they fought back today.
All right, Nigel, many thanks for joining us. We will step into a break. There's plenty more that we will continue to track. Don't go anywhere. It's been a big day, and we track all the action after this very short break. With great pleasure, let's welcome the Chief Economic Advisor, Anantha Nageshwaran, here to the budget verdict. Mr. Nageshwaran, many thanks for joining us here on CNBC TV 18. And here's a fun fact for those of you who've been following the CA and his economic surveys. He's presented 2. This was his 3rd one. And there's been a lot of convergence between what the survey has prescribed and what the budget has taken forward. So as I told him yesterday, he delivered a hat trick. So Mr. Nageshwaran, 4. So let's start with that. As you put the economic survey together, and in your own words, this was longer than usual, 730 pages at that. How did you identify the areas that you believed would need to be prioritized by the government, and then they found their way into the budget? Take me through the process of putting together the economic survey, the rationale behind identifying the sectors that you chose to prioritize.
Thank you, Sharon. Happy to be here, and thanks for having me. The selection of topics actually is sort of a year-long process. From the time the survey finishes the year before, whatever keeps happening, and we kind of store it in some sort of a repository. We keep accumulating both the empirical developments, data, and everything. But the choice of topic for prioritization, as far as this particular survey is concerned, I am referring in particular to chapter 16, because the rest of the many of the other chapters kind of choose themselves. They are part of the routine. What requires deliberate decision making are 2 things. One is what are the special essays we focus on, and the other one is global development. So this time global developments played a very big role in the choice of chapter 16 to be added, and that too in 2 parts. And urbanization, I think, from the way we see traffic flows and quality of life, pollution, etc., we decided to take it up. And AI, I think, because we wrote about it last year, and much has happened since then, we felt it is important to keep track of it and keep updating the country with these developments, both macro as well as on the computing side, etc. So that is how the topics end up getting chosen.
You said that, of course, the global mix was a significant aspect of what the survey has dealt with, and how India must prepare itself for future challenges as well as possible shocks. But let me address an issue that is now starting to sort of get a lot of attention, and I think in a way you also highlighted that in your survey. Ridham Desai on CNBC TV 18 earlier today said in the last 30 years of tracking the markets, he's never seen this kind of dissonance between the macros and the markets. The macros are stable as they are, and the markets underperforming. You've also, in a different way, asked for an examination of the investment reluctance that is at this point in time visible when we talk about FPI flows or we talk about FDI flows. How would you address this dissonance that we're seeing between very stable and strong macros and weak markets at this point in time?
So there are no clear-cut formula, a mechanism to address this, because at some point, because there have been occasions not just with reference to India, but with other markets as well, when they have decoupled briefly for specific, it could be specific stimuli that markets are focused on, which is not coming, or because of global developments, or a combination of the 2. But over time, they do sort of fall in line together. So right now, I think the concerns leading up to the economic survey and the budget that the markets were looking at were possibly, valuation concerns, and mainly because of the FII net outflows, which in turn was based on the fact that the tariff matter uncertainty with the United States was lingering, apart from concerns about the fact that India didn't have a specific or few AI plays in the stock market, and then whether the tariff would have any impact long-term on China +1. And also the concerns with respect to H-1B and other noises coming from United States on even the services sector. So these were the question marks that people had. And also I think we had specific sector, specific concerns on IT sector, etc. in India. So there are multiple factors. I am confident that over time this divergence between the 2 will close, with the markets kind of recognizing that the India story hasn't been derailed because of these developments. That is how I see the divergence closing.
Speaking of global developments, Mr. Nageshwaran, and I want to understand from you if, how you're seeing this business about a new Fed chief in place and the possibility of now the Fed's balance sheet shrinking or being cut. We've already seen a significant amount of volatility in the commodities market on account of that. What do you foresee as a result of some of these developments as and when they do take shape? Because, we still haven't seen the change or the changeover, and there's a question mark even on the changeover itself. But, the likelihood of a taper tantrum, is that a significantly high possibility at this point in time?
A very fast set of questions, Shireen, but the range of questions, the number of questions we have, is so wide that any answer I attempt to give will be very speculative in nature. Because we know from his previous writings, etc., that Mr. Vash had a different view on quantitative easing, ultra-low interest rates, etc. But he and all of us are facing a very different environment and a very different relationship between the executive and the central bank, etc. So I think it will be premature to speculate on what stance would Mr. Vash adopt, etc. it have on the dollar. Right now, I think the markets have reacted to his appointment based on what they recall from his writings post 2008 in 2011-12 period. But we simply have to wait it out. There is no point in, because there are multiple pathways to speculate on.
No, absolutely a fair point that you make there. But, how do you read into the implications of this new world order or this new world disorder, depending on how you see it? What could the implications be in the near term?
So the problem is now that there is a new world order. What we know for sure is that the old way of looking at the world or functioning has been disrupted, and a new one is yet to emerge. That is why the entire set of confusion and uncertainties, because we are in this interregnum between two world orders. My suspicion is that this will continue for quite some time. So that is, in other words, while we often say that change is the only constant or the only certainty is uncertainty, I think that is what will be with us, not just for 2026, but for a few years before we are able to settle on a new order, whatever that might be. But I think we have to accept the fact that the so-called interregnum will not be as short-lived as we would like it to be.
If it's not going to be as short-lived as it's likely to be, and I think the budget in a way sets out the framework of the choices that India will need to make, some of the choices that you spoke about in the economic survey as well, the sectors that we will need to fortify, so to speak. In your assessment, how ready are we today to face some of those challenges?
So there is no yes or no answer to that. We are getting ready in many ways, and to some extent the budget pushes that agenda or progress in getting ready to face this world forward in quite a few ways. Whether it is in the rare earth corridor matter, whether it is in trying to achieve certain self-sufficiency in key areas, including medicines, chemicals, and then giving exemptions for capital goods involved in the nuclear power generation, etc. If you think about it that way, these are all in line with what we wrote about in chapter 16 of the economic survey, where we said you have to look at the scope for indigenization or self-sufficiency in a 2x2 matrix between feasibility and desirability or necessity. That is exactly the kind of approach that the budget has taken. So it is not a question of saying country A is ready and country B is not ready, but I think it is a process. And I think what the budget signals unmistakably is that we are well cognizant of the need to undertake this process and the journey, given the state of potential disruptions to supply chain, either due to logistics difficulties or as conscious choices made by nations, etc. That therefore this budget is a sort of a advanced preparation exercise for that.
And just to take that forward, I'm trying to understand if there has also been a shift, a nuanced shift in the way that the government is trying to address the issue of how the private sector is going to deal with some of this. I think the government, and you've been pretty vocal about it as well, has done the heavy lifting when it comes to public capital, capex, the government has put corporate tax breaks on the table, it's put PLI incentives on the table, and plenty more. But the ask is from the industry is more R&D subs, for instance, which the government has stayed away from. Is there now an increasing understanding or an acknowledgement within government that incentives per se or incentives by themselves cannot get industry to invest more in setting up fresh capacity and so on and so forth? That is to be done by demand. And so by giving more incentives, you may not necessarily get private capex moving.
I don't think this is articulated in that fashion quite as you put it. But nonetheless, you are right broadly that the reduction in the corporate taxes in 2019, along with the choice given to them to shift to a lower rate with fewer exemptions, and the fact that we have already implemented the suggestions with respect to the Anusandhan National Research Fund and the Research and Development Innovation Fund, spanning the TRL level entirely from 1 to 9. So there have been a lot of action on the part of the government in putting the money where its mouth is, so to speak. And if you look at the corporate sector's profitability recovery post-COVID from the lows of the second decade has been very impressive. So it is not for lack of resources. And the more important thing, again, taking the cue from what you said, ultimately corporates invest on the basis of demand, and therefore the direct tax relief last year, a substantial one, and the indirect tax relief later in the year, they are attempts on the part of the government to ensure that policy is doing whatever it can to create that demand certainty. So to an extent, I understand that the private sector is concerned about the global uncertainties, supply chain disruptions, competition coming from another country which is suffering from very weak domestic demand, and therefore substituting that with external demand by exporting. And therefore, how profitable will my investment be if I create domestic capacities, etc., is a valid question. However, what I see from bottom-up data is that in 24-25 financial year, the corporate sector's investment performance wasn't particularly bad. I think 23-24 was a disappointing year. I think my analysis based on bottom-up data will be borne out when we see the full year disaggregated data coming from MOSPI later in February. So there are some legitimate concerns and questions that the corporate sector has, but we have to appreciate the fact that we are living in a country with a 60+% private consumption ratio as a percentage of GDP. And the more we postpone these investments, the questions become bigger and more pressing rather than going away, especially since I said these question marks will be with us for a few years. They're not going to dissipate. I think the corporate sector has to say that sometimes the answers to these questions will be found when we actually confront them, not by ducking them.
Chief Economic Advisor Anantha Nageshwaran, many thanks for joining us here on the CNBC TV 18 Budget Verdict, for highlighting for us why this budget will make a dent as far as India's aspiration to move up the value chain across many sectors. You're watching the CNBC TV 18 Budget Verdict, and we're coming to you live with the Budget Architects. Joining us now is the Expenditure Secretary, Mr. Ghulam, as well as the DPAM Secretary, Arunish Chawla. Gentlemen, appreciate you joining us here on the CNBC TV 18 Budget Verdict. The very first time that industry will get a chance to interact with the Budget Architects right after the presentation of Finance Minister Nirmala Sitharaman's 9th budget. Expenditure Secretary, we've now had time to go over the fine print of the budget, and let me talk to you about what the numbers are showing up. The effective capex, if I take a look at B versus RE, B 15.4 lakh crore rupees, RE 14.03 lakh crore rupees across a whole bunch of schemes, whether it's the rural drinking water mission, where the B was 67,000 crores, the RE 17,000 crores, a big drop there. Gram Sadak Yojana, 19,000 crore rupees, BE, RE of 11,000 crore rupees. If I take a look at rural housing, 54,000 crores in BE, RE of about 32,000 crores, 500. Urban housing, 19,794 crores, RE of about 7,500 crores, so on and so forth. Can you explain to us why there's been such a sharp drop between the budget estimates and the revised estimates, sir?
What happens is around October, we start an exercise where we interact with each of the departments and ministries, where the secretaries of those departments, their financial advisors, they come, and in the Department of Expenditure, we look at the pace of expenditure, the trend of expenditure, and whatever comes out in the revised estimates are really an outcome of that discussion, so that unnecessary idling of funds for projects or schemes not required does not happen. Now, you took a few specific ones. So, for example, if we are to pick up the Department of Drinking Water Supply, yes, we did have 67,000 crore rupees in the BE 25-26, and we brought it down to around 17,000 in the RE. The drinking water is really the one where the Jal Jeevan mission is being implemented, and during the course of the year, what was found was that there is a need for sort of resurvey, re-examining, streamlining the procedures. So it went through that kind of an exercise. But if you look at the BE 26-27, you will find that now that we have the certainty that the scheme is ready for full-fledged implementation, the 67,000 crore is brought back in the BE 26-27. So it's moving on, yeah.
So if I could just double down on that, are you suggesting then that there were inefficiencies in the manner in which the scheme was being executed, there were perhaps leakages, etc., which led to an overall examination or re-examination of the scheme? Have those issues now been addressed, which is why you feel comfortable to bring the number back to 67,000 crores versus the RE of 17,000 crores?
Yeah, it's all streamlined, and we are set to sort of have a full-fledged this thing in the new financial year. Yeah.
Okay, but there is still, sir, quite an overall gap between the budget estimate and the revised estimate on the expenditure front. You gave us an example of one scheme, but there seems to be expenditure compression across a whole range of schemes.
What happens is some of the items where the scheme is brand new. So, for example, again, let's pick up in the Department of Science and Technology, the Research, Development and Innovation scheme. It's a huge scheme. We can talk about it more. But for the first year, where we thought the 20,000 crore outlay which could be utilized, but then it's such an innovative kind of structure that the second level fund managers are just coming on board. So again, we had to scale it down to the level where the allocated funds can be utilized. But again, in the B 26-27, if you see, as approved by the cabinet, as announced in the cabinet in the budget speech last year, it's coming back to 20,000 crores. So these are adjustments which happen over the year to see that required funds are provided where they are utilized, and scale down where the immediate requirements are not there. Yeah.
So then that brings me to a larger question, sir, and I asked you this question when we met yesterday on the execution ability and the execution capacity of the state to be able to spend money. And, the industry's ask, as I pointed out, was that a much larger capex number would have perhaps spurred the economy even more. And your response was that at this point in time, the state's capacity is to do 12.2 lakh crores or thereabouts, and that's the number that you've put down for public capex. Is that what we should understand, even when you talk about the RDIF, for instance, that you could put larger numbers there, but the execution capacity, the state capacity to be able to deliver on those numbers is perhaps constrained at this point in time.
You know, let me put it this way. What the budget speech also put right in the beginning, the fiscal prudence and the macroeconomic stability, the numbers which have been mentioned, enables us to provide resources where required. And the 12.2 lakh crore rupees which you mentioned for the capex is again a fairly big jump, but the government is in a position to provide. And with all the esteemed audience that is here today, you know, it's really a collaboration. So where, for example, on national highways, when we say 10,000 kilometers have been constructed in each of the last few years, it's with everyone working together. You know, it's not a government official who goes and constructs. When we say 3,000 kilometers of railway lines have been laid, it's again not a railway official who has gone and done. It's with some private company, some industry, some people who have all worked together. When we say 1,000 kilometers of metro rail network now available in our country, it's again government agencies, private contractors, everyone working together. So we put the money where the need is there and where the implementation capacity is there. That's how we do it,
Okay, so yes, the implementation capacity is crucial to the manner in which budgetary allocations have been provided for. But Mr. Chawla, let me address the other elephant in the room. Why did the government lose its disinvestment mojo, and what has enabled you to find it back, or hopefully find it back? You put a larger disinvestment number of 80,000 crores. But, you know, what was the reason why we saw you go slow on disinvestment? I'm not even getting into privatization, and why do you now feel that you want to be seen as reviving that agenda?
Government has not lost the disinvestment mojo, nor is it off the track. If you see how the disinvestment policy evolved, the Department of Disinvestment was set up somewhere towards the end of 1990s, and in the first 5 years was the learning phase where we initiated the disinvestment experiment. And somewhere around after 2004, for the 10 years, there was a hiatus, there was a window when disinvestment was put on the back burner. In fact, there was a talk about doing away the department itself. But in the next 10 to 12 years, which is the term of the present government, the disinvestment was reinvented as a composite strategy. That is why we are not called Department of Disinvestment anymore. We are called Deepam.
Yes.
And that means we light the lamp in the lives of ordinary investors. To do that, we follow a composite strategy. And that composite strategy is guided by what is called the Atmanirbhar Bharat policy for the public CPSEs, which was announced by the government in 21-22. Under this policy, we have arranged the public enterprise domain into 3 verticals. The strategic domain, which is essentially for delivery of public goods, and for ensuring the continuity of our supply chains, like natural resources, core infrastructure, defense, financial infrastructure, and so on.
Right.
Then there is a category called the exempt category, which is not-for-profit functions, which are the social functions, support to vulnerable groups, support to farmers, essentially the market failures that government needs to take care of. What is left is, in a way, non-strategic, but in a way it is an invitation for the private sector. And this includes a large number of enterprises which were erstwhile engaged in manufacturing. And in this non-strategic area, we take up both strategic disinvestment and closure as a composite strategy. Because in a macro framework, whether you disinvest or whether you close, it creates greater space for the private sector. It allows them to operate and acquire a greater share of the market and energize the economy. So it is part of that strategy. We've taken both of them together. Almost 25 enterprises have either been strategically disinvested or closed in the last 10 years, which is the highest ever done in the past, ever in the past. And going forward, we continue to revive this momentum. We have learned from certain iterations do not succeed, certain others succeed.
Okay.
The idea is to learn, reinvent the strategy, and move forward. And that is why you see a large number of 80,000. It does not scare us. It is done with our consent, and it reflects our confidence in our ability to achieve it. And if you ask me how this will be done,
yes,
we will use both traditional disinvestment methods. We will use a variety of market sales. And in addition to land monetization traditional, we have now invented and perfected new modes of asset monetization. And if I may mention, one of them is public InvIT. We got the SEBI approval in December.
Yeah.
And we hope to launch the first public InvIT before the end of the financial year. InvITs, as you know, are capital market equivalents of risk capital, which help us monetize the present value of user fee and redeploy it to create assets.
Right.
Honorable Finance Minister also announced in the budget yesterday that we will launch REITs for CPSEs to monetize their surplus land. This will help us securitize the future rental revenues and redeploy them in redeveloping these surplus lands without putting any burden either on the budget exchequer or on the CPSE, and be able to create greater use and put these idle assets to productive use, and also invite private sector participation.
Many thanks for joining us here and for giving us a very clear understanding and a path forward on how you present the execution of the promises made in Budget 2026. Ladies and gentlemen, big round of applause to the Expenditure Secretary and the DPAM Secretary. Many thanks for joining us.
Hello and welcome to Startup Street. I'm Arundhati Ramanan, and with me as always is Shruti Mishra. These are the headlines from the startup world. Policy Bazaar's parent PB Fintech to consider acquiring an insurance major in UK and Europe. Sources say the deal size could be around $1 billion. This comes a day after board approved raising funds through a QIP.
Loop AI, the enterprise-grade AI platform purpose-built for the restaurant and retail back office, has raised $14 million in Series A funding round. This funding will be used to expand Loop AI's product suite and grow headcount for their offices in New York, San Francisco, Tampa, and Bangalore.
3 managing directors, Ashish Agarwal, Ishan Mittal, and Tejashwi Sharma, are leaving Peak 15 Partners to set up their own fund. The VC said the moves are aligned with its evolving investment strategy amid rapid technological changes. This will be another investment firm spinning out of Peak 15, following Westbridge Capital and A91 Partners.
Elon Musk's SpaceX will acquire his AI business, XAI, valuing the combined entity at $1.25 trillion. Consolidation comes ahead of SpaceX's planned IPO later this year. Musk says the combination creates an innovation engine, bringing AI rockets, space-based internet, and media under one roof.
OpenAI CEO Sam Altman has strongly dismissed recent rumors suggesting the company is dissatisfied with NVIDIA and exploring other options for its AI infrastructure. In a post on X, Altman emphasized OpenAI's long-term commitment to NVIDIA.
Well, those were the headlines we've been tracking for you this evening. Electric mobility platform Drive-In has secured financing commitments of up to $80 million from global financial services group Nomura to roll out nearly 1,000 electric buses and trucks across intercity transport and heavy logistics over the next 18 months. Now, this comes as the India-US trade deal promises lower tariffs, deeper technology ties, and stronger capital flows for the EV ecosystem, even as challenges around capital intensity, uptime, and reliability continue to slow adoption in heavy transport. Drive-In is betting on an asset-owning, long-term leasing model to bridge these gaps and accelerate India's shift away from diesel. So what does this deal signal for commercial EVs, and can this model scale where others have struggled? I'm joined now by Alpana Jain, the co-founder and chief business officer at Drive-In. Alpana, welcome to Startup Street. With India and the US having now sealed a major trade agreement, lowering tariffs and expanding market access, how do you see this pact shaping India's commercial EV ecosystem, especially in terms of access to US capital, advanced EV technologies, or supply chain integration for heavy electric buses and trucks?
Good evening, Shruti. It's a massive accelerator, frankly, and it comes at a perfect time. While India has already become a global hub in two and three-wheeler segments, heavy commercial vehicles are a different beast altogether. They rely a lot on high-performance components, which global supply chains control. So the pact does two very important things for us. One, it lowers the tariff barrier. And second, it gives and signals stability to US institutional capital. So access to deep technical funds eases our access to capital and lowers our cost of financing ultimately.
All right. Alpana, given the trade deal's emphasis on deeper economic and technology cooperation, should companies like yours be thinking more strategically about trans-Pacific partnerships or sourcing critical EV components from the US?
Yes, absolutely. We should be actually moving from cost-based model to value-based procurement. We aren't just looking at procuring inputs, and we are actually looking at importing technology and innovation and topping it up with the scale of Indian manufacturing.
Right, Alpana, let's get to the funding now. Drive-In, like I mentioned earlier, has just announced financing commitments of up to $80 million from Nomura. Is this largely asset financing, or does it also go into building charging infrastructure, technology, and on-ground operations?
So the financing that Shruti Driven has secured of $80 million is primarily asset financing.
Okay.
That will put a fleet of 1,000 vehicles between buses and trucks on the road. And what it in turn does is actually assure offtake for charging infrastructure, which will then be concurrently put these fleet on the ground over the next 6 to 9 months.
All right. So like you mentioned, this funding supports phase 1 deployment of nearly 1,000 electric buses and trucks by Q4 FY27. You said the rollouts could begin soon, but where will these vehicles hit the road first?
Very happy to report that the rollouts have already begun.
Okay.
You would see these buses on some of the high-density intercity routes in North and South India, such as Delhi-Dehradun, Hyderabad-Vijayawada. And on trucks, they are being deployed in cement logistics first. And these early deployments will make us into an EBITDA positive company right at the beginning.
Okay. Alpana, you're entering the market with MOUs across OEMs, charging providers, energy partners, and maintenance players. How critical is this ecosystem coordination in making large commercial EVs work reliably and at scale? And what does your model change for fleet operators compared to owning diesel assets?
As that's a great question, Shruti, and this is where our background and the team's experience matters most. We actually approach this segment with the discipline of a financier. So we structure rigorous back-to-back contracts with OEMs and energy management providers that actually enforce uptime guarantees and helps us in turn, strengthen our underwriting model. So that's how we are looking at this.
Okay. You're also aligned with FAME and PM e-Bus Seva and targeting Scope 3 emission reductions for sectors like logistics, cement and steel. Alpana, are you seeing real commercial demand from these hard-to-abate sectors, or is adoption still largely policy-driven?
If you had asked me, Shruti, this 2 years ago, I would have said that it is policy-driven.
Okay.
But today, actually, the fundamental discussions have shifted. The conversations have shifted. It is actually very, very commercial. If you talk to the CEOs in cement, steel, mining, they would actually be talking about TCOs and not really subsidies. So I see that demand is really real.
All right. Drive-in doesn't just finance EVs, you buy, own and lease them. Looking ahead, Alpana, are you building a fleet company, a financing platform or long-term EV infrastructure for India? And also share with us what the kind of revenue growth you're targeting over the next 2 to 3 years.
Great question, Shruti. We are actually imagining Driven as the financial backbone of commercial EV segment. And we are actually matching it with blistering pace and scale up of the fleet. We are looking at deploying the 1,000 vehicle fleet in over 6 to 9 months, starting now, and then have planned to scale it up to a business model of 5,000 vehicle over the next 2 to 3 years.
Well, we wish you the very best for all these aggressive growth plans that you just mentioned. Many thanks, Alpana, for your time and for joining us on Startup Street.
Thank you. Thank you so much.
On the hot seat today, Dhruva, a full-stack resale homes platform, has raised $9 million in fresh capital, led by Stellaris and Oreos, with debt support from Stride Ventures, promising to help sellers close deals 7 to 10 times faster. Dhruva is doubling down on data backing pricing, inventory-led execution and expansion beyond Mumbai into new metros. Joining me now is Puneet Arora, the co-founder and CEO of Dhruva, to talk about the fundraise, the business model and what it takes to bring transparency to India's fragmented resale market. Thank you so much for joining us on the show today. Like I said, you claim Dhruva helps homes sell 7 to 10 times faster than the market. What is the current average sort of time to sale on your platform versus the traditional resale market? And how consistent is this across micro markets? If you could sort of take us through your key offerings.
Absolutely. Thanks for having me here, Arundhati. I'll talk about the sellers first, and then would also maybe talk about how we help buyers. Today in the markets that we operate in, average time to sell is anywhere between 6 to 9 months. We operate in Mumbai, in markets like Powai, Goregaon, Andheri. And for us, the average time to sell has been between 30 to 40 days. And there you see a big difference. Now, the big question is how we are able to sell faster, how we are able to bring this 5 to 7x difference, right? So there are two things that we do. First is in a resale property, the house is usually older. It's 5-10 years old. It's probably not very well maintained. We stage our houses, which means that we fix if there are any issues on the house, we make it super presentable. And the second is just our superior distribution. We are very omni-channel. We work with brokers, we work with listing platforms. And so the combination of these things really means that we are able to sell significantly faster than the market.
Sure. So you have an omni-channel approach in how you sell your houses. But you've crossed 500 crore rupees in resale value sold across just 7 micro markets in Mumbai, right? What does this sort of translate into revenue and unit economics today? And how do margins change as you scale city by city?
Absolutely. So today we're doing about 18 crore annualized run rate based on numbers from recent months. unit economics are super healthy. We're positive at a unit economics level. I think what is the most interesting for us is, today if a home buyer decides to buy a house, they have two options. Either they buy something under construction or they buy something in resale. Under construction, you're buying a house without seeing it. It's like getting married without seeing who you're getting married to. And in resale, there's absolutely no organized player. The experience is super broken and unprofessional. And so when Truva comes in, we do our legal checks. We make sure that the house is well inspected and you're getting something that you can be rest assured won't give you problems as soon as you buy it. So that's sort of what we're all about. In terms of how we intend to grow, I think we've grown 6x over the last year. We'll probably grow another 4x over the next year. As we move to other markets, today we're doing anywhere between 1.5 crore to 10 crore houses. We will start doing lower ticket size. We've already seen lower ticket size houses have better unit economics. So actually super excited to see, how we do in cities like Delhi, NCR, Bangalore, where our average ticket size is probably going to be lower.
Sure. So you're looking at lower ticket size. And now True IQ is positioned as the core differentiator using over 1,000 data points for unit level valuation, right? So how accurate have these valuations been versus final transaction prices? And does True IQ sort of improve the liquidity predictability for sellers?
Absolutely. So if you go buy a house today in resale, you usually don't have any, like, pricing is super opaque for a buyer as well as a seller. And what TrueIQ does is that it takes data from different points. So, for example, we look at transaction data. This data is in government registration records. We also collect a lot of data from on ground about what the house is exactly like, what the view of the house is. A swimming pool facing house will cost more than a slum view facing house. We look at what the floor is, amenities in the building. And so all of this data sort of goes in and the algorithm gives out a price. Today, we are already about 99% plus accurate, which means that the price that we believe the house will sell at is roughly within 1% of the house of the price we actually sell the house at.
Sure.
And not just the price, TrueIQ, what it also does, it helps us know how fast the house will sell, right? So like different houses have different kinds of demand based on ticket size, based on what the view is like, what the vastu is like. In India, 70% buyers want a vastu compliant house. So it takes into consideration all of these things, and we know not just like what price it will sell at, but also how much time we'll take to sell the house.
Sure. And you've just raised these funds, right? And the round includes both equity and venture debt. Why was debt sort of important at this stage, and how capital intensive is the inventory-backed model as you expand into Delhi, NCR and Bengaluru?
So one big difference, Arundhati, between what we do and what some of the other players in the industry do is that we don't buy these houses upfront. We get exclusive mandates from sellers. This is done by paying a small token, usually 1% of the value of the house. And so while there is some working capital deployed, it's super capital efficient because the deployment is limited. And that's what the debt helps us do, actually. It helps us manage our working capital. We take about 4 months from the time we get an exclusive mandate to get our revenue back because there are a bunch of steps in between. And so the debt from Stride Ventures really helps us managing our cash flows, while we can use equity to really expand the business and grow into more micro markets and more cities across India.
Sure. All right, Puneet, we're completely out of time, but thank you so much for joining us on the show, and we wish you all the best on your journey going forward.
Thank you.
Well, with that, it's time for us to head into a short break. But coming up, India's beauty market is shifting rapidly towards premiumization, with fashion-led collaborations emerging as a powerful growth driver. K-Beauty teams up with Falguni Shane Peacock, blending high fashion with mass premium cosmetics. All the details when we return.
Welcome back. It's still with us on Startup Street. India's beauty market is seeing a clear shift towards premiumization, and fashion-led collaborations are now becoming a key growth lever. In its first ever couture collaboration, K-Beauty has partnered with designer label Falguni Shane Peacock, blending high fashion with mass premium cosmetics. For K-Beauty, which already operates at a 350 crore rupee annualized run rate, the collaboration signals a push towards stronger brand positioning, higher value consumers and global ambition. For the fashion industry, it reflects how couture is moving beyond the runway to build scalable consumer brands. As Indian beauty labels eye international markets and consumers show a growing appetite for premium products, the big question is, can couture drive volumes without losing accessibility? Xenia Baria dropped in to check it out.
J-Lo, Lady Gaga and Queen Bee. Falguni Shane Peacock have dressed them all. When you think of Falguni and Shane Peacock, you think statement outfits and global red carpets. Now imagine that same design language showing up on your makeup shelf. That's the kind of idea inspiring the new collaboration with K-Beauty, making it more accessible. Let's take a closer look. K-Beauty isn't a legacy luxury brand. It's young, it's digital first, and it's democratic. What about that philosophy aligned with the way you see the future of luxury?
I think as Falguni Shane Peacock, I would say we are a very young brand. You know, we dress the modern bride of India, rather the world. And I think right now, you know, the whole feel of beauty is changing. Like across the world, people are going and trying younger brands, and K-Beauty is, you know, the way they've got the formulas is amazing. So I think they will be a legacy brand, but yes, they are young, and I think that's what we as designers are. So it's a great collab.
It's a brand in partnership between Nykaa and Katrina Kaif. One that we started about 3-4 years ago. Today, it's a 350 crore GMV annualized run rate brand. It's become, you know, quite sizable. It's also a top 5 brand on the platform. When we were thinking about, and with K-Beauty, we're always thinking about how to sort of introduce the customer to more and more interesting, creative concepts. And therefore, we had this idea to find, you know, an amazing designer collaboration and do this first ever couture collaboration with Falguni and Shane Peacock.
Falguni, you are known for your dramatic style. Talk to us about how that aesthetic translated into makeup, packaging and design.
I think for us, you know, as we're known as couture designers, it was a natural progression for us. And when Katrina called, we were like, you know, should we do it? Should we not do it? And in half an hour, it was a yes, let's do it. But the whole idea about kind of packaging couture into a lipstick or into the palette and give a little piece of the brand was what, you know, the idea was. And that's why the lipstick has that beautiful French gold, which just stands out from the, you know, other ranges that are there. It all started with, okay, what color should we do? Whether it should be a metallic. I was like, you know, I want the lipstick to feel heavy. It needs to feel couture, like a couture outfit. There is beading in it. There is some weight in it. There is a story to tell. We started off with 8 shades, then it went to 10, and then it went to 12. I'm like, the range looked really beautiful. So we started building more and more. And we decided that we'll do, you know, lipsticks only. And then suddenly we were like, you know, why not give it like a whole sort of a wholesome look? The collab needs to feel a little more than just lipstick. So that's why we decided to do the face palettes. It's a day palette and it's an evening palette, and you can mix tones. It's got the contour, the highlighter, the blush.
Couture often feels out of reach. When someone hears couture lipstick, they expect it to be expensive. How much does this actually cost, and how did you decide the price point? So with K-Beauty, we had gone international a few months ago. So we had gone to Space NK in the UK. And so we are very clear that this launch had to be something that went 360 globally. And so there's been a simultaneous launch in both the UK and in Dubai at NYSA. In terms of pricing, it is slightly more premium in the UK. And that's also just, you know, the nature of
the cost of actually taking a product international. So it's broadly being sold at about 2,500 rupees in the UK. So slightly premium than what it is in India. And then that's to reflect the cost of actually taking it abroad and the cost of doing business there.
At the heart of it, it isn't about beauty or fashion. It's about how people want to experience luxury. Closer, more personal, and very much their own. Couture will always rule the runway. But moments like these tell us how they all mingle in and come together in our everyday lives. In Mumbai, Zinia Baria.
Well, with that, it's a wrap from Arundhati and me, Shruti, on this edition of Startup Street. More news and updates coming up on the other side.
Nirmala ji, thank you so much for giving us the first exclusive interview after the budget. You've been very kind to us every year, and thank you so much for that. Millions of people are watching you across India through CNBC TV 18, CNN, and our News 18 channels across the country. First of all, congratulations on what is your 9th consecutive budget. No other FM has done it consecutively for so many times. I think it has also been a period which has been marked by a lot of turbulence. You've seen it all. You've seen the pandemic. You have seen some shooting wars and now tariff wars. And through it all, you have steered the economy. I think if you look at the bigger picture, a job very well done indeed. You know, it is one of the fastest growing economies in the world, any consequential economy in the world. You know, you've managed to keep fiscal discipline under check. You've also kept inflation well below 2%. So the big picture really looking good. I'll ask my first question, which I always do when I start. You know, if you look at the reactions of the budget, some people have called it a status quoist budget. People have called it a conservative, cautious budget. How do you react to this, you know, people saying no bold reforms this time? Of course, much is there in the fine print, and it is all coming out. The markets have, you know, come back today. What was weighing on your mind when you were preparing this budget?
Well, as was observed by you and by domain experts, not just in India, even outside, Indian economy's fundamentals are absolutely strong. It is the global uncertainties, which of course always every government has faced global uncertainties of different order, different level. But now the extent to which global uncertainties are bearing on countries and impacting decision making is of an order that we have never seen before. So certainly we had to keep that uncertainty in mind and plan for what is going to happen this year and what is going to commence in the next 5 years from this year. In that, a new Finance Commission cycle starts. And above all, like the Honorable Prime Minister said, this is going to be the first budget in the second quarter of 21st century, which is up to 2050. Yes. In between, closer to 2050, is 2047 when Vikasit Bharat will have to be achieved. So, our direction, our goal are all set. So it was for us to, keeping in mind the global uncertainties, plan for 1, for this year, 2, for the entire Finance Commission cycle, and 3, leading up to Vikasit Bharat, how do we want to take them? And that is why, slightly differently from every other budget, this time a lot more was said through Part B.
You're projecting a nominal GDP growth of 10%. What is your outlook for inflation and your estimate for the real GDP in 26-27?
I think we've indicated it very clearly in the budget. I'm very sure that inflation will remain within the tolerance band, and therefore inflation doesn't have to worry us much. And everything therefore looks at it from the point of view of if there is a deflator which is going to remain low and stable, it will have an impact on your estimates.
Yes. Look, you know, if you look at the GDP growth in the last 2 quarters, 8% has been impressive. Do you think that we can sustain this like China did for many years, an 8% growth? Do you think India can do that in the longer term to be able to grow at the clip that we are hoping it to achieve?
Yes. And that is why the stability of the government and also the policy of the government matter.
Okay. And do you think what is feasible for India, considering that the nominal GDP has been on a decline since FY22? So where do you see the nominal GDP going in the next couple of years?
I strongly believe once the fund flows come in, because all of the factors are strong, all of the factors have really been the strength of India. So your macroeconomic is, 2 days ago we had this news report saying foreign exchange reserves have touched and crossed 700 billion.
Yes.
So you have every indicator doing well. So what is that one thing which can make a difference. That one factor which can make a difference, and this is common knowledge, is if there is more funds flowing into India, that itself will give us a big relief. And for that, those who went out also went out booking profits.
Right.
So India will have to draw a lot more funds for investments in India.
We'll come to fund flows in a little while. An interesting thing that I noticed, World of Statistics says that China contributes 26% of GDP growth in the world, global GDP growth. India contributes 17%. Right? So overall put together we are 43%. US has done a mere 9.9%. Elon Musk had an observation here. He said that the balance of power is shifting. Would you agree with that? And how soon can we close the gap with China?
It is the truth that China and India together contribute so much. That's a fact. For India to aspire to bridge the gap, yes, we have to work very hard. And there are sectors which will have to be given greater stimulus. Productivity gains will have to arise out of using technology. Our manpower should also get better deployed in the areas in which their skills lie. Yes, we have a lot of work to do, and we will have to do it. So, and that is where my trust and faith is, when the government is stable and when forward-looking policies are encouraged, we can still achieve it.
Stability has been your big message this time. You know, tax holiday for data centers has been a bold reform this time. What response do you expect from this? And would it also apply to Indian companies like TCS?
See, we are talking about global companies setting up GCCs.
Yes.
Global companies, if they are Indian in origin, will also have to have their profits and other things understood. Global profits made in India. And most of these global companies who are setting up business in India are already also paying tax. It's not as if they are not being covered by taxation for the earnings that they get from India. So if anyone who fits into this definition, not just this, you've very clearly defined it. So referring to that definition, whoever fits in will get it.
So an Indian company like TCS might fit into that.
A global company.
A global company like TCS would fit in. You know, the one thing that you did this time, which you know, has become a subject of conversation, the markets also reacted, was increasing STT in the derivatives segment. And I've heard the comments by your secretaries who say that it was to curb rampant speculation. You know, could it have been done differently, by managing margins or contract sizes? And was it a prudent thing to do at a time when the global sentiment is the way it is and the markets are also on a weak footing? How do you react to this?
There are many observations that you're making on which opinions can differ.
Yes.
There are people who within India comment saying India's markets are overpriced. I'm not even getting into that debate.
Sure.
The Revenue Secretary made it absolutely clear. It is not for revenue considerations that we've done this.
Yes.
It's not on all STTs.
Yes.
We are only touching on futures and options.
Yes.
Cash is not even touched.
No.
So it is the speculative tendencies. And in fact, the Ministry of Finance has received several parents, elders who call us and say, are you going to sit and watch people lose money? And one of the studies showed that 90% of people who've gone into futures and options have lost money.
Yes.
Of course, the market regulator will also do his or her bit. The institution will do its bit. So we've only tried bringing in a deterrent where speculation is rife. We are not touching the market. Other STTs are not being touched.
No, thank you for that clarification. Let me ask you a slightly directional question. Whether it is long-term capital gains or short-term capital gains, in the last few years they have only inched up. When, most of the other taxes have really gone down. So how do you, I'm asking you from a broader perspective, as the finance minister, how do you see this pan out over the years?
I don't agree with you when you say it's inched up. Yes, It has gone up or it is rationalized so that all asset classes can be treated equally.
Right.
And that's the logic and reasoning behind that particular rate change.
Right.
It wasn't done with an intent of earning out of it. But the disparity and the differential couldn't be sustained. So we had to rationalize it. And in fact, after that, we even gave that option to say, you choose which one you want to have.
Right.
I remember standing up during the government amendments time, the finance bill passing time. We brought in that flexibility to the people who felt that they were, shortchanged. So that was rationalization. That wasn't for kicking up the rates.
So you think that the current rates are comfortable and...
The stable approach towards tax incidence or keeping tax incidence stable has always guided us.
RBI has reduced benchmark repo rates by about 125 basis points since 2025. But the 10-year bond yields has increased, which means high borrowing costs. How do we tackle this? How do we reduce the cost of borrowing?
I think we are very conscious that yields are going up. Again, without shifting the blame or the responsibility, it is dependent on so many different factors. Yes, crowding in is one of the things on which the market gets heated up and yields can go up. But it's a fact that given the levels of developmental activities which all of us want to ramp up, both central government and state governments, going to the market is one way of raising your fund. But the yields going up also pushes back, and therefore people who want to look at better timing go back without raising the funds. So there is this concern, and that itself could be a deterrent for many states because they cannot afford it.
Yes.
So it's a very evolving situation. We'll have to see how it goes.
Okay. Finance Minister, your party has always stood for a strong rupee. But if you look at the Indian rupee in the last 1 year, it's been on a losing streak. It's almost lost 10% against the dollar, around 16% against the euro. Are you comfortable with this level of the rupee, and are you happy with the steps that the RBI is taking to maintain it?
Let's understand one thing. Our party, yes, was in favor of and is in favor of always a strong rupee, no doubt. But it's also got to be predicated in the context of how the economy is. Economy suffering from high inflation, economy being fragile, and your rupee value also not in a good position, makes it really hard and difficult for everybody. But one thing I can clearly say is economy is fine and fit.
Yes.
Your macroeconomic fundamentals are strong. And that's not to say, look, therefore are you being indifferent to rupee-dollar exchange rate? I'm not indifferent. But I'll also look at it from the realistic challenges that we have to understand where rupee is finding itself now. Reserve Bank is closely monitoring.
So you are saying that you are comfortable with this situation at the moment?
I'm leaving it there. I don't think I will say I'm comfortable, not comfortable. I'll leave it there.
Okay. India's holding of US Treasury bonds have declined about 25% compared to the peak of 2023. At the same time, Reserve Bank of India has increased its holdings on gold. Do you see this trend continuing?
I think many central banks, not just Reserve Bank of India, are pitching to buy more gold, and India seems to be following the trend.
Okay. Gold is up by about 80%, silver by 250%. How do you see this in the last 1 year, this phenomenon?
The uncertainties in the world are making people to fall back on, let's say, time-proven asset, which is gold. And that's bound to be because it is beyond anyone's fair assessment to see where things will move, and therefore the demand for gold.
Okay. That brings me to the next point, which was also discussed a lot this budget. Capital gains on sovereign gold bonds purchased in the secondary market. Market participants feel this is some kind of a retrospective tax.